you got a cold in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. We made it to Friday. How do you feel about that?
Woo!
Yeah, what did they call the party last night? Was it a Christmas party, holiday party, company party? What'd they call it?
I call it the COVID party because it's the party that we were supposed to have during COVID, and we've stretched it out until this year. So it's the
winter
COVID party.
Winter party. My producer James is calling me. Good one.
Yes.
Yeah.
How was it?
It was fun. It was good. I mean,
I want the gossip. I want the tea. I want the drama. I want to know like who was seen with who.
I mean, we had the whole crew, which was just fantastic. I mean, Vecchio, we had Ilya there, Jim, Jamal. I mean, it was.
Oh my God, that sounds like a party.
Frankie. It was amazing. Yeah, that's exactly. I mean, like it's the hottest crew.
I like how you list Jamal as a remote employee.
No, I meant just like all the, everybody that's on the show, Mikey, Katie. It was the whole gang. It was fun. It was fun.
Did you get home at a reasonable hour?
I did. But I was gonna say there's nothing better than playing Time Crisis for like 3 hours. That was what I was doing. It was great.
What do you mean by
remember Time Crisis? It's the one with you have the gun and you like have the pedal, like the pedal that makes you like duck. It's like one of the games. You don't remember Time Crisis?
No. Should I be? Did I play it?
Yeah. Once upon a time, we would play this together. You'd go to an AMC movie theater. It was like the only game there. It was like Time Crisis and Buck Hunter.
I remember Buck Hunter.
Those
for
were
sure.
the two games.
Okay. I know the time. Is that the one you shoot like zombies and stuff like that?
No. I forget what the name of that one. This one, like, it's you have a pet. There's a pedal and you have the gun, and the pedal bounces you between cover and no cover. So
I remember.
You bounce back and forth real quick, and like shoot real quick, back. You could switch, shotgun, machine gun. It's just a fantastic game.
This whole story is causing me a time crisis.
I'm sorry. I thought he was going to be excited about that. I'm sure my peeps in the YouTube chat are going to know. But it gives me the visceral, like, I get transported back to, like, 13-year-old Nick at the mall, with his boys, hollering at the other 13-year-old ladies, going over to the AMC movie theater. Maybe you're going to a movie. Maybe you're just going to play Time Crisis for 4 straight hours with your boys. It's just a classic. You go to the little convenience shop that sells you lighters and like little butterfly knives, and you go into, the back alley of the movie theater. You mess around there. Just a visceral feeling. Fantastic.
I'm being sent pictures now by our producer. Yeah, I know. I remember it now. I didn't. I thought
if you saw it, you would know.
Yeah.
You would remember.
Yeah, Vanetta, if you saw it, you would know.
I don't know. You didn't play old school like skee ball or air hockey.
What about SS Tricky?
No, SS Tricky. That was N64.
I'm sorry.
That was too late.
Too late. I thought I was dating myself.
No, you got to think about like the arcade games. Skee ball a little bit. There was some foosball being played. You got to be careful though with like some of the old time traders. They they'll kind of game you a little bit. They'll tell you, oh yeah, you want to play like foosball? Haven't played this in a while, and you get on the foosball table and they're like, spinning things, and they're going
like
nuts.
Ninjas.
It's like, they're like,
oh, you got hustled.
Pretty much a hustling by the old time traders in some foosball. Yeah.
And they gotta puff their feathers somehow, right? I mean, they gotta make it a little bit better. Yeah. That's awesome. But
it was good. It was good. You both were missed.
Well, I mean, somebody had to be prepared for the show, but Ed and I want to make sure that we were going to do it. I mean, if we had to do it without you, we would do it without you, but we knew we were going to be here.
Thanks, Boomer. That couldn't turn on the camera. We had a huge tech malfunction here. It was the on button on the camera.
Hey, never go against the family here, son. Never go against the family. Remember that.
All right.
But I'm
Wait,
glad.
was there food? Was there food at the party, or just everyone just got wasted?
There was food. I didn't have any of it. I ate a Tilly's bagel that I brought home. So I ate that, which is Tilly's is great, by the way. Those bagels are great. Did you have any of those bagels, Vanetta?
I did not. I had already eaten my breakfast when
her allotment.
Not
when I
enough
got off the
protein
show.
there.
Yeah,
I feel that. It was a good bagel. So that's
they
what
smelled good. They looked good.
Mm-hmm.
I had one. They were very good. Did Frankie bring them in?
Yeah, Frankie ordered them in, but they do some funky like flavors. You can get like a cacio e pepe bagel. They got like all sorts of funky stuff there. It's good.
Are you a bagel purist, or do you? Because I like I'll give me a cinnamon blueberry crunch bagel, like yum 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 yum.
So you probably like the Panera one, the Panera.
Yes.
With like the crunch in the middle.
Yes, but yeah, old schoolers like Tom and Bat, they hate you know Franken bagels.
yeah. I agree.
Well, they just kind of hate everything. They're a little crotchety.
that is true. But a cacio e pepe bagel, that sounds good.
I know.
It's peppery.
Yeah, it's peppery, and they have all sorts of like, you can do like the classic, bacon, egg, and cheese. They have one with chorizo and a hash brown patty, which is great. You can put that on the bagel with like whatever cream cheese you want. And they have all sorts of funky cream cheeses, like a sun-dried tomato cream cheese. You can put it on there. Delightful.
I thought you were on a new fitness journey, Nikki.
Next year. That'll be my New Year's resolution, 2026.
He's going to start it in February.
Yeah. Soon.
February's right here. I mean, it's the 30th. It's going to be the 31st.
Yeah.
30 days has September, April, June, and November. Yeah, it'll be 31st tomorrow.
Yeah.
What's your over/under on everyone being able to fly back home today?
I didn't look outside. Has it snowed?
We're under a winter storm watch, so
oh no.
Yeah.
But it hasn't snowed, right?
It's going to, unless their flight was at 6 a.m.
Right.
But I don't know why they would schedule that, knowing that they were going to party.
They're young. That's why they can do this. They don't have any problem with that.
It's okay. I mean, Vecchio was like a kid in the candy shop. If he gets stranded here for an extra day, I think he'd be ecstatic.
I hope his wife is not watching at home with their two small children.
Well, no, he did it right. He came for one day, he flies out the next day. Ilya was here for a week. I was like, Ilya, how did you pull this off, brother? I mean, like a full week away from the wife and kids. What did you have to do for this?
That's so true. That's so true. That was beyond even a bat move. I couldn't have done that. There's no way could have done that.
Did dudes hate their family so much they'd spend a week in frozen Chicago over being in California? Good Lord.
Yeah, you're right about that. You're so right.
It's not like our office is in Miami. That I like doing Jamal. That I get. But coming here for a week, this week where we didn't get above 0.
There's been a Vecchio sighting at the hotel. He's a little he's a little peaked, as we would say. That's correct. He was ready to mingle. He's a little peaked. He did good. Everybody said he did good.
That's too funny. So what did you do with your free time in the evening, Bat?
We're doing, we have a project, my other son, Vinny, and I, now that he's 16 and driving, and he didn't.
Your other son, you don't straight up talk about him for 15 minutes every day.
Thank you, Vanetta. Thank you.
We're looking at mods and stuff for his car.
It's so sad to see. People ask me, a lot of people ask me, what was your dad like when he was a trader? I was like, oh my God, you wouldn't believe it. He was.
Well, what do you tell him? I'm curious to hear.
No, I say, he was, rough and tough. Skinny, buff. good-looking young guy, alpha male, and now he's,
Oh, football coach, basketball coach,
basketball coach. Yeah.
home at 4 o'clock, much to your mother's chagrin. I mean, I was around all the time.
And now he's a softie. He's just money bags. He's just freaking money bags. That's what he is now.
I'm just trying to, get by. I'm just trying to live a little longer. I'm trying not to get as aggravated as much. That's all.
Yeah. He went from Playboy to, domesticated.
To Play-Doh.
Yeah, to Play-Doh. Yeah, it's good. Yeah.
That's pretty good. You should make that a shirt, from Playboy to Play-Doh.
Thank you.
Yeah.
Thank you.
Yeah.
Thank you very much. Appreciate that.
So what kind of mods are we looking at here?
Oh my God!
You got to get the muffler.
Yes, well, that's going to take a lot of A's and.
Oh, I figured that'd be on the way already.
No,
that's not on the way already.
No.
Oh.
No, I mean that's something I probably can't do. So that's got to be said. He wants to do it's a Ford Explorer. It is what it is. You know what I mean? It's not. It's not a race car. You know what I mean? So
it's a cop car.
Yeah. It's a cop car. So he would like to kind of murder it out a little bit, make it look a lot copish. You know what I mean? Like he wants to get rims.
Yeah.
He got some lights for the inside of it. It almost looks like Cash Cab now. You know what I mean?
That's what I told him. I was like, dude, you can't get the LED lights in the inside. You're going to look like Cash Cab. It's going to be like, you get the music that goes on when you come in the car. Come on, man.
Yeah.
I will, if you want, I can drop the Amazon link, but I have the push to start button in my car. It has diamonds around it. It's all
No. He would like to put some carbon fiber on it. Yes, that's right. He wants to murder it out, get rid of the chrome that's in there.
What about like a fuzzy steering wheel and the fuzzy dice? Would he like those?
No, he hasn't done the fuzzy. He can't put the fuzzy dice on there unless he attaches it to the radar detector, because he wants to get a radar detector. I said, well, the best way of not getting a speeding ticket is you don't speed. That's the. So
did you take him out in the snow though? I told you got to take him out in the snow. You took him out.
I did. He did okay. Right. He just has to learn who has the right of way. Like he's a little entitled.
Oh, it's the Vinny world.
Yes. He's a little entitled. Like, pedestrians with babies. No pun intended. I mean, it's the truth. He thought he should be able to turn into the crosswalk kind of thing. It's like the unwritten rules. It's kind of like the parking lot. You know what I mean? Like there's no. Like everybody knows if you're pulling into or out of a spot, the people that are driving have the right of way. You're pulling out into the driving. Like, he saw me. He saw you and he thought you were going to stop because you saw him. He saw you. I mean, everybody has that anticipation or that expectation of what they're going to do. So
will I be able to text you in the spring if I want to go for a motorcycle ride? Because I love riding up on the North Shore. Can you just keep them inside for me so I can stay alive?
Sure. You've got a couple more days. I think it's the February 4th or February 6th.
Well, no, I can't ride until the spring. Like there's snow and salt everywhere. I'm not riding right now. So.
I was more warning everybody else.
Oh yeah, that's true. That's true.
That might be close. February 4th to February 6th, you got to watch real careful. Then he gets to go out on his own, which he's extremely excited for.
So good.
Shenanigans around. Hey, something else we are excited for. Kaner. Patrick Kane set a new record in the NHL. He's become the first U.S.-born, not the first, but the highest point scorer for a U.S.-born hockey player. I think 1,375 points. Someone can check my math. But congratulations. The Blackhawks' first draft pick, #1 pick, and leading the Hawks to 3 Stanley Cups. Pretty nice dynasty there. Good job, Kaner.
Yeah, good.
Amazing job out of Unk, because he's my age.
He's 37. You're the same age.
Yeah. No. I'm 35, okay? I'm younger, okay?
Okay.
But we are Unk together.
Yeah.
It's okay.
Yeah. It was a wonderful wonderful, great night for him. And the whole, every fan is congratulating him. It's really, really pretty cool. Really pretty cool.
Yeah, a lot of respect across the league. So
did you? It's not sad, but I mean, it's funny that did you see a goal I've never seen scored before? I wish I had the video of it. A player was just taking it and kind of clearing it down the ice. So he was almost on the blue line for his own team, and he shot the puck to just go around. Like sometimes they just dump it and it goes around the glass kind of thing. Well, it hit the photographer's circle that they have like a cutout in the glass, and it made a complete right turn and went right behind the goalie and in the net. I've never seen it before in my entire life. It was just unbelievable. It has to be.
Wait, is that a point? They scored a goal?
Oh yeah.
That's bonkers.
It has to be the craziest goal I've ever seen scored. I mean, it's just it defies physics. It really does. I mean, it's really kind of crazy.
Well, because I built my algorithm brick by brick, the only hockey videos I see are just thirst traps of them doing those stretches. And I love that for me.
Do you like the man fishbowl?
The boy aquarium, man.
The boy aquarium.
It's boy aquarium.
Now he's starting to sound like a boomer, isn't he?
The boy aquarium.
I love the boy aquarium. I've never been, but I want to go to the boy aquarium. But I need
never been to
go
a
with.
hockey game?
I've never been to a hockey game.
Yeah.
Oh man.
Yeah.
You gotta go.
She wasn't allowed.
It is fun. Hockey games are good.
I know. Yeah. When do they kiss?
She's watching that. What's that show? What was it?
Heated Rivalry.
Yeah, Heated Rivalry.
It's the best.
My wife just walked in and said Heated Rivalry.
Hi, Chrissy.
Yeah, that's exactly what it's like. It's just in real life. It's wild.
Right. It's great. It's great. You're gonna love it.
I'm so excited. Anyway, I hope you guys are excited. We have a wonderful show for you on this fantastic Friday here on a Tasty Live. Just jam-packed, if I can. There it is. There's my schedule. Headed your way today. We're gonna do a little confirm and send at 7:45. Of course, you know that and you love that. But it's also hashtag Fan Friday, so that means fast market at 8:40. Viewer submitted trades. What a wonky, wacky day in the markets it was yesterday. We'll talk about that. But hopefully they came up with some good trade ideas. It seems like everything is in the middle of an earnings cycle, but maybe they found some diamonds in the rough. And then 9 o'clock, we have a market measures. How far out to win when you're wrong? 0 DTEs. That's a mouthful. What does that mean, Nikki?
I think it's actually a different one. When are the profits? I don't know. It could be different, but the one that I'm looking at, it's a look at 0-day trades and like just kind of giving you an idea of the P&L distribution throughout the session. So it'll kind of quantify what time of the day is, the spot where you're probably close to X amount of profit. And if you're not, it's, it gives you an idea of like when that might happen.
Okay.
It's a cool one. It's an interesting one.
Then we have live from the trade desk. We have Quentin. He was strutting around the office wearing his championship belt yesterday, and that was even before the party. So I hope someone check on him. Is he okay?
I was talking to one of the new guys on the Risk team, and Quentin walked by with that belt on. And he was like, the guy was like, "What is that?" And I was like, oh, he's the office champion. Like he's the office star.
I mean, it is kind of like a lift belt that I assume that he would wear if he's doing, like power lifts, but it's a championship belt and says Tasty Trade. It's actually kind of cool. I want one. But he's going to be in. Hopefully he's okay this morning. And that is our run of show for you today on this fantastic Friday. But in the meantime, in between time, do you guys want your daily dose?
Sure.
Hit me with my theme music. Let's go.
Our leading story, breaking news,
across
the wire, leading story, top story, just in.
Today's headlines.
This just in.
Breaking news.
All right, everybody. everybody. Today's a fantastic Friday. It's January the 30th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
Good news, kind of. It looks like we're hopefully gonna avoid a government shutdown. Because I see all the headlines, but then I start to read the details, and I was like, this is not as clear cut as it seems. But it does seem that Democrats struck a deal with the White House to avert an extended government shutdown. If the government shuts down, it's because the new version of the bill has to go back to the House. The House isn't in session, so if anything does shut down, it would just be like federal offices over the weekend, and they're probably not open anyway. So then the House is going to come back in session like next week, and then hopefully we get another 2 weeks to sort of reconfigure what we're going to vote on to fund certain government agencies. And so, but it seems for now we're going to avoid a government shutdown.
Yeah, they basically kicked the can down the road, right?
Yeah.
It seemed like there's a lot of things going on there. But
and there's a lot that has to happen that I don't think it's going to happen. I don't know, but okay.
Okay, that's interesting. I mean, maybe that's part of the little mini sell-off we have today is the uncertainty of that. Who knows?
Well, one thing is not uncertain. I am sad to announce that Kid Rock will not be our new Fed chair. I was really hoping for a wild card pick from Trump. I was like, please make it Kid Rock. But no, Kevin Warsh. He was the chalk on Polymarket and Kalshi. He's served on the Fed board before. He used to be kind of hawkish, so it's kind of interesting to see, but I guess he's changed his tone. But anyway, President Trump this morning tweeted out on Truth Social that Kevin Warsh would be the pick for the new Fed chair. Of course, bringing into light the independence of the Fed moving forward. But Trump picked Jerome Powell, and look how that's working out for him. So people forget that. So that was his nominee. So
yeah, for sure.
I've gone down this rabbit hole with Vecchio because he's much more knowledgeable, and Ilya as well, on this whole situation. And he was telling me about how, although this could be Trump's pick, because there's a lawsuit going on, Jay Powell could stay on, and he
could stay on through 2028.
It seems like there's a little bit of uncertainty here,
not in the bond market, right? I mean, the bonds are sitting at 114.27, just under, I guess, around 115 and change, which would be the mid price for that. Now, you mentioned hawkish. For those who don't know, hawkish stance with bonds generally means that they prefer higher rates to control inflation. So Trump has been looking for lower interest rates. And
right. I'm saying he was previously hawkish, but
right.
Right.
Yes. Sure.
Yes. Yeah, we're on the same page. Yeah.
I was just trying to clarify it for anybody at home who might not know.
Something maybe you guys could shed some light on. What the heck was going on in metals yesterday? Gold, silver, even copper. Copper hit a new high yesterday, but there were such massive swings, such massive volatility. I think it's continuing this morning. Just break down what's going on.
It's continuing in a big way. I'll start with gold. Gold under 5,000 for a moment this morning. It's 5,050 right now. That's almost 5.5–6% move in gold. Even on the upside, when gold was going higher, was going up by 3%, 2%. This is a huge move lower after a big move yesterday in gold. This is lower than yesterday's low, significantly lower than yesterday's low by about $500 or $600. I mean, this is a big move lower by 5 or 6%. A big move lower in gold. Silver's doing the same. Silver traded all the way up to 118, which is close to its highs that it made just 24 or 48 hours ago, and now it's making new lows for the week or more. And I'm talking about a 5 trading day calendar week. 95 on the low, trading 98 now. The gold silver ratio that was trading around 45, 46 got up to around 51.5, almost 52. It's trading at 51 now. So that ratio that hasn't had much movement to it to the upside just rallied about $5,000, $4,000 to $5,000. So
crazy massive move.
Massive moves in metals. The metals have taken the metals are the market right now. The equity market has taken a back seat to that, even with a 100-point move lower yesterday on the market. Metals.
But like, what is causing this? Is this profit taking? Is this a gamma squeeze?
This is called unwind.
Is this Saturn being in the fifth house? Like what?
Yeah. I got
retrograde.
Yeah. Right. We're all Scorpios now. This is the unwind. I in kind of fortuitous good timing. I mentioned it about 2 days ago. I think I said the unwind in gold and metals is going to be something of like biblical proportions. That's going to be, when that happens, there's going to be no stopping. And it looks like that's what you have right now.
Yeah, it's probably a lot of leverage. A lot of, I mean, maybe it's some profit taking too, and it's an unwind. Exactly as you said. I mean, you don't typically see metals move 100% in like days. Nope. It's just it's wild. It's a wild move.
What is your advice to people who just got into trading metals and have never seen moves like this before?
Well, it's interesting that you say that, because gold markets got quite wide, silver markets got quite wide too, wider than the public was used to, even those that were trading them. So you got to be careful with your pricing. I would probably say to a new trader, this is not the place right now for you. Now, if you want to be so you want to be long gold and you wanted to sell some out of the money puts in that 15 to 30 delta range, staying small, one contract put spread or something like that, sure, go right ahead. Be careful with your mid prices. Walk the order down or up depending on what you're doing. That's fine. But to try to scalp around it's not for the faint of heart. Not probably for the new trader right now. Go to the equities. That's where all the stability is.
The U.S. government is considering selecting fintech firm Robinhood to help oversee Trump accounts that it plans to open for millions of children. The news sent shares of Hood up in after-hours trading. Nothing has been confirmed either by Hood or the Trump administration, but the news, rumor, whatever, came out last night. So let's talk about it.
I don't know if it's sent the shares anywhere, because it's sitting 101. Looks like it's basically unchanged.
I saw him go up a little. I saw him go up.
It rallied in the after hours session. It was up like $3 or $4. You're right, Vanessa.
Yeah, right. I mean, it's not now. I mean, it's up 50 cents.
Yeah. I mean,
50 cents on its most recent lows. As a matter of fact, lows it hasn't seen since September of last year. So Robinhood's lost a little bit of its luster. I'm actually short some puts in Robinhood.
Yeah.
Have you funded Vinny's Trump account?
He doesn't get one. It's only the
my kids under 18. Like you may not be available for the bigger part of the bonus, but any kid under 18 can make this tax deferred account. Of course, there's other tax deferred accounts, but he can open one.
Oh, I thought it was only kids born this year. So I thought my
no. So there's two like prongs to it. So like if your kid is born like this year, then I think you get like $2,500. But any kid under the age of 18, so that if you work for JP Morgan Chase and they're funding accounts, so that's not just for babies. That's for employees who have children under the age of 18.
Oh, awesome!
Got it. Interesting. That's good. Yeah.
There you go. Yeah. You're welcome. Hey, in other news, the CFTC is going to craft new prediction market rules. The main derivatives regulator is going to write new rules for the multi-billion prediction market industry. The head of the CFTC said yesterday, it's time for clear rules and a clear understanding that the CFTC supports lawful innovation in these markets.
Okay.
I mean,
what?
They'll end up overdoing.
I'm crafting new house rules too here, okay? That are going to take effect sometime soon too.
I'm scalping out of half my NASDAQ and E-minis position here. With the market down like 37, 38. I think this is probably good. I mean, I got 21-year-old kids at the DePaul Finance Club taking spreads on the next day's weather. So I think there's room for, like they're playing market maker on tomorrow's weather. I think there's room for some guardrails here.
Yeah, just a little, just a scotch.
It was amazing talking to them, and they're so smart, and they're all like quants and top of their class. But they're out here market making on weather, and just these are $100,000 markets, and they're putting $1,000 in, and they're just taking whatever bet
bid-ask spread is.
Yeah, whatever bet comes through, because the bid-ask spread is like 4 or 5 cents wide, and the volume is $100, $500. Like nobody's actually trading these because it's just so random. But
right.
They're making $20, $30 on their $1,000 bet because they're just spreading it off. It's hilarious. So
the U.S. Senate Agriculture Committee voted along party lines to advance its version of a cryptocurrency market structure bill that would create CFTC regulatory authority over digital commodities. It would be a major development for digital asset regulation. The Digital Commodity Intermediaries Act advanced on a party line vote yesterday. Let's talk crypto to end the week. What's it doing?
Trump needs to do something. The Senate needs to do something, because this is the only thing that doesn't go up every day.
Yeah, or up or down, or have two-sided action. Even the S&Ps go up, gold goes up, silver goes up, nat gas goes up. Bitcoin just doesn't do anything. Bitcoin traded flirted with 81,000. It's sitting at around 83,000 right now. Remember, it was 95 a week ago. Bitcoin is your most depressed asset of 2026 this year. Yeah. So they got to do something. All this good news or all this news is having no effect, which kind of tells me that they're not anywhere near. It's not going to be anywhere near as what everybody thought. If they're near passing this. It's held up. Like, it keeps going just back and forth. Yeah, that's why Bitcoin hasn't rallied. It's so predictive. It's unbelievable. It's so good. Anyway, I just think all of Bitcoin's volatility. Do I think what? All of Bitcoin's volatility got shoved into the metals.
Everything volatility, Venata. You're totally correct. It's like it has taken the air out of everything. The moving metals. It feels like there is no other market but what's happening.
Yep.
I mean, could you just imagine, though, in the Olympics that are going to take place in a few short weeks here, that like you're standing on the podium and the value of your medal just fluctuates?
Seriously, the gold medal has gone up at least 100% since the last time.
Yeah, it's pretty good. What's Coinbase doing?
I don't think the Olympic gold medal has a lot of gold in it.
Yeah, didn't you cover this one time, Veneta? Like it's like hollowed out or something, or like only
it's pretty solid. We'll get some fact checking.
It's not solid gold, but it's like hollow. Yeah, I mean it's 90% silver, which is just as valuable, and plated with pure gold. So
yeah, there you go. Yeah, so it's real. It's real.
Yeah, it's silver, which is now no longer a $30 an ounce product. I mean, it's under 100 right now, which is something I didn't think we were going to see this week.
To answer your question, Veneta, Coinbase below 200.
Thank
Big
you.
sell-off.
Yeah, Coinbase, MS MicroStrategies, another one, $140 down around 2.5 or $3. MSTR is anemic too.
Let's get to the big name earnings from last night. Apple reported fiscal first quarter earnings that surpassed expectations, with revenue soaring 16% on an annual basis due to staggering iPhone demand. They reported $42 billion in net income versus $36.33. Apple saw particularly strong results in China, including Taiwan and Hong Kong. And then the stock just went nowhere.
Yeah, I think somebody asked me what I thought Apple was going to do for its earnings. Did you ask me that, Nick? I don't remember. I think I have it in a text message.
When have I ever asked you for a stock tip? My God.
No, you liar, you liar, you
Kidding?
liar. I said Apple's going to be basically unchanged or down $2, and it's sitting right there, basically unchanged, down 50 cents.
Yeah.
Apple,
Good for premium sellers.
Yeah.
Good trade.
Yep.
Yeah.
SanDisk, the storage makers, Q3 revenue guidance was almost 60% higher than Wall Street's consensus, and the profit guidance was more than double what analysts had expected. That thereby justifies the stock's 1,400% surge. They said they expect fiscal third quarter revenue to come in between 4.4 billion and 4.8. Again, that is 60% higher than the 2.9 that everybody thought was going to come in, just blowing off the doors.
Unbelievable.
Up $125 this morning.
Yeah.
Good Lord.
The SanDisk, this $60 billion company, just increased their. I mean, this is a huge move, 20% move by $10 billion or more. I don't know. I mean, just doing market cap here, extrapolating out. Unbelievable move. I mean, it was up
all these memory stocks, STK.
Yeah.
Western Digital is in that bucket. They had earnings after the close yesterday.
I got that next. Yeah.
Yeah, it's crazy. These things are just going bananas.
I mean, I need to buy a new SanDisk storage, but I also need to make my mortgage payment.
Yeah, I think there's a quote that it's like more valuable than gold by weight. The storage devices.
I know. Like, how much you want to give me for one of these bad boys?
Oh man, you rich? Damn.
Yeah. I'll make it rain. I'll make it rain. But speaking in that theme, yes, Western Digital reported their results yesterday, and it reflected the company's strong performance as they. The results came in for Western Digital. They declared a new cash dividend for the company, and they expect revenue growth to continue to go higher. Earnings per share, they expect revenues of $3.2 billion and earnings per share of $2.30, which is higher than analyst estimates.
Yeah, WDC hasn't had a downtick in all of, probably pretty much from 2024 on. Remember a year ago, this stock was hanging out in the 60-70 handle. Now it's 293, up around $15, making new highs, as you would say, Vanetta.
New.
That's bonkers. Visa beats first quarter estimates as holiday sales boosted payment volumes. Visa exceeded estimates for their first quarter profit as they were buoyed by increased card usage. You're welcome. I don't know if you were trading Visa at all, but
we had some long delta there, but it's a call diagonal spread. It's kind of surprising because MasterCard was up like $20 or so after their earnings the other day. So you didn't get a sympathy move here.
I guess the real dominant player in that space is AXP, if you look at American Express.
Yeah, Visa's down $1 or $2, going sideways to nowhere. American Express is trading around $3.53. It happens to be down on the offer, down around $5 or $6 this morning. So American Express catching up to Visa on the downside.
Amazon could invest up to $50 billion in OpenAI in coming weeks. That's the news story that came out. OpenAI CEO Sam Altman and Amazon CEO Andy Jassy have been engaging in discussions directly. Amazon set to report their earnings next week. What are you doing in Amazon?
I don't know why they would do this. I mean, look at Microsoft. Microsoft was down like $60 the other day, and it was a lot to do with their spending related to OpenAI. I don't know why is Amazon trying to get in there?
No one learns their lesson, Nikki.
Yeah, I guess when you got so much cash, you got to put it somewhere. So I guess
you do. Microsoft up $3 this morning, but you are right. Amazon down about $3 this morning. Last I looked, 38, maybe $2, $2.50. Yes.
OpenAI is reportedly eyeing an IPO by year's end. They want to just basically beat Anthropic. So they are trying to do an IPO probably in Q4, according to sources familiar with the matter. But that brings me in line with SpaceX, because SpaceX is shooting for a July IPO. I'm going to the next story here, because SpaceX wanted to beat OpenAI. OpenAI wants to beat Anthropic. Anthropic wants to beat Databricks. Now I don't even know, but like it was like let's be so for real. But SpaceX is in merger talks with XAI. So the companies sometimes fund each other, but they're exploring deals with other companies. Top of line being XAI.
Yeah, it's interesting, and it makes sense that they want to be the first because you want that liquidity. I mean, you want to be the first one out there so that you're not like, competing liquidity wise with all the other massive IPOs that come out. So I do think the first one to come out is going to have the best, at least start to their.
Sure. Like we're looking at $2.5 trillion of potential like IPO. Like that's just, my mind cannot fathom those numbers.
Yeah.
You're not alone fathoming those numbers, Vanetta, believe me.
Crazy.
What's Tesla doing? Because you can't trade XAI or SpaceX yet.
Yeah, Tesla's been hanging out at around 415-ish yesterday, 4 in the teens, over 420 right now. It's up around $5, but it too is at the low end of its range. Remember, just about 2 weeks ago, you're looking at flirting with 500. So, or maybe more like a month ago, flirting with 500. 420, 422 right now, up around $5, $4 or $5.
Software stocks suffered a steep sell-off yesterday, widening the gap with hot chip stocks. Well, I love a hot chip. But Microsoft wiped so much money off of its market cap. I forget how many hundreds of billions of dollars. I don't know. But it was the worst day for Microsoft in a very long time. But also ServiceNow not doing so great yesterday either. What are your thoughts on this?
Oof. It was kind of an interesting, one up, one down yesterday. You had Meta just through the roof, and then Microsoft, kind of in the dumps. It was
all for earnings, yeah.
Yeah, those are two huge moves, both of them. But they basically offset each other.
They did, but Microsoft, I mean, listen, it wasn't, it seemed like just yesterday Microsoft was $100 higher. And as you said, I mean, Microsoft is a $3.5 trillion company. You lose $100 is a big market cap move, as you just mentioned.
Yeah, it lost $357 billion in market cap, and it's plunged the most since 2020. There you go.
That's like an Anthropic.
Yeah,
they lost an Anthropic overnight.
Yeah.
That's wow.
Crazy.
Now I got a little long delta in Microsoft, but we'll see. Yeah.
A Waymo driverless vehicle struck a child near an elementary school in Santa Monica. Oh my God, Google. The company voluntarily reported the incident to federal auto safety regulators on the same day, and the National Highway Traffic Safety Administration is now investigating. In a separate incident in LA, a Zeekr vehicle operated in manual mode by a human sped through a one-way residential street near Dodger Stadium. The self-driving cars are running amok. What are you doing in Google?
Good thing it wasn't Vinny. Waymo admitted it. Perfect.
Google 335 down around $3, but just off of highs in Google. Google looks just the exact opposite of Microsoft in a big way.
Yeah.
Hey, maybe you might not even need a Trump account for your kid if they're smart enough, because Yale is offering free tuition if your family makes less than $200,000. Pretty good. For years, it seemed that a household income of $100,000 would qualify a family as solidly middle class, but inflation said, "Here, hold my beer." So Yale's recent announcement of free tuition for a threshold of below $200,000 is how much has the math changed for the middle class?
Still got to get into Yale.
Yeah, right. Yeah. Yes.
But yeah, it is an interesting mark I mean, I think that's a good call out that's essentially middle class if you're, considering this an indicator.
Damn, Nick, you better sign up for welfare or something like that.
I'm looking at pennies in my little change jar, see if I have any extra copper, maybe a couple silver quarters in there. 1964, I think, is what was it, like 60% silver,
right.
70%? Yeah, I think it was something like that. So I'm gonna go check, see if I got a couple in there.
I mean, all the kid can afford to eat is soup.
Seriously, one kid's got is supercharging his new Dodge or Ford Explorer. One kid's eating soup.
Yeah, and by the way, I had soup last night. Navy bean, excellent.
The parent company of Saks off 5th and Last Call, that's Saks Fifth Avenue, will close most locations to focus on its luxury retail stores after filing for bankruptcy this month. Saks Global announced they will shutter almost 60 of its off 5th locations. No!
Oh, no.
No, that makes me sad. But Saks Fifth Avenue, Neiman Marcus, and Bergdorf Goodman are together in a luxury death spiral.
Damn.
Yeah. Not needless market. That at least had still had guests in it. Saks Fifth Avenue and the rest of them. Ugh.
Hey, here's something interesting. If you're going to be snowed in this weekend, like we are here, Grubhub is trying to gain back market share, and they're eliminating fees and delivery charges on large orders. So that's orders over $50 because they want to compete with DoorDash and Uber Eats. One time controlling 10% of the delivery market, they have now fallen to around, I believe, 3%. DoorDash holds a dominant 71% market share in the food delivery sector.
Wow. I'm not a big delivery food guy. I'm a make my own soup guy.
Yeah, and so my wife will tell me, and maybe you guys can help me, oh, it's free delivery on this because I signed up for this app and then I'm going to cancel it, blah, blah, blah. They got to be dinging you on the price of the product too, right? I mean, it has to be.
Of course.
It is. I did the math once, and I went to pick up my food for myself, and I saved $30.
Yeah, that's it.
And that's for one person. It wasn't like even extravagant, but yeah. I picked it up myself, and I was like, oh, that. But when it's cold and you don't want to put a bra on.
Yes, totally. I feel you, Vanetta.
Can you put a price on that?
No.
Yeah.
Yeah. Anyway, but Grub, I don't know if you could trade Grub, but you could trade DoorDash, Uber.
I actually haven't looked at Grub in quite some time.
Or did it get taken private?
I think I don't see it listed. I remember it did trade for a little while.
Yeah, I don't think it does anymore to be.
Yeah, I think it got taken private, but Dash still trades in Uber.
Yeah, Uber's been a dog. Dash is kind of on the lower end of where it's been trading as well, but Uber, no love for the Uber, trading at 81 here. I mean, this is basically like a low since kind of April of last year.
Yeah, and DoorDash is doing the same lows it really hasn't seen since May. I know it was a little bit lower in November, but in November and then May of last year. So both are on their butts. DoorDash, hard to tell where it's trading right now. It looks like it's down maybe $2 or so, maybe a little bit more.
And my peeps, Vanetta, if you have a change jar as well, they're telling me that it's about $19 for a 1964 quarter in terms of the silver, the silver contents in there. So check your change drawer. Maybe we can save up for our Yale tuition.
Nikki, we're millennials. We don't have change drawers. I wave my phone at everything.
That's true. That's true.
Where am I getting change from?
Yeah,
I actually do have like a plastic bag that probably has like $5 of change in it, but I've had it for the last like 10 years.
Yeah, same.
It's the pseudo change drawer. The change drawer or the change jar was a classic. You take that. It was a
classic.
I still got one sitting at the front door. Does that date me?
Oh yeah. It's going to cost you more in fees to exchange it than it is that it's worth.
Now, if you remember, around like Christmas time or Thanksgiving, we would auction off the change jar. It was kind of a big glass water container, and it'd be filled to the brim, and I would have all my kids, give their guess on where it would, how much it would be, and however much whoever was closest when I brought it into the bank, they would get to keep it.
Oh, that's fun.
Yeah, that was our year-end kind of little bump or something like that, maybe around Thanksgiving or something like that. This SOB right here, that's right, that guy on the screen with me, he Googled how much, he weighed it, and then he Googled random, how many dimes, quarters, nickels. He came to within like...
That's smart. Work smarter, not harder.
Listen, I'm a resourceful guy. I mean, I got $1 to make there. I'm going to use whatever resources I can find.
Would you come within $20 of it or something like that?
Something like that.
It was pretty close. It was pretty good because he had to figure out how much the glass weighed. He didn't know how much the glass weighed. Other company would have been spot on. It was amazing how accurate it was.
That's pretty good. Hey, this story, I instantly texted my dad. This mandates an instant dad text. A company called Megalodome Golf is building a $50 million indoor golf course in Oswego, Illinois.
Yes. Yes.
The proposed site is designed to recreate the look and feel and smell of Scottsdale, Arizona.
Yes.
It's still in the financing phase. If you want to get in on the ground floor, it's a targeted opening fall of 2027. It's a climate controlled golf complex.
I feel like it's never going to happen, but
it's a 9-hole par 3, all indoors, all climate. The renderings look amazing.
It looks amazing. I feel like this is a stretch, but I really hope. I'm rooting for this. I'm rooting.
I'm rooting for him too, but it's a stretch.
Okay, well,
it doesn't seem possible.
I don't know how, but I'm for it. I vote yes.
I vote yes too. Yes.
It seems all 11 experts are picking for ESPN are picking the Seahawks over the Pats.
Oh,
so
I don't like that.
What do we take away from that? I know that is the chalk. Also, in other news, Bill Belichick and Jordan Hudson reportedly have broken up after he did not get into the Hall of Fame, and I'm just delighted by the whole thing.
Who would have guessed that wouldn't last? Who would have guessed that?
But I was hoping, like, he was double dating with Tom Brady and Alex Earl, and I was like, that's interesting.
He really had a glow up. My God.
I mean, but you can't take that man to cheerleading competitions on the weekend.
So good.
Good.
Yeah, I like the Seahawks here, but I don't know.
What's the line, son?
It was at it's been bouncing around. I took it at 3.5. I can give you what it's at now. But it's somewhere around there.
Super Bowls can be blowouts, right? I mean, sometimes they get them.
It's at 4.5 now.
Huh.
So right there.
4.5 point spread doesn't seem like a crowded boat trade. You know what I mean? Like 2.5 in the playoffs. I mean,
yeah, right there.
Two best teams allegedly. I don't know. 4.5 doesn't seem like it should be something like 60, 65, 35 or 60, 40.
It's split on the money line. Most people taking the Seahawks on the spread.
Interesting. Cool.
See what happens. Well, hey, if you are going to be snowed in this weekend, I might have the perfect treat for you every Friday. I like to do a little video I like to call Trader Taste Test and see if you could make this viral Costco chicken hack. Watch this.
Okay.
Let's make the Costco chicken chili noodles. Shred a whole chicken and return it to the bag. Melt butter with sesame oil and green onions. Then add it to your chicken with mayo, soy sauce, chili paste, chili oil, brown sugar, and green onion greens. Then mix in your favorite noodles. Bon appetit. Let's make the Costco chicken chili noodles.
I think that's the most impressive.
Look at Pat's face.
The chop is probably the most impressive part. You got to have a real sharp knife and a little good hand-eye coordination there. That's
can we go back to that one more time? I'm a little.
What's wrong with it?
I think Vinny would like
Shred
this.
a whole chicken and return it to the bag. Melt butter with sesame oil and green onions. Then add it to your chicken with mayo, soy sauce, chili paste, chili oil, brown sugar, and green onion greens. Then mix in your favorite noodles. Bon appetit. Let's make
It's you don't like that? Just chicken,
No,
chicken noodles.
maybe it's the bag that's got me. Can't I just use my own Ziploc? I mean, that's probably, yeah,
Good or a
That's fine.
bowl. Yeah.
yeah, yeah.
A crotchety response from you. Very on brand.
I try not to disappoint, Nikki. Thank you so much. Vanetta, you didn't disappoint. You never disappoint. We're going to take a quick 90-second break and come back. We're going to talk about this market because what a market we have, and we've got confirm and send too. We'll be back in 90 seconds with Tasty Live.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Nikki, we are back, son, and you know what that means. Time for a little bit of confirm and send on this January 30th, the end of the month, and let's see how this market is going to be. Even the S&Ps, wild ride yesterday, down over 100 handles when we were getting off the show, promptly started to rally back all day long, got over 7,000 for a moment yesterday. They're 69.95 on the high today, 69.58 where they are right now, down 35. They've had a 80 handle move last night alone. NASDAQ down 170 and change, over 26,000 again. Almost 25.6 on the low. They're 25.8 right now. Middle of the range for most of the market. Your Russell is the weakest of the group. There you go, son. You've been trying to get short. Russell is the weakest of the group. You've got it today, down over 1%. Everything else down 0.5%. Russell down 30 handles. Dow down 270. And volatility up 30 cents. Trading, flirting with 20 last night, and to trade up to 20, and yesterday 19.10 right now, up 30 cents. Bonds, with all the Fed talk, down 18, 114.21. Bonds go lower. Interest rates typically go higher. Notes not having quite the move that bonds are having, but you can see they're on the low end of their range. Bitcoin, you dead product, you down $1,500. Traded up to almost 85, down to 81, sitting at just about 83, down 1,500. As we mentioned earlier this morning, markets go higher or lower, equity markets go higher or lower, Bitcoin doesn't move. Metals go higher or lower, metals don't move, nothing matters to Bitcoin. It's just been dead. Oil, 65 and change, a good range last night in oil too. You're looking at almost a $2 range, a little over $2 range in oil. It's unchanged at 65.50. Volatilities everywhere have expanded. Gold, well, we got to talk about that. Gold below yesterday's spike low in gold. If you were looking at gold here, you can see how it rallied all the way back to be over almost 5,500, back down under 5,000. That's as low as it's been, taken out the last week or so. Volatility at 114, I'm sure, will even grow as the option markets open. And equally, if not great, it's a 5% move in gold. Equally, if not greater, by a magnitude of 3 times, is silver under 100, flirted with 120.
Unbelievable.
Unbelievable is right. You're talking about, let's see, that's, what is that, a $23,000 move in forwards in the small future.
Yeah, that's 230 grand in the big one. Or it's
5 times.
the small one's 1/5.
Right, 1/5.
That'll be
100,000.
Yeah.
Yes, unbelievable move in silver on a notional value, under 100 at 98 and change, got down to 95,000. Net gas up 12 cents. That's your leader in the clubhouse besides volatility right now, or besides really volatility right now. Up 3%, 12 cents. Big move in nat gas, back over $4. Apple, you would think with this movement in the market, everywhere else would be a lot weaker than it is. It's sitting basically unchanged, wrapped around $1 move one way or the other. Apple is going to be a good premium selling, was a good premium selling play. But really, this market is twofold. It's almost like we trade the equity markets all the time, and if gold or silver percolates, maybe you kind of go into there. I think the amount of volume that we've had, markets can get wide in gold and silver, even in CLD and SLV. So again, you're going to trade it. Watch your pricing. Mid price is not indicative of where you're going to get trade. Put it in at your price. And watch the product itself, how it moves, and then move your price up or down accordingly.
Yeah, and to go back to gold and silver, I've had a number of emails and tweets. My calls are $30 in the money. I'm getting my face ripped off. But
not anymore.
Spreads. Well, you're getting a huge move today, and volatility is still very, very high. So you should expect, some big two-sided swings. But if you've been if you've taken the pain and you've held and you've added into this sort of trade, don't get piggy with this trade. Take the money and run, reduce the size.
And then reallocate the money. You could do it in the same place. Like, if you've been short calls and those calls were, so deep in the money, or you had a strangle. I had an email yesterday where in silver, he had something like the 6110 or something like that, or 71 to now you've got a chance to do something, right? It's trading at $90. It closed at 105. It's down $15. Roll to the next month if you want to. You know what I mean? Do something that's strategic in nature, I guess is what
I have that like ratio spread in GLD that's wrapped around 450. I mean, GLD's down at 465. It's not like I'm
down $30.
But I'm not going to be profitable on that trade. But that trade is going to come in, $2,000-$3,000 relative to what it was trading for yesterday. And you're going to look at positions and you're going to be like, oh, well, I'm not at a profit or a scratch here. You got to kind of take the context of what's happening here and, pat yourself on the back that you were small enough to hold the position and figure out where you're going to go moving forward. Take that position, roll it out to March, reduce the size if you went too big, close other stuff. Like you can't sit here and just like look at the, I got to make money on this trade.
That's right.
If you survive 100% move, face ripper against you, that's a win. Like these are going to happen, and it's not going to be the last time.
That is correct. Good job out of you, son.
Cool.
All right, let's get going here.
Yeah,
Confirm and send.
Yeah. After watching a number of the Rising Star videos, I noticed that many of them say that they are good with numbers and math. Do you have to be very good with math to be successful option trader, or is this just an overthinking? What do you think?
I think with the amount of technology you have at your fingertips, you don't even. I mean, if you know what, if you can do simple math, you'll be fine. And by simple math, I mean really simple math. You don't have to know anything else, trigonometry or anything else like that. Back in the day, you had to know some fractions, which were fundamental enough. Now, the computer does it all for you.
Yeah, I think that's a good way to.
I mean, if you know what a standard deviation is, an expected move, I mean, these are just common sense things, right? I mean, they're not. Once you've been told, you know, you have all the knowledge that you need. You don't. You don't have to price an option anymore like we had to do, back in the 80s to figure out what the Black-Scholes model was. It's all done for you. Now, you can also look at numbers by seeing what IV rank is, and then you'll know that, okay, you don't know the math behind it, but those prices are inflated relative to their normal movement in those products. So I don't think you need anything, personally.
I agree with that. I mean, I think the understanding of risk is about as important as anything else.
Yep. Totally agree.
Well said.
Next one, please. If you were talking to a new trader, what 3 stocks would you suggest trading and why?
That's a good one. I think it's going back to kind of my meeting with the young minds at DePaul. I think liquidity is the king, obviously. Like, a lot of people ask me, okay, if I want to start trading options, do you go for like low price stocks because, there's only so much risk there? Do you go, like, where do you go? And I think, liquidity is always king. Look for an Apple, a Microsoft, a Tesla, an Nvidia, something like that. If you want to go into like, the Robinhoods, the iBits, if you're interested in Bitcoin, the Intels,
iBit's good. I mean, I was thinking.
I'm just going into the realm of just liquidity and lower price stuff. Roblox, Palantir, Oracle. I mean, I'm just naming stuff that I have positions on. SPY, Qs, IWM, Visa. Even it's not that liquid, but going to something that has a ton of liquidity would be the first spot. So I think the easiest answer is, the top 10 stocks in the world, go trade them. But then if as long as it's a liquid market, it doesn't really matter. I think.
Yeah, right. As long as it's a liquid market, it doesn't matter. If it's something you're interested in, it's good. I would throw in the ETFs also, like SPY or Qs, IWM, if you want to too. I would throw those in there. I think if there was like 3 stocks, like you just said, I would probably throw one ETF, probably SPY would go to first. You can go to the NASDAQ if you're more tech inclined there too. And then, like you said, the Apples of the world, the Mag 7 stocks, maybe some of the other stocks that have implied volatility. Yep.
Yeah.
Totally agree. It's going to be a changing list. You did mention lower price stocks. I wouldn't. That's something I like. Sometimes it's the things you do. Sometimes it's the things you don't do. I would probably try to stay away from the lower price stocks. They just don't. Those $30-ish stocks, unless you have an opinion on them directionally, they don't give you much bang for your buck. They usually have low implied volatility because they don't have a big expected move. I mean, a 10% expected move on a $30 stock is $3, top to bottom, and you don't catch the top, you don't catch the bottom. It's almost like watching paint dry. So I would go to the strategy in these larger stocks that have good markets, liquidity king, like you said, over a smaller price stock.
Yeah, I mean, you can. Put spread, you can put a couple $100 of risk on. Like, it doesn't matter if it's a $500 stock or a $50 stock.
That's correct. Beautiful. Next one, please.
What drives the VIX slash volatility? I know there are multiple ways to measure volatility, which is the most important to you. So I think this is in reference to like the VIX one day, the VIX itself, volatility futures, volatility in a specific underlying, like the, of itself, IVR, like what do you first part, what drives VIX, and then like, what's your kind of your
Sure.
volatility metric?
So I don't know if this is going to be a great answer. Maybe you'll do a better job. So you, the player, the market, the liquidity provider, the retail investor, we all drive volatility. Now, the back end of that is when we're more aggressive for pricing, meaning we're willing to pay more for calls and puts, volatility is going to expand in those options. So we drive volatility. When we don't have an appetite for, or we do have an appetite for risk and we don't want to pay as much for those options, and those options get less, the more offers, volatility goes down. That's just how volatility works. That's it in a nutshell.
Yeah, well said. I mean, and
/ VX is where volatility VIX is going to expire each month. But what moves it intraday is the propensity for risk and risk taking.
Yeah, the VIX itself is 30-day implied volatility on SPX. It's very simple to understand. Each underlying is going to have its own implied volatility, which is something that I focus most on. I mean, you look at market volatility, but you have to understand that each stock is going to have a different volatility, and it's going to be influenced by different things. You could have binary events. You could have, just general unknowns that pop up with volatility. I mean, like that's what it is. So I think it's important to understand implied volatility per underlying, and also just as the market as a whole, because they're going to move in tandem. Today volatility's up. You're probably going to see, Microsoft volatility be higher. Like that's just like it's kind of all in the same basket.
Very good. Next one, please. What factors do you take into account when scalping? You've been doing a lot of scalping lately, so this is something I think you'll be able to answer quite nicely. Is it mostly just price movement, or I think it's supposed to be do you have specific things you look at, you look for, like one being down versus up, or volatility, or volume itself, or anything like that?
Yeah, I think for me, it's I do it off of general, just like market awareness and price action. I feel like it's I'm trading what I'm seeing, and that is no better than a 50-50 shot. Let's be completely clear. I mean, for the most part, it's a 50-50 shot. I think the more important part about scalping is that it's not like my core thing. Like it's an engagement thing. I'm trading the markets as I'm seeing it day to day. Sometimes I make a little money. Sometimes I lose a little money. It's a fraction of what my portfolio is doing on a day-to-day basis. And that's for me. There might be people that this is their bread and butter and they scalp all day long. And that's, that's where they make their money. But for me, it's more of an engagement thing. So, I look at just like what's happening in the market, individual stocks, overall volatility. Do I think volatility is low? Do I think volatility is high? In something like a silver, I've been trading just kind of the price action and the volatility that's been there. In the equities, I've felt like kind of bearish on equities here. They've been kind of weak. I've thought volatility has been low. That's just been my opinion on volatility. And so it overall is market awareness, it's opinion, and it's still a 50-50 shot. But the key is that, for me at least, it's a small part of my trading. Like it's not something that like I'm hyper focused on. I kind of make my bed and I sleep in it.
Yeah, I think for us, I know other people are allegedly a lot more sophisticated. Possibly they look at capitulation of price and VWAP and other type of things. I mean, for us, it's really just price. I mean, you're trading a product all day long. You watch how it moves, and you're trying to make an intraday scalp, right? I mean, some people scalping for them is more of a macro view, like they'll take a longer term view of it. For us, it's just a daily movement. If you've got volatility percolating, you're going to have a much wider range on the futures, going back to what price is volatility. So if the volatility is going to have a wider range, it's more opportunity to scalp in between that wider range. So that's what we do.
Yeah.
Next one, please. Why don't you read one?
Why does mainstream financial media quote the Dow Jones Industrial Index? I never hear you guys talk about it.
I mentioned the Dow in the four that I talk about, even the S&Ps, NASDAQ, Russell, and Dow in that order. I bring the Dow last because it is least important. It's because mainstream media has been around for a long time and they just never evolved. The Dow Jones, the Dow 30 used to be the index. There wasn't even an index. It was just the Dow 30. It was the 30 most capitalized stocks weighted by industry. I mean, it's not the S&P 500. We've grown to so much more. I mean, when I first started trading, what was the Dow? I mean, the S&P 500 was under 1,000, so the Dow is significantly less than that. You know, the markets have gotten so big and so complex now, and so complex in an easy way. The S&P SPY is the S&P 500, 500 stocks versus 30 stocks. NASDAQ 2,000 stocks versus 500. Really, what you're looking at here is the S&P 500. That's what every fund manager bases themselves off of. They don't base themselves off of the Dow. Now, they all do move pretty much in tandem. They're all kind of doing they're all in each other. I mean, the 30 are in the 500, which are in the 1,000, basically. So they all move in tandem. But the real reason why do they mention this is because they have never evolved.
Yeah, and I think just now markets are a lot more liquid in the NASDAQ and the E-minis specifically, just because of the way the world has gone, right? So like the Dow was traditionally, you had a lot of like healthcare, you had a lot of oil stocks. Like it was more of a, it was different industries at that point in time. And so, now when you talk about like the biggest stocks in the world are all tech stocks. And so, that's how I view the market. I mean, and so I
totally agree.
The NASDAQ and the E-mini is just way more liquid.
That's right. That's right. All right, next one, please. Oh, last one. When choosing a portfolio beta-weighted delta, I've heard tastylive speak about saying neutral or equivalent to 0.1% of the portfolio. So for a $20,000 account, would you at most lean plus minus 20 in either direction? I believe they're talking about delta.
Delta, yeah.
What determines how much you lean?
Yeah, I mean, I think this is a good metric. When you're in a smaller size account, it's very hard to 20 deltas in either direction is very small. And it's very hard to hold that or put that on even without having, an outsized position be your directional assumption. You put on a call diagonal spread and you'll have 20 deltas, but it will use $500 in buying power. Yeah. So it's not, it's hard to kind of quantify this. I think understanding delta and understanding what is too big. Like if you told me I have 1,000 deltas in a $20,000 account, I would say you're probably too heavy. And that's going to depend on like what sort of trade it is. Are we talking about 0-day SPX calls? Are we talking about call diagonals, 60 days out in time, 60-30? Are we talking about put spreads? Are we talking about naked puts? Like the deltas are different. They're not exactly equal across the strategy that you're using. So I think, hyper focusing on 20 deltas, and if it goes to 19, you're looking to get one delta, like it's going to drive you insane, and it's going to be too hard for you to do. I think just understanding delta and knowing, 100, 200 deltas is probably on the higher end of where you should be. but hyper focusing on being like exactly 20 or exactly 30 or whatever your metric is could be very hard for you.
Yeah, totally agree with you. I would add that this is just guidelines for you.
Yeah.
And then if you're more bullish or you're more bearish, you take a directional risk. We would have no problem with that. I have to add one more thing before we take a quick break here. I didn't mention for you, son. You finally got the dollar catching a little bit of a bid here. You've got
Wow.
Euro down around 385 ticks. You got the pound down also. You also have /6J down too, which is nice. So you've got all of the currencies that you've been looking at moving in your direction finally. Maybe that's what's hurting gold and silver too.
Mm-hmm. Unfortunately, I'm long the dollar at much higher values. So although this is nice to see, it does not give me my money back.
Hey, don't shoot the messenger. I'm trying to do.
I know.
I'm trying to support you.
I appreciate it.
Let's take a quick look at the market before we take a break. Even the S&P has been kind of holding steady, down 29. NASDAQ down 170. Russell down 28. They're all up a little bit from the last time I mentioned them. Dow, there you go, down 180. Volatility hasn't moved at 1905, up 26 cents. Bigger move last night in all of these products than right now. Bonds are still down 12. They haven't moved that much. Bitcoin's moved $200 to the positive side, still down $1,200. Over 83.2. It was under 83,000 a moment ago. Ethereum down $67 on a percentage basis. That's a bigger move than Bitcoin. Oil steady from the last time I quoted it, up 22. Gold down 255, although that's higher than where I quoted it earlier. It's about $130-ish off of its lows, about $300 and almost $400 off of its highs. That's the big move in gold. Silver down 15, almost $16 to just under 99. Got down to 95. Got up to 118. Not for the faint of heart. We're going to take a quick 90-second break and come back. We got more Tasty Live coming up next with the opening bell, the moment we've all been waiting for. We'll be back in 90 seconds. Tasty Live.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Okay, cowboy, here's an earnings event. Keep an eye out for them when you open your trade. They're fast, they're loose, and they can take you for a wild ride. But that's no reason to steer clear, because you can be your own personal earnings event if you take the bull by the horns. What makes earnings events so special? Before the event, people will start guessing how the stock will move once the earnings report is released. That, in turn, makes the options IV rank higher. Like way, way higher. The nearer the event, the more the speculation, the higher the IV rank. Then right after the event, IVR goes the way of the buffalo. If you sell high premium options right before the event, when IVR is really high, you can take advantage of inflated prices and lock your profits when volatility disappears. Only if, and this is a big if, the stock doesn't move against you. If it does, well, sometimes you eat the bear and sometimes the bear eats you. Earnings events can hit you hard. They can also pay off big and fast if you play your cards right. Pretty simple.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Niggy, we are back, son, and you know what that means. Time for a little bit more Tasty Live. That's right, my friend, with the opening bell is imminent.
My friend. Ooh.
Are you ready for this?
Ooh, no, you called me friend, not son. It took me aback for a second. I didn't know we were, that's
what the relationship has evolved to.
Yeah, are you disowning me or something here? Ooh.
No.
Oh,
Never,
okay.
Never.
That was just like kind of a slip of the tongue.
Yeah, I had somebody tell me that they disowned their father, and I tried to explain to them that you can't disown your father. Like your father can disown you, but you can't disown your father. And he really couldn't get around it. And I also told him what an idiot he was. You don't have to be best friends, but whatever. I mean, but you can't disown me. I buy you. You don't buy me.
Yeah.
Yeah. Before he gets shot in the eye in The Goodfella, in Godfather. Anyway.
Oh my God.
Even the S&P is down 29. Nasdaq, Russell with a 1% move. Nasdaq with a 0.5% move, down 175. Really going to take a back seat today for those who are gold traders, because the market looks pretty complacent. Market had a big sell-off yesterday. Rallied
all the way back. We were back at 7,000 by the end of the day. I was going to ask you what you thought of that freaking move. I mean, I had the ick all morning, and we traded good.
And down near the lows, you were a lot more ickish than I was. And when we rallied 50 handles, you were getting real ickish.
Yeah.
You're back to where we were. I know you covered some already.
I just covered some of the Russell too.
Yeah, I didn't like the sale. I didn't like the buy of volatility at 1960. I thought the sale was better than the buy. I thought your buy of volatility under
at 1830,
1850 there. I thought you were going to get more bang for your buck in that at that point than the market being shorted, which I think worked out nicely for you. But I didn't like the extra buy at 1960. I don't know, volatility now, let's watch it percolate a little bit more. At 1908, the market's telling you we're just rotating around a little bit, doing the same BS that we've been doing for quite some time. The metals and the dollar is telling you a little bit of a different story here. There's a lot of volatility in there and a lot of two-sided action in that. Now we're down near the lows.
Yeah. No, it was I was shocked at the reversal, which I shouldn't be shocked because it's been that way every single time we've ever gone down. It's been basically a one-day reversal. So, but I still got the ick a little bit. I still got
69.60 on the E-mini S&P.
I know, but you got to start somewhere.
No, I totally agree with you. Yeah, you could still sell them, is what I'm trying to say. We haven't gone anywhere to the downside in the equity markets.
Yeah,
in the metals, you can say that maybe it's a two-sided trade, or you're going to start playing the directional bias one way or the other. There, you've had some movement. 15% move in silver, 5% move in gold on a daily basis is huge.
Yeah, if we get a rally today, I will definitely sell into them.
The market,
Going into the weekend, you're going to have volatility percolate. You got Iran on deck. You got government shutdown. You got, Fed chair. You got all the news cycle. I feel like you got to have a little short delta into
And that's why volatility in all of these products will be higher. And now it depends on what do you want to do with them, right?
Yeah, and I'm interested to see where the volatility is in the metals on this open, because it's going to be it's going to be a wild one.
Oh, it's going to be in the stratosphere. There's no doubt about it.
You think so? Like, is it going to stay that way?
Do I think gold volatility is going to be in the stratosphere? It'll be. I don't think IV rank will go under 100 today, which means that volatility in GLD and SLV, SLV IV rank right now is 126. I don't think it'll get under 100 today. In GLD with wide markets, ladies and gentlemen, it's 113. I don't think it'll get under 100, in my opinion.
Yeah.
So it'll be as elevated as it's been forever. Is my point. Yeah. That's what I'm thinking. What do we
got?
So far, no dings anywhere is what we have.
I mean, we got a little bit of a rally here.
A little bit of a rally. That is correct.
Do I sell into it already?
You can try. I mean, the S&P's down 21.
We had him for a second.
We did have him for a second. We had him for a second.
I'm gonna look at some of my. So I have all those silver calls that I sold yesterday, which are going to be good today. But it's no short SIL contract that I did have. I wish I held that one for an extra little bit.
Sure. I wish I held it for a little extra bit too.
Yeah, but these calls, these went from $4 or $5 to $1. I mean, this is and it's wild because the puts. So let's look at these February puts here, and those are just silver calls.
Yeah.
I mean, the 90 strike puts where I have like a butterfly right around 90. The 90 puts into a $15 down moved $3. The calls on the upside, which were the 125 strike calls, which were 30-ish dollars out of the money, moved $4.
Right.
So your puts that are at the money, if you just sold that strangle, if you sold the 90 125 strangle, which was like $15 out of the money on silver, $15 out of the money on the put side, and $20 out of the money on the call side, if you sold that strangle, you made money with your put being tested today.
Right. Wild, right?
That is just insane volatility.
It is insane volatility, no doubt about it.
And I'm going to deal with this. I talked about this, and I got a couple emails about this called ratio that I had that I sold puts into. I mean, this thing, it's not profitable, but it came in. This was at 5,500 yesterday. It's at 36, 37.
Unbelievable.
You gotta take some chips off the table. So I'm gonna.
You would think so, right?
Well, I'm gonna close this and I'm gonna roll to a March strangle. That it's not gonna be a $36 strangle, but it's gonna be still short some volatility with just a lot less risk.
Yeah, that's really what you're looking to do here, right? Is just kind of reduce the risk that you would have.
Yeah, and these spreads, you got to be. I mean, even in GLD, they're
GLD is horrible. I mean, right now at least, markets are $1, $2 wide. Right?
Yeah. So I'm gonna just do like a delta neutral 20-ish delta strangle here in March.
Okie dokie.
So I'm taking off some of the short delta and just rolling into.
You're allowed.
Yeah. And I think we're gonna lay into some E-minis.
ESP's down 12.
So we're gonna add to the E-minis, add to the NASDAQ. I mean, I don't like this because now volatility is basically back, but I
1883 on volatility, right?
Apple's down a ton. Amazon, I mean, everything's down right now. So
Apple is down $4 and change. You are correct. Let's see what else is moving this market here. To the downside, you got gold down $26, about $5 off of its lows. Silver down $14, about $3 off of its lows. Meta, which was the big winner yesterday, down $14. AMD down 11. IBM was down 7. Google is down. Carvana is down another $4. Let's see what's moving to the upside here. SanDisk up 112. There's your leader in the clubhouse. Tesla up 9. AVGO up 4. Microsoft up 3. Mixed bag of tricks here across the board.
Yeah. And you had that wide butter. Did you do a ratio or a butterfly on the upside?
In what?
In GLD.
In GLD.
I don't know. We're
all over the place.
We're a little all over the place.
Yeah.
So I'm just kind of taking off some of the February calls, short calls. I mean,
Sure.
like,
Yeah. I had a 1x2 in there.
Yeah.
Probably got mixed in it probably got squashed in the mix. You took it off.
Yeah.
Though. Yep.
Yeah.
Yeah, you got a nice P&L in GLD.
Yeah.
And you got a nice P&L in silver.
Yeah, you can say that again.
Got a nice P&L in silver. You got a nice P&L
there you go.
in gold. How'd I do?
Yeah, that's good. That's good.
All right, beautiful, beautiful. Good market here across the board.
Yeah, some two-sided action. This is nice.
Yes, definitely some two-sided action here in all of these products.
Yeah.
All right, what do you think here, son?
Okay. Microsoft bouncing a little bit. Did we get one? Maybe we put on like a little diagonal spread in Microsoft here.
Okay, we could.
Well, long delta. I have short delta everywhere, so
okay.
I don't mind buying a small dip here.
Okay. I don't mind doing the same.
There we go. I did a little call diagonal spread. March, Feb.
Okay.
Up at like 450-ish in Microsoft.
All right. I like it.
Okay.
I like it. I'm a little bit of fast market here myself, so give me some time.
There you go. You do your thing.
Okay.
Team game.
17. What do you think about here? I mean, I think you got to be a little bit short. Although volatility is really
it cannot catch it. The perpetual buying of the dip. There's no volatility. You do not get these volatility expansions. It's really incredible.
No, you do not.
It's incredible.
It really isn't. It really is incredible. Crazy moves here.
Yeah. I mean, I don't know. The volatility in gold and silver you would think would spill over into equities, but it just most certainly does not.
It most certainly has not. All right, my friend. All right, let's take a quick break. You want to?
Sure.
I'm gonna take a quick break. We'll get all of these trades put into the bats here so that everybody can see them. We'll take a quick 90-second break. We're gonna come back with fast market. We're gonna be looking at more of your trades. That's what we're gonna want to do here. So thank you for participating. We'll be back in 90 seconds. It's kind of a wildish, quiet market, right?
Yes, it's the quietest wild market I've ever seen. Which gives me the
Yep, totally agree with you. All right, let's take a quick 90-second break and come back. We got more Tasty Live after this.
Having trouble understanding what your trader buddies are saying? Here's what a scalp is. We love those quick profits. A scalp is a trade opened and then closed in a short period of time, usually minutes or hours. A scalp is usually done for a small profit and is typically a very directional position. Scalps are most commonly done with future products because of the liquidity and added leverage they provide. But you gotta be careful, it's not always a profit.
world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
In road trips, my family, it was like whoever could get the captain seat was it.
That's great. I'm having a great time.
Me too. But, I mean, stay a while. Take your jacket off.
No, I mean, I'll stay, but the jacket's not
Come
coming
on,
off.
take your jacket off.
Nope.
Come on,
No.
take it out.
I'm sorry. I didn't mean to.
No, I'm sorry.
You hopped on this cowboy's horse, so I guess you got to hear his tale. In '87, I took it off. There was the market crash. In '92, NBC canceled Blossom. A couple of years ago, I lost it for 2 days, and the Lakers won the NBA Finals. Bottom line is when this thing comes off, bad things happen.
You've got to take it off sometimes. I mean,
Never do.
how do you shower?
The jacket's kind of gotten used to it. In fact, every few days it needs it.
No matter what, you keep it on.
I can take my shirt off if you want, but I'm not taking the jacket off.
I just don't know if that's something that I could deal with.
It'll be like a teal tornado. Just endlessly washing up on your shore.
I mean,
This is moving so fast, and I like it.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
Nikki, we are back, son. And you know what that means? Time for a little bit more Tasty Live with Fast Market.
Fast Market.
Beautiful.
It is a fast market, that's for sure.
It most definitely is a fast market. You have
I sold some more.
Okay, that's what it is. I thought it was my ding that.
No, you didn't get
your ding.
You can do that now.
Yeah. Have a bad silver position on that I'm going to look to close. Figure out all of the nuances of it. If it's small loss or a smaller loss or a bigger.
Yeah, it's certainly not a profitable position.
It is not a profit position, but a $15 move has got to help that position. Just close it all now.
Yeah, so take that and now do like a 20 delta strangle. You know, like in March, you basically go to a less volatile position. You got the same money.
You're doing basically all out of the money options instead of having in the money options. You're taking advantage of the volatility in SLV, which by the way, at 93, I didn't think it would be that low on an IV rank in SLV. SLV markets are pretty good compared to gold markets. They're 100 times better. GLD markets are horrible.
Yeah.
Good work.
Crazy
markets indeed.
So I sold out more Russell, more NASDAQ. I think I'm going to take some of that off right here into this move too.
Sure, why not?
If I can.
That's me. That's you. There you go. All right, you're closing a small portion of your trade.
Yeah, 25%.
Okay.
I mean, I just took like 40 handles out of it.
Yeah, no, you had to. I like it. Good job out of you.
All right, and that's E-minis. So I'm pretty equally short across the board. But I'm taking some of it off the table.
I like it.
Let's do it.
Good job.
I'm shocked Vol is coming in.
I am shocked Vol's coming in too.
It's just
I really am.
crazy. Okay, let's do a fast market. Do some trade ideas.
Let's go.
Was that another ding I heard out of you?
I'm dinging all over the place, my son.
Yeah.
Yep.
Big ding energy.
Big ding energy. Big ding energy is correct.
HPQ. Let's see what we're looking. Selling the 20 Delta March puts, collecting $1.80. Keep it simple. Paul, I cannot remember the last time I've traded HPQ, but it's roughly the same price that I remember at about $20.
You're right. You're right about that too.
What do you think about? I mean, it's at lows here. What do you think about doing like an at the money put, just like the 19 strike in March? We can wheel it as a long stock position if it goes down.
I like it. I like it.
Markets kind of stink here. I'm going to put this in at $1.50 and see if we get filled.
Kind of stink here. Yes, you are correct. So you got to put it at your price.
I put it in at $1.50. It's right at the money. If you hear a ding, I'll let you know that if that's it.
Beautiful.
Do I take another one of my E-minis off here?
I think you got them right where you wanted, man.
I think so too. All right. All right, HPQ. So we're working that order. I'll let you know if we get filled on that. Thank you, Paul. My man. All right, CL. Crude showing great IVR. It is 65 IV rank. We do have a little bit of short delta there. It's at 65.82. Jumped into a delta neutral iron condor, the March 55.58 put spread, the 80.83 call spread for a 98-cent credit, which is $980. 3-point wide is $3,000 of risk. Perfect when IV is elevated like this. Sam and Fargo. I like it. Let's see what we can do here.
Hey, if you like it, I like it.
You're looking March, okay?
Yeah, I think you have to.
Yeah, and these markets don't look great either.
No.
Or sorry, I went to the 31 day. Hold on. 46 day is better. Okay, so you're looking at the 58.55. So you're about a 20 delta on the downside. I'm gonna do this. I'm gonna do this a little tighter and do like the 58.56, $2 wide. So this should net out about 75-ish cents. And then you're doing the 80.83. So you got a lot of room on the upside. I guess there's a lot of skew here. I'm gonna move this to the 78.80.
Okay.
And do this at like 70 cents.
I don't
which is $700 in risk. With about $1,200 in, or I'm sorry, $700 in potential reward, $1,200 in risk. The same sort of 1/3 the width of the strikes as you were looking at.
Beautiful.
I'm going to try and work this. We'll try this at 71 cents and see where we get filled here.
All right. Try as you may.
All right. So I have that working.
Okay. We're in.
All right, next one, please.
Next one, please.
You want to take this? Do you want to take a look at this one? I'm trying to work these orders.
Sure. Unity got crushed, selling 35 puts across Feb and March, letting time work while it finds a floor. What do you think? Down $1.80, $36 stock. They are bullish. Stock is certainly down the last 5 days, fits that scenario. I don't trade a lot of it has earnings February 11th. I want to be in March options right now. They're good, not bad, not a lot of, you look at these puts, it's trade by appointment here. Selling 35 puts in February and March. So he wants to do kind of a laddered trade here. You look at March puts there, That's you in oil, right? You look at the.
What I just get filled on? I'm having a little internet issue.
You got filled in oil, iron condor. It looks like.
Okay. All right. So Unity, we're looking at the 35 puts.
Yes. I don't know if you. Not a lot of volume here. I would probably do March or February, but I wouldn't do both. You know what I mean? Like how big do you really want to be?
Let me see.
You know what I mean?
You want to do something like the 32 puts, 26 delta, 20-ish delta?
Sure.
Or you hate it?
You can. No, I don't mind it.
All right. We'll do it.
I don't mind it at all.
$1.85. We're in.
Okay. I like it. I like it.
Thought we had him, Bat.
I thought we had him too. I'm the one that told you not.
I thought we had him.
Not to do anything.
Yeah.
Right?
Okay, so we are working that HPQ. Did we get filled? We got filled on oil.
Yeah.
And then we got filled on Unity.
Yep.
Cool.
Yep. Okay. What now, brown cow?
Next one, please. AI. All right. AI is at an all-time low, buying it up cheap, then selling an at-the-money March covered call for income. Ooh, I don't like income. I don't like to get income.
You don't like the. You don't like the,
wait for the bounce.
You don't like the sound of an income trade?
No, I don't like that. AI. What's it trading at right now?
AI is trading at
like $11 and change here.
Yeah, $11.30.
I don't know.
Down $1.
I mean,
7% move. On top of
it's gone from like 14 to
yeah.
I don't know if I want to step in front of this trade, Dylan, and I certainly don't look at this stock as an income stock.
Yeah, me either. I agree with you.
So I'm gonna pass on that.
Okie dokie. I don't mind passing.
Cool.
Next one, SPX. Ooh
no.
Ooh no.
Spooky
is right.
Yeah.
I'm not looking to get spooked in this one. What about you?
What do you think of SPX here?
I'm not looking to do a neutral trade. I think with what we have here in volatility actually contracting, I think you have enough problems in the world than doing SPX at the moment. What do you think?
Yeah, I think I'm going to pass on the SPX. We got some short delta here. That's where I'm leaning for the day.
Yeah. There you go. Me too.
Cool.
Awesome. Next one, please.
Oh, IBIT. Oh no, Zach. I have all the bag I can hold. So thinking of Jade Lizard and IBIT, bullish long term but neutral near term. That slight positive delta fits well. I like it if you don't have something on and you're definitely getting a way better entry than I am.
Sure.
But I'm gonna have to abstain.
Yeah. I tend to agree.
Aww.
Next one, please. Microsoft, huge reversal. Near 420 support. Microsoft MSFT is 434, up $1. So I hope they did this yesterday. Going unbalanced iron condor, $30 wide. Microsoft IV rank of 26, good, not great. What do you think about this one?
So we just did the call diagonal spread there. So we bought the dip a little bit there.
Yeah.
So we've got some long delta. I kind of like where we're at. I don't know if we're going to add to it at this point.
Okie dokie. All right.
This is a failed fast market, guys.
Okie dokie.
I'm failing you.
You are failing, but that's okay. I'm failing myself. Don't worry about it. Oracle, what are you going to do here?
Oh, no. We've got all we can handle here, too. So we're short. the Oracle February 165 puts and the March 150 puts. So we have a laddered puts position in Oracle. We got some long delta here. We got Brad looking at catching its breath, doing the 150, 140 put spread for $2.80 credit. I like it if you didn't have a position on. I think it's an interesting one. You got a 60 IV rank, relatively high implied volatility, but again, I unfortunately have a little too much here, or I have as much as I could handle.
Look at these metals. GLD back down over 5%. Silver down around 13-14%. The gold silver ratio spread trading 50.5 where it was 51. You've got metals moving. You got the market real complacent. Although volatility did just uptick in the market 1880 as the NASDAQ. Russell was down the most. It still is. It's down under 1%. It was 1.5% earlier. So you got really kind of tale of two tapes here.
Yeah.
Next one, please.
Next one, please.
LRCX, still rich. After earnings, nearly neutral. Iron Condor, 410.20, 270, 280, LRCX.
So we're looking at I mean, we could do a strangle here.
Okay.
Or even I guess we could do the Iron Condor. So you're looking at the 220, 210, 270, 280.
Yeah. Yeah.
You're kind of tight on this Iron Condor.
Uh-huh.
So I'm going to move this. I don't know. I'm having all sorts of issues here
with the internet.
Yeah, yeah.
Okay.
So we'll do the 220, 195, the 280, 300. I guess we could do this 20 points wide. 220, 190, 280, 300. Is that what we're looking at?
They're looking at 270, 280. You want me to? I could put it through if you want.
20 points wide. Yes, that would be appreciated.
All right. So what the
210, 190 maybe, and then the 280, 300.
210, 190. Markets are going to be a little bit wide in here too.
Yeah, just like a 20-point wide Iron Condor. I think just widening out a little bit.
Yep. 210, 190. And you want to do, on the call side, you want to do, what, 310 you said? Markets are really wide in here, son.
Okay. Then let's pass. It's all good.
Like the 310 calls are 385, 565.
Yep.
You know, and the puts are $3, you know, $3. $2.50, $3.50. I mean, you can't do. I don't think today's the day for this.
Yeah,
in my opinion. All right,
next one, please. Or is that it? I don't know. I can't see anything.
Okay, FCX. You can't see anything. Do you want me to put on my screen?
No. What are we doing? FCX.
All right, so FCX don't want to fight the strong uptrend by going short, but happy selling the 60, 75 March strangle. I'll put it up there for you. 60, 75 March strangle. FCX is down $4. 60's right at the money. You've got an IV rank of 34 in here. If you're going to do something in here, you probably do the 55, 75. That would be, well, maybe more like the 55, 70 if you're trying to do something delta neutral in FCX. IV rank of 34. I don't mind that trade. It's got a little bit of short delta to it too, but I don't think it's I don't think it's that big. E-mini S&P's down 31. You just covered some of your E-mini S&Ps.
Yeah, I'm coming back a little bit.
Beautiful. Look at you.
I don't know if it's me or I don't know what.
MES, you're covering some of that too.
Yeah, I'm lining up. So I'm out of half. I'm out of half of the MES and the NASDAQ.
Got it. I'm going to put this in at 350 and see if we get filled.
Perfect. Let's take a little break so I can restart, try and get my bearings.
All right, let's do that. E-mini S&Ps, let's go over the market real quick here. E-mini S&Ps down 25, NASDAQ down 158, Russell down a full 1%, that's $30. Dow down 168, volatility up by 12 cents. The big mover here is gold down 5.5% to 5,050 something, and silver is actually catching a little bit of a bid. Gold getting weaker, silver catching a bit, down 14%, 13.5% is catching a bit. We'll take a quick 90-second break and come back. We got more Tasty Live after this with a market measure.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide. Trading is hard enough. Here's what liquidity is. You want to be like water. Liquidity is in reference to how easily you can get in and out of a position, from volume to open interest to actual price at which you can buy or sell your position. It's important for all traders, from stock traders to futures traders to options traders or even crypto. Tight bid-ask spreads and high volume are characteristics of good liquidity.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with Tasty Live to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's market measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Nicky, we are back, son, and you know what that means? Time for a little bit more Tasty Live. That's right. What's going on?
I'm selling them out again.
Even the S&P.
I'm back up to like 75% size-wise.
Even the S&P's back down 12. NASDAQ down 100. Russell down 23. Dow down 90. And volatility in by 15 cents, 1863. Gold still selling off, down almost 6% on gold. Silver still selling off, also down 13%.
They just smacked
the quality buying equities.
I think that's part of it. I mean, that was my original thesis, was that if you got to move out of gold and silver, it would go into equities. I thought it would be the big tech names, but it's not there. It's a weird one. I don't know. I don't know. I still get the ick. I still feel the ick.
You still get the ick. All right.
I'm just shocked at volatility. I mean, they took 30 ticks out of vol within the last second while we were on break, like in just an instant, and they rallied equities 20 on the E-minis themselves that rallied like 20 from the lows there. It's just a little, I don't know, ominous. I feel icky.
You feel icky. My sentiment exactly. I feel icky too, but you got to trade what's in front of you. But you're doing an excellent job here of hanging in there.
I try. I mean, doing my thing here. Doing my thing here, Pops. I'm trying.
I know that's all you can do is try.
Is gold or silver volatility coming in yet? Not really.
Doesn't look like it. It is under 100, which is interesting, but not yet. All right. You ready to go?
Sure. I want to.
Let's do it.
Do I take off more? I think I'm going to take off some more of these calls on gold.
Okie dokie.
Taking off a little bit of risk.
All right. You're allowed.
I got these downside butterflies too. I think I'm going to take, should I keep these? These I'm going to keep. It's so funny. Remember when we were talking about gold and silver butterflies?
Yep.
Like
how cheap they were.
How cheap they were. So I have one that's the 445, 425, 405. So it's 20 by 20. It has moved $1 into this move where, I did this when we were at significantly lower prices.
Right.
It just gives you an idea of just how much vol has just exploded here, that I did this when we were probably more so like around 445-ish.
Yep, crazy.
Another 15 handles lower. Crazy.
Absolutely crazy.
All right, let's do it. Market measures.
Ready. Let's go. Market measure.
The CBOE.
The CBOE.
When are the profits? Daily P&L trajectories. This is a good one. Lots of visuals here for our visual learners here. So most P&L analysis shows only the end of the day results. So a lot of the research that we do, we give you like probabilities. We give you, average P&L of course, and it's based on end of day results here. Mm-hmm. But these trades, they move very quickly, minute to minute, and so we're going to kind of visualize that price movement for a number of different trades and number of different setups here. So the question is, does your iron condor reach peak profit at noon and coast, or do you build gains gradually until the close? So we're going to kind of quantify the P&L route throughout the day from starting in the morning to the end of the day and see kind of the optimal spot. So really what we're going to do is, when during the day do profits typically materialize? That's kind of the question we're going to answer here. And what elements of order entry meaningfully change this timing? So we're going to look at an intraday P&L trajectory across various iron condor approaches, exploring whether different strikes, entry times, and widths produce distinct profit patterns throughout the day. So we're gonna see what kind of looks best out of all these setups. And I think from our experience, you're going to see what is the best, or what it has, been the most, the least volatile. So And we just got it. Oh my God. So
Boost
that was
down
a 20 handle rally in seconds.
Yeah, volatility doesn't lie, son. I've often tried to say to
know.
myself, how much does it lie? It just doesn't lie.
I know something.
Yeah.
It doesn't lie. It's very true.
It doesn't lie. Unfortunately.
So using 3 years of unfortunately, sometimes I think it's lying.
Yeah.
Like today,
too,
I feel like I think it's lying. You
Right.
got Bitcoin just getting murdered over the last like couple sessions. Gold and silver trading like meme stocks. Equities at all-time highs. You got oil at highs. You got copper at highs. I mean, something's lying.
It is crazy.
Okay, so the study, we're going to be using 3 years of data. This is our full data set for zero-day options. They've only been around for 3 years. 3 years now seems like it's 300 years.
It does, doesn't it?
It feels like it's been around since I've been trading, but it's really only been 3 years. And so we're going to consider a wide variety of short iron condor positions. We're going to look at trades with an initial strike at the 50, 40, 30, and 20 delta. We're going to look at the long strikes of 10, 20, 30, and $60, with, the width of the spread. And we're going to look at the market open, 9 a.m., 10 a.m., 11 a.m. For those entries. So for each set of entry mechanics, we're going to take the results and find the mean behavior over the course of the day, as well as the one standard deviation dispersion. So you're going to see these dispersion graphs of P&L throughout the day. It's a pretty cool one here.
Okie dokie.
Bonds down 10 too.
Bonds down 10.
Interesting.
Yep, very interesting day so far.
So the first one we have, we're looking at short strike selection strongly influences how long it takes to get to profit. So here you're looking at a $20 wide iron condor with $50 or 50 delta short strikes. So you're basically right at the money. You can see these trades, they don't move a lot until the end of the day. And this makes complete sense because it's a relatively tight spread. This 20-point wide spread using the 50 deltas is an iron fly. You're going to be within the expected move on either side of the market. And so, this is naturally going to be a trade that you're going to have to hold a lot longer. You're going to have to hold this basically until the last hour of the day here. Yeah. You could see that throughout that, the first hour or so of the day, it doesn't move all that much. You're talking about, $20 to $25 on a spread that's going to probably trade, $10 to $15 in total value, $1,500 versus $5 in risk.
True.
So the next one here, we're widening it out a little bit. So we're looking at a 20-point wide iron condor with the 40 delta for the short strikes. And we're starting this obviously at the open. And you can see this one, your P&L moves a little bit quicker. And this makes perfect sense because you're moving further out on the curve. This is kind of getting closer to where we're looking. We go towards the 20 delta. But you can see as you get further out of the money, the trade's going to move quicker from a P&L standpoint. You don't have as much profit potential, but it's going to move a lot quicker in that first hour or two. That $20 to $50 profit range comes in that first, 2 hours or so. Whereas to get to the $25 or $50 profit on the 50 delta, closer at the money, you got to kind of wait towards the last 2 hours or so of the day.
Very good.
So the next one here, we're getting more towards where we kind of play, whereas the $20 wide spreads at the 20 delta for the short options. You can see here, this is kind of in line with what I think we've experienced over the short time of us doing this, semi-regularly, not exactly every day, but we do, 1 or 2 of these a week usually. But usually around that first hour and a half, around when Q comes on, that's kind of where our SPX spread hits that $50 to $75 profit target, which is what we're targeting on these trades. We're usually selling these at like, $3 to $4 is our usual entry mark here. We're taking 10, 15, 20% of the max profit, somewhere between like, $50 and $100. And it usually happens in that first 2 hours. Like you can see the distribution here. By the time you get to, noon/1 or 2, 1-ish p.m., you've basically made as much as you can make. Like you're holding all risk going into the end of the day. You're at that $100 mark, your 25 to 50% of the max profit is right there at noon. But these are the trades where if you're looking to like put it on and take a small profit and move on to the next thing, this is really where you should be. The 50 delta options, tighter spreads, right at the money, those are really binary. You're going to have to hold those to the end of the day. The 20 deltas, quick profits and you're out. That's kind of what you're seeing here. It comes in around the first 2 hours. It's a cool distribution here. It's cool to see.
It is a cool distribution. Crazy, I guess splatter chart you would call these. A little difficult to kind of see, but really what you're looking at is the cone. It's just a cone, kind of.
Yeah, these are all occurrences looped together in a P&L distribution. So if you zoomed in on this, you'd see like these little lines in there, and these are each one of the occurrences, and you kind of put them together, and it's a distribution, which is amazing.
Yep, awesome.
So the next one here is a $10 wide iron condor with 30 delta short strikes. And we're doing this again at the open. Again, you can see around that, first 2 hours or so is where you're getting to that $50 to, $75 profit range, more so towards the 50 range. But again, this is a tighter spread. So this trade, when you're looking at this at 30 delta, $10 wide, it's probably trading at about $2.50 to $3. So again, that $50 is like that 10 to 15% of the max profit. And it's coming, before noon. Like you're usually in this at the open, and then by noon, you're out of this for $50 in either direction. Is the normal occurrence here. When you get to the closer to expiration, you're going to have a wider swing, and that's why the tail kind of flares out at the end, is because these get more binary as you get closer to expiration. You see the tail widen out on all these trades, as you get into that last hour.
Which is not unusual, right? That's what you would expect. Yep.
Totally.
Beautiful.
And so here we got a lot of these. I mean, we've got a full 12 slide deck here. And so the choice of width with more looking at like buying power here. So a lot of people want to do this with as minimal buying power. We're looking at a $30 wide iron condor with a 30 delta short option. So we're getting a little bit bigger on this trade. You can see again here, the first 2 hours is when you're getting to that $50 to $75. I think all of these are going to kind of show that, is that, like that's kind of your spot to be in and out of these, is in at the open, managing them, within the first couple hours, which is where all of our research has really been.
That is correct.
So this one is getting more of like a synthetic strangle here. So now you're talking about a 30 delta for the short options, going $60 wide. Again, this is you're at this point, like you're getting a little bit too wide, and you can see this looks a lot like the $30 wide spread, and that's because you're really not adding to the position. This is a point where it might make sense to just up the contracts if you're going $30 wide or even $20 wide with a out of the money spread. It makes sense to just up the contracts instead of going $60 wide, because your relative credit is going to be really, really small. You might only collect another 50 cents or maybe $1 for going $60 wide versus $30 wide. And so here, you can see it's a lot like the others, but you have much wider distributions. If you can see on the chart here, you have some big losses on the downside, and that's because you're simply just adding more risk without adding much more reward to these trades.
Yeah, it's definitely a risk trade, and not the reward that you would look for.
Yep.
I mean, 0 days are instant gratification, instant pain. I mean, we always talk about it's advantageous to put them on when volatility is expanding. That is not today. Volatility is actually contracting, if you can believe it or not. Volatility is down to 1865. Remember, last night it got up to 20.
Yesterday it was 20 intraday, and then we ended the day at below 19.
That is correct.
Absolutely nuts.
Yep.
So the next slide here. So whenever you started, the first few minutes of the trade were the least predictable. That's not a shock. Most of these trades, as soon as you put them on, it seems to go against you at least 10 to 15 cents.
Yeah.
They're not instant trades. Again, it usually is like that first hour is when you see things start to move. Hour to 2 hours into the day is when things start to kind of decay. So here we're looking at $20 wide iron condor using the 40 delta for the shorts. Again, it's kind of the same story across all of these. The next ones, though, we're going to be looking at starting later in the day. So here, we're starting at 9:30, which is an hour after the open. And still, this was kind of the same thing, the same sort of story. It takes about 2 hours for these trades to get to that $50-ish mark. Here, we're looking at $20 wide iron condor, 40 delta for the shorts. Just starting it an hour later, it's going to be a cheaper spread because there's going to be some decay. But again, it starts to work after about 2 hours.
Very good.
So the last one here, starting at 11 Central. So this is a couple hours after the open. These trades, when you get further into the day, you have to hold these towards the close. Is really the key here. Is that you either have to start this at the open and be out in the first 2 hours. If you don't do that, you're going to be trading it and holding it to the rest of the day. So those are the two kind of options that we're giving.
A lot of hopium when you're holding it and trading it to the end of the day. Now, markets move, right? I mean, so it's not it's an outside shot, maybe a 30% chance shot by just looking at it here, but it's an outside shot. But it really is a lot of hopium. This is a trade probably that I would look at that's gone bad, not a trade that I'm looking to put on. Does that make sense?
Correct. Yeah, for sure.
Okay.
For sure.
Okay.
So a couple takeaways for you. Zero DT premium selling success relies on accumulating many small edges. Daily P&Ls were average to nearly flat with profitability built through consistent repetition, not large wins. We've shown this multiple times of just managing these trades for conservative amounts of profit, 10, 15, 20%, greatly increase not only the profits that you have on the trade, but they reduce those big tail losses, which really flatten out your P&L distributions. Near at the money strikes rarely hit 50% of the max profit. This shouldn't be a shock to you because these trades you're going to have to hold till expiration. Those were the very tight distributions where they kind of flare out at the end. That's because you have to kind of wait to the end of the day here. Further out of the money options, out of the money positions with smaller credits can reasonably aim for higher percentage targets. So when you're going to that 20 or 30 delta short option, you can increase to the 20 or 30% of the max profit because you have a little bit more wiggle room for the market to move there. The first few minutes of the trade showed the most rapid P&L movement. So right when you put this trade on, it's going to fluctuate. And so, you got to keep that in mind as well. So a mix of data and experience is needed to understand your trade's rhythm and enable the confident management. I think our mechanics have worked really well for us of just like kind of taking the $50-ish, looking for that $20 for the short options. You go 10, 15, $20 wide on the spreads, but really just the key being in and out of these trades, not getting married to these.
That's really what the key is, being nimble and swift with these. Go ahead, you're going to say something?
Volatility is now back up.
It's going to be like that all day long, especially going into the weekend. I would expect that we've seen probably the lows in volatility for the day, even if the market goes higher. If even the market goes higher, I don't think volatility is going to go much lower here.
I don't think so either. Because yeah. This is.
We're going into the weekend. It just volatility does seem to stay bid.
Yeah, this week has been. Is this one of the crazier weeks you've experienced?
One of the crazier weeks where we really didn't go anywhere. We're 69.70 on the E-mini S&P. It's not 68.70. We're 67.70.
Yeah,
we really haven't moved anywhere on the week. It's crazy how much volatility in the market has. You just closed some of your scalps that you put on there, correct?
Yeah.
Very good.
I mean, yeah. To your point, I think the vibe of this market has been one of the weirder between the gold and silver. My thoughts on volatility being too low and the market just going nowhere. It's been one where I don't know what you can make of this market. Like, I don't know how you put it's not bullish, it's not bearish, it's just goofy. It's a kangaroo market. They coined that term for the like bouncy up and down kangaroo market.
Yep. This is exactly what you have. A kangaroo market is correct.
But could you imagine if you were just a long like buy and hold person, and you're looking at your portfolio and you've got SPY / an index of some sort, overall broad-based index. It's gone nowhere. It's gone nowhere for about 3 months, like up or down a couple percent. And then you look at your Microsoft position and you're like, what the hell? Microsoft is down 35% from highs.
Yeah.
Nvidia is moving, $5-6 a day. Maybe you bought some SanDisk, which has 5x. Like you look at your portfolio and you're like, what the hell is happening here?
It is crazy. It's a mixed bag of tricks. You said a kangaroo market for sure. I'd like to see volatility put a little egg on my face and see the volatility collapse here. Market catch a little bit of a bid with the rest of the markets, but we'll see. We're going to take a quick 90-second break. We're going to bring back the guys from the trade desk, see what's going on there. We'll be back in 90 seconds. It's Tasty Live.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
I'm just gonna wait for the stock to dip, then I'm a buyer. Buying into weakness is a phrase used to describe the action of getting long a stock into a down move. It's a contrarian trade. Most people want to buy what's hot, the stuff making huge upside moves, the chart line moving up and to the right. Nobody wants the stock at lows. But it's hard to buy high and sell higher, rather than buy low and sell high. There is a phrase for this. When the time comes to buy, you won't want to.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Got trader's block? We've got the cure. Get data-driven trade ideas with cherry picks. Our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Nikki, we are back, son. You know what that means? Time for a little bit more Tasty Live. That's right, with this man. Ah, it's Q. How are you, brother?
Fellas, how's it going? I'm doing well.
Doing well. I think my son's doing better than me today. He's been scalping real nice in the equity markets, which, believe it or not, have had a lot less movement than the metals market. Now, the metals market, you would think would have more of a movement on a percentage basis, but it's just metals have gotten killed. Market really hasn't gone anywhere. You would think that if the metals were getting killed, a lot of these other products, risk on kind of thing, risk off kind of thing with the metals, that maybe the market would get killed too. But the market's hanging in there. It's like money's flowing from one to the other. It's kind of weird, like my son said, kind of a kangaroo market.
It's been nuts. This has been. I just closed out that Tesla call that I had from a crab trade into earnings. I mean, Tesla's up $14 today. We're all over the place. Like, I'm looking at stuff and I'm like, why? I mean, why am I making money here? Right. I'm not like on Tesla. Like, how is Tesla bucking the trend of the market today? With everything else seemingly just getting nuked.
Tesla up 14, Verizon for earnings up 3 and change, but Robinhood back up a buck and change. Not a lot of the NASDAQ market that you see here when you go across here on the high option volume list. SanDisk up $60, was up $120. I mean,
unbelievable.
It's unbelievable.
Look at Western Digital. So Western Digital in the after hours was trading like 295. It's at 258. I mean, you're having these like just massive
down $20.
Yeah, I
crazy.
Don't know. I get the ick. I still have the ick. Did you buy the dip yesterday?
Man, I don't really talk about that stuff, but man, did you buy the dip right when we were down? Right after I left, right after I said it, we were down 70 points, and then we closed. I mean, you could call it unchanged, It
was violently unchanged is the quote of the day from my YouTube chat yesterday.
Yeah.
The market ended violently unchanged. We were down like 10 points net. If you just had woken up from a long nap, you would have thought nothing happened. It was crazy.
It was crazy. A matter of fact, Tesla Elon's proposing merging SpaceX with Tesla. So that's
okay. So I should probably get back long.
That's the whole reason.
I should have held that.
There.
Paper hands.
Yeah.
Nikki, paper hands.
I know,
Come
seriously.
on.
Yeah.
But yeah, the trade desk isn't as busy as you would think right now. I think everyone's really like digesting the information, and still, I mean, we're still getting a lot of questions about the metals, of course, but a lot of people are sort of digesting like what's going on here. How do I want to position myself? Vol is still, it's not as high as you would expect with the move we saw yesterday. I guess after coming back, I guess you could say Vol's unchanged too. But you would expect Vol to be a lot higher with a move like that.
Volatility, the move in volatility today and yesterday has been another goofy thing. I mean, just as we were talking, Vol was up like 20 or 30 ticks. It's now down 3 in the span of just you just mentioning, like talking about kind of the weirdness of this market. It's moving quick. And I sold out some more E-minis in NASDAQ.
Yeah, you most certainly did. You covered them. I think you covered the NASDAQ about
50 handles.
What's that?
50 handles lower?
787 you bought them. And
yeah, so they're at and I just sold them at 878. So it's 100 handles.
100 handles in the NASDAQ. Even the S&P is just
5 minutes.
20 handles, yes, in about 5 minutes. Crazy move.
Unbelievable.
Yep.
Yeah, the markets they are moving.
You got to get your hard hat on for this one. My God.
We were just down.
Certainly do.
On the ES, we were just down 35, went up to down 15, and now we're back down 20. I mean, weird stuff going on.
Weird stuff going on, Q. Weird stuff.
Wild, crazy stuff going on.
All right, let's get to my list here. Top 20 symbols going through the system.
I'm ready.
And their IVR. Let me get this pulled up here. All right.
Let's do it.
Top 20 symbols going through the system and their IVR. At number 1, SLV 95, Apple 17, Tesla 4, GLD 88, Microsoft 25, SNDK 68, Micron 63, SoFi 12, NVIDIA 22, Meta 12, AMD 43, Amazon 43, Palantir 30, iBit 35, Google 35, Netflix 17, Broadcom 45, Verizon 23, Visa 19, and Intel 38.
Yes, slow clap to the SLV market makers and liquidity providers. I'm going to tell you why, and this is why you're getting the business. Thank you. I appreciate that. I'm going to go out to March, and you'll notice that there's 20, 25 cent markets, 20, 25 cent markets, and great volume across the board. And this is in March. Let's go to GLD. And I know it's a $90 product versus a $465 product, but you've got a 6% move in GLD. You've got a 14% move in SLV. So you got a bigger move in SLV. I'll go to these same March options, go out of the money. Look at the volume. It's anemic here. And look at the markets, $2 wide in gold versus silver. So not only good kudos to them, good kudos to our traders who are looking to trade the metals. Silver is probably the place to be today just because of the liquidity as opposed to gold, which does not have GLD does not have the liquidity of yesteryear.
How much higher do you think the volume in SLV is going to be today versus previous high? Because I think I saw some stat that it was notionally more traded than SPY over like the last 2 or 3 sessions, something along those lines.
Yeah.
Today is going to blow out any record that it had prior, I would think.
I would agree with you. I definitely would agree with you.
Yeah.
All right, I've got to ask, do you think we've seen the highs in silver? Or Nikki, are you buying the dip?
I'm trading the vol. I don't know if I'm buying the dip here. I'm trading this thing like a madman. Staying small. I learned my lesson with SIL, which I wish I would have held because I would have got it all back and then some. But you live and you learn, and you live to fight another day kind of thing. I don't know if I want to buy this dip, but I'm going to trade this volatility.
Yeah, I think you got to trade the volatility. I think he's 100% correct. I'll leave the gurus to whether the highs are in or not. Yeah. It certainly seems like the capitulation trade. Actually, I mentioned it when silver was closer to 105, 110. That it felt like it was in the, and it got to almost 120. So I mean, right or wrong is almost a moot. It's not. I'm not trying to be right here or even wrong here. But it does feel like there was a capitulation trade, and for the short term, whether that be our 45-day time frame, I would think that volatility. I would think that the high is in. Now, when you look at silver, let's use the math. Forget about what I say. You've got a $25 expected move. Now, if it was all to the upside, you would be back near the highs. So saying that the highs might be in silver is not only my own personal opinion. They're basically saying that in volatility, that a 120 in silver in 45 days, you're up near the higher end of the range, maybe even outside the range. So at present implied volatility, you're not going to get that. You're not going to get that move.
All right. Well, there you have it.
There you have it, out of the mouth of babes.
I laid into it again. On the MES and MNQ here.
They're down 9 on the E-mini S&Ps, MNQ.
Violently unchanged. I think that's what I'm going to call these sort of days. Violently unchanged.
Violently unchanged is a good one. You are right. Now you just sold these futures a moment ago too, and you're back in now. You're basically full, right?
Yeah, I got a couple extra bullets in the chamber here. Okay, don't call me a Johnny.
No.
Don't tell me I'm full. Don't tell me this is it. Okay.
No. I'm not doing anything of the sort. I'm not doing anything of the sort. Not me. I would never do that.
No, not you. No
Are you
way.
kidding me? I would never do something.
No, you never say such a thing.
That's not my style. That's
I know.
definitely not my style.
I'm messing.
What's I know you got your list there, Quentin. You actually said it was kind of quiet on the desk. Do you think that's because it's more of an equity firm? Like we trade a lot more equities than we typically do the metals or even futures.
Options wise, yeah.
Option wise, yes.
Yeah, so like most of our business comes, I'd say it's about like 70 to 80% equities and equity options, and there's like about like 20% futures, right? And so yeah, and I would also say like a lot of the complex trades that we see from the futures customers, though, they always have questions about it and stuff like that. You know, like how do I manage this? Where can I reduce risk here and stuff like that? And so, yeah, I would say it's typically quieter though, just because like the managing is going on right now. And then when there's like, all right, like what's going on with my trade can always happen like after the fact, after you've managed, after the actions already happened, you know? So there can sometimes be a little bit of a delay. And then when it's violently unchanged like this, there's not always as much manage, you know, and things are going back to the upside, right? Than compared to going back down.
What are you doing here in Apple?
I'm just buying back a cheapy call from this poor man's cover call that we had. So I'm still long a April call. If we get a little bit of a rally, I'll sell into it again. Hey, you know what? Should I just go and sell? I'm going to sell it. I'm going to sell the 270 March call against it and just continue with this.
What are you looking to do in Apple?
I just sold the 270 call. So I'm long in March. So I'm long the April 250, 270 diagonal spread. We started this at a longer duration poor man's cover call.
Apple after earnings basically doing nothing, sitting down $2.30.
Yeah.
Down $2.30. Even the S&P is down 7.5. Nasdaq down 9,500. Russell down 23. Dow down 100. You look at volatility in 19 cents. I did not think it would get red today, so wrong on that one. Bonds are down 9 ticks. Bitcoin 83,500, trying to catch a little bit of a bid. Last night's overnight action of 81. Oil up 4 cents to 65 and change. Gold flirting with 5,100 off of its lows of 49.50. I'll round down off of its highs last night of 5,500. I'll round up on there. Silver $99 and change, hasn't moved much all morning. Down $15. Nat gas up 23 cents, big 5.5% move in nat gas. I thought nat gas was done with its up move here. Looked like a capitulation trade, much like gold and silver had. Nat gas now making a run for the roses. I have to mention for Nikki his dollar trade. Currencies, euro lower, yen is lower, and the pound is lower. So they're all significantly lower, which means the dollar is higher, maybe giving you a little bit of weakness to gold and the rest of these metal products. Nikki, as we come to the end of the show here, what's the biggest surprise?
I was going to say I just filled us on that FCX strangle. I moved it.
Oh, FCX. Good.
Yeah,
you moved it
from Fast Market.
From Fast Market, you moved it small down to $3.39. That's the 55.70. We had to move that because from what the gentleman recommended, because FCX had a $4 down move. The put was basically at the money. We end up going just out of the middle. The gentleman did want to be a little bit long. I don't think that's we would rather be just neutral. And not a lot of paper in FCX.
No. But it moves. I mean, it's a copper play.
It certainly does move. It's definitely a copper play.
Look at this. Violently unchanged.
And there we are, 30 points gone.
The 30 points gone, we're back at
Yeah.
7,000. I don't know how many
Yeah.
times we can bounce between 6,950 and 7,000, but it seems like we might stay here for the rest of our lives. It's unbelievable. It's unbelievable. You're gonna have $10 moves in or $40 moves in Microsoft, and the market's gonna go nowhere. Insane.
What a time to be alive, son. What a time to be alive.
Yes, it's crazy. I cut you off though. What were you saying, Dad?
No. I was going to ask you, like, what do you think for the rest of the day here? I mean, I cannot think we march higher on the equity side. Sitting here at 69.8. Do we close at 7,000? That's my question.
Probably. I mean, that would be a good bet, just because we've seen that close for 3 months now. So
7,000 on the ES.
I just don't see how it's
26,000 on the Nasdaq. It would be I don't, with all the news and crap that we have going on. I just cannot. I would not have called it. The market is forever making you think. It really is.
I'm fully loaded. Okay.
So like, I'm less surprised with the metal move lower like this than I am with the market move. Like the market being higher like this is really got me on tilt.
Yeah, totally.
All right, cool. All right, well, Taco Friday. We're gonna take a quick 90-second break. Q, thank you for coming in. I heard no bad reports about you at the winter party. So good job out of you, young man. You're a young man. Sometimes you can make a fool of yourself, and you did not. Very mature of you. And at a company meeting, that's the time to be mature. At a company.
I mean, my head's on the guillotine, so I'm just trying to skate by.
Well, skate as you may, son. Try as you may. We've never been able to avoid that type of trouble. We're going to take a quick 90-second break and come back. We got more Tasty Live. Immediately found these messages. Be careful out there, ladies and gentlemen. You got a wild market, even though we're violently unched.
We'll see you Monday.
Yes, peace.
Peace.
Nicky, we are back, son, and you know what that means. Time for a little bit of confirm and send on this January 30th, the end of the month, and let's see how this market is going to be. Even the S&Ps, wild ride yesterday, down over 100 handles when we were getting off the show, promptly started to rally back all day long, got over 7,000 for a moment yesterday. They're 69.95 on the high today, 69.58 where they are right now, down 35. They've had a 80 handle move last night alone. NASDAQ down 170 and change, over 26,000 again. Almost 25.6 on the low. They're 25.8 right now. Middle of the range for most of the market. Your Russell is the weakest of the group. There you go, son. You've been trying to get short. Russell is the weakest of the group. You've got it today, down over 1%. Everything else down 0.5%. Russell down 30 handles. Dow down 270. And volatility up 30 cents. Trading flirting with 20 last night, and did trade up to 20, and yesterday 19.10 right now, up 30 cents. Bonds with all the Fed talk down 18, 114.21. Bonds go lower. Interest rates typically go higher. Notes not having quite the move that bonds are having, but you can see they're on the low end of their range. Bitcoin, you dead product, you down $1,500. Traded up to almost 85, down to 81, sitting at just about 83, down 1,500. As we mentioned earlier this morning, markets go higher or lower, equity markets go higher or lower, Bitcoin doesn't move. Metals go higher or lower, metals don't move, nothing matters to Bitcoin, it's just been dead. Oil, 65 and change, a good range last night in oil too. You're looking at almost a $2 range, a little over $2 range in oil. It's unchanged at 65.50. Volatilities everywhere have expanded. Gold, well, we got to talk about that. Gold below yesterday's spike low in gold. If you were looking at gold here, you can see how it rallied all the way back to be over almost 5,500, back down under 5,000. That's as low as it's been, taken out the last week or so. Volatility at 114, I'm sure will even grow as the option markets open. And equally, if not great, it's a 5% move in gold. Equally, if not greater, by a magnitude of 3 times is silver, under 100, flirted with 120.
Unbelievable.
Unbelievable is right. You're talking about, let's see, that's, what is that, a $23,000 move in forwards in the small future.
Yeah, that's 230 grand in the big, or it's
5
the
times.
small one's 1/5.
Right, 1/5.
That'll be
100,000.
Yeah.
Yes, unbelievable move in silver on a notional value, under 100 at 98 and change, got down to 95,000. Net gas up 12 cents. That's your leader in the clubhouse besides volatility right now, or besides really volatility right now. Up 3%, 12 cents. Big move in nat gas back over $4. Apple. You would think with this movement in the market, everywhere else would be a lot weaker than it is. It's sitting basically unchanged, wrapped around $1 move one way or the other. Apple is going to be a good premium selling, was a good premium selling play. But really, this market is twofold. It's almost like we trade the equity markets all the time, and if gold or silver percolates, maybe you kind of go into there. I think the amount of volume that we've had, markets can get wide in gold and silver, even in CLD and SLV. So again, you're going to trade it. Watch your pricing. Mid price is not indicative of where you're going to get trade. Put it in at your price. And watch the product itself, how it moves, and then move your price up or down accordingly.
Yeah, and to go back to gold and silver.
Sure.
Yeah, I've had a number of emails and tweets. My calls are $30 in the money. I'm getting my face ripped off.
But not anymore.
Spreads. Well, you're getting a huge move today, and volatility is still very, very high. So you should expect, some big two-sided swings. But if you've been, if you've taken the pain and you've held and you've added into this sort of trade, don't get piggy with this trade. Take the money and run, reduce the size.
And then reallocate the money. You can do it in the same place. Like, if you've been short calls, and those calls were, so deep in the money, or you had a strangle. I had an email yesterday where in silver, he had something like the 6110 or something like that, or 7110. Now you've got a chance to do something, right? It's trading at $90. It closed at 105. It's down $15. Roll to the next month if you want to. You know what I mean? Do something that's strategic in nature, I guess is what
I have that like ratio spread in GLD that's wrapped around 450. I mean, GLD's down at 465. It's not like I'm going to be
$30.
But I'm not going to be profitable on that trade. But that trade is going to come in, $2,000-$3,000 relative to what it was trading for yesterday. And you're going to look at positions and you're going to be like, oh, well, I'm not at a profit or a scratch here. You got to kind of take the context of what's happening here and, pat yourself on the back that you were small enough to hold the position and figure out where you're going to go moving forward. Take that position, roll it out to March, reduce the size if you went too big, close other stuff. Like you can't sit here and just like look at I got to make money on this trade.
That's right.
If you survive 100% move, face ripper against you, that's a win. Like these are going to happen, and it's not going to be the last time.
That is correct. Good job out of you, son.
Cool.
All right, let's get going here. Confirm and send.
Yeah. After watching a number of the Rising Star videos, I noticed that many of them say that they are good with numbers and math. Do you have to be very good with math to be successful option trader, or is this just an overthinking? What do you think?
I think with the amount of technology you have at your fingertips, you don't even. I mean, if you know what, if you can do simple math, you'll be fine. And by simple math, I mean really simple math. You don't have to know anything else, trigonometry or anything else like that. Back in the day, you had to know some fractions, which were fundamental enough. Now, the computer does it all for you.
Yeah, I think that's a good way to.
I mean, if you know what a standard deviation is, an expected move, I mean, these are just common sense things, right? I mean, they're not. Once you've been told, you have all the knowledge that you need. You don't. You don't have to price an option anymore like we had to do, back in the 80s to figure out what the Black-Scholes model was. It's all done for you. Now, you can also look at numbers by seeing what IV rank is, and then you'll know that, okay, you don't know the math behind it, but those prices are inflated relative to their normal movement in those products. So I don't think you need anything, personally.
I agree with that. I mean, I think the understanding of risk is about as important as anything else.
Yep. Totally agree.
Well said.
Next one, please. If you were talking to a new trader, what 3 stocks would you suggest trading and why?
That's a good one. I think it's going back to kind of my meeting with the young minds at DePaul. I think liquidity is the king, obviously. Like, a lot of people ask me, okay, if I want to start trading options, do you go for like low price stocks because, there's only so much risk there? Do you go, like, where do you go? And I think, liquidity is always king. Look for an Apple, a Microsoft, a Tesla, an Nvidia, something like that. If you want to go into like, the Robinhoods, the IBITs, if you're interested in Bitcoin, the Intels.
IBIT's good. I mean, I was thinking.
I'm just going into the realm of just liquidity and lower price stuff. Roblox, Palantir, Oracle. I mean, I'm just naming stuff that I have positions on. SPY, Qs, IWM, Visa. Even it's not that liquid, but going to something that has a ton of liquidity would be the first spot. So I think the easiest answer is, the top 10 stocks in the world, go trade them. But then as long as it's a liquid market, it doesn't really matter. I think.
Yeah, right. As long as it's a liquid market, it doesn't matter. If it's something you're interested in, it's good. I would throw in the ETFs also, like SPY or Qs. IWM, if you want to too. I would throw those in there. I think if there was like 3 stocks, like you just said, I would probably throw one ETF, probably SPY would go to first. You can go to the NASDAQ if you're more tech inclined there too. And then, like you said, the Apples of the world, the Mag 7 stocks, maybe some of the other stocks that have implied volatility. Yep.
Yeah.
Totally agree. It's going to be a changing list. You did mention lower price stocks. I wouldn't. That's something I like. Sometimes it's the things you do. Sometimes it's the things you don't do. I would probably try to stay away from the lower price stocks. They just don't. Those $30-ish stocks, unless you have an opinion on them directionally, they don't give you much bang for your buck. They usually have low implied volatility because they don't have a big expected move. I mean, a 10% expected move on a $30 stock is $3 top to bottom, and you don't catch the top, you don't catch the bottom. It's almost like watching paint dry. So I would go to the strategy in these larger stocks that have good markets, liquidity king, like you said, over a smaller price stock.
Yeah, I mean, you can. Put spread, you can put a couple $100 of risk on. Like, it doesn't matter if it's a $500 stock or a $50 stock.
That's correct. Beautiful. Next one, please.
What drives the VIX/volatility? I know there are multiple ways to measure volatility, which is the most important to you. So I think this is in reference to like the VIX one day, the VIX itself, volatility futures, volatility in a specific underlying, like of itself, IVR. Like, what do you first part? What drives VIX, and then what's your kind of your volatility metric?
So I don't know if this is going to be a great answer. Maybe you'll do a better job. So you, the player, the market, the liquidity provider, the retail investor, we all drive volatility. Now, the back end of that is when we're more aggressive for pricing, meaning we're willing to pay more for calls and puts, volatility is going to expand in those options. So we drive volatility. When we don't have an appetite for or we do have an appetite for risk and we don't want to pay as much for those options, and those options get less, the more offers, volatility goes down. That's just how volatility works. That's it in a nutshell.
Yeah, well said. I mean, and
/VX is where volatility VIX is going to expire each month. But what moves it intraday is the propensity for risk and risk taking.
Yeah, the VIX itself is 30-day implied volatility on SPX. It's very simple to understand. Each underlying is going to have its own implied volatility, which is something that I focus most on. I mean, you look at market volatility, but you have to understand that each stock is going to have a different volatility, and it's going to be influenced by different things. You could have binary events. You could have, just general unknowns that pop up with volatility. I mean, like that's what it is. So I think it's important to understand implied volatility per underlying and also just as the market as a whole, because they're going to move in tandem. Today volatility's up. You're probably going to see, Microsoft volatility be higher. Like that's just, like it's kind of all in the same basket.
Very good. Next one, please. What factors do you take into account when scalping? You've been doing a lot of scalping lately, so this is something I think you'll be able to answer quite nicely. Is it mostly just price movement, or I think that's supposed to be do, or do you have specific things you look at, you look for, like one being down versus up, or volatility, or volume itself, or anything like that?
Yeah, I think for me, it's I do it off of general, just like market awareness and price action. I feel like it's I'm trading what I'm seeing, and that is no better than a 50-50 shot. Let's be completely clear. I mean, for the most part, it's a 50-50 shot. I think the more important part about scalping is that it's not like my core thing. Like it's an engagement thing. I'm trading the markets as I'm seeing it day to day. Sometimes I make a little money. Sometimes I lose a little money. It's a fraction of what my portfolio is doing on a day-to-day basis. And that's for me. There might be people that this is their bread and butter and they scalp all day long. And that's, that's where they make their money. But for me, it's more of an engagement thing. So, I look at just like what's happening in the market, individual stocks, overall volatility. Do I think volatility is low? Do I think volatility is high? In something like a silver, I've been trading just kind of the price action and the volatility that's been there. In the equities, I've felt like kind of bearish on equities here. They've been kind of weak. I've thought volatility has been low. That's just been my opinion on volatility. And so it overall is market awareness, it's opinion, and it's still a 50-50 shot. But the key is that for me, at least, it's a small part of my trading. Like it's not something that like I'm hyper focused on. I kind of make my bed and I sleep in it.
Yeah, I think for us, I know other people are allegedly a lot more sophisticated. Possibly they look at capitulation of price and VWAP and other type of things. I mean, for us, it's really just price. I mean, you're trading a product all day long. You watch how it moves, and you're trying to make an intraday scalp, right? I mean, some people scalping for them is more of a macro view. Like they'll take a longer term view of it. For us, it's just a daily movement. If you've got volatility percolating, you're going to have a much wider range on the futures, going back to what price is volatility. So if the volatility is going to have a wider range, it's more opportunity to scalp in between that wider range. So that's what we do.
Yeah.
Next one, please. Why don't you read one?
Why does mainstream financial media quote the Dow Jones Industrial Index? I never hear you guys talk about it.
I mentioned the Dow in the four that I talk about, even the S&Ps, NASDAQ, Russell, and Dow in that order. I bring the Dow last because it is least important. It's because mainstream media has been around for a long time and they just never evolved. The Dow Jones, the Dow 30 used to be the index. There wasn't even an index. It was just the Dow 30. It was the 30 most capitalized stocks weighted by industry. I mean, it's not the S&P 500. We've grown to so much more. I mean, when I first started trading, what was the Dow? I mean, the S&P 500 was under 1,000, so the Dow is significantly less than that. You know, the markets have gotten so big and so complex now, and so complex in an easy way. The S&P SPY is the S&P 500, 500 stocks versus 30 stocks. NASDAQ 2,000 stocks versus 500. Really, what you're looking at here is the S&P 500. That's what every fund manager bases themselves off of. They don't base themselves off of the Dow. Now, they all do move pretty much in tandem. They're all kind of doing. They're all in each other. I mean, the 30 are in the 500, which are in the 1,000, basically. So they all move in tandem. But the real reason why do they mention this is because they have never evolved.
Yeah, and I think just now markets are a lot more liquid in the NASDAQ and the E-minis specifically, just because of the way the world has gone, right? So like the Dow was traditionally, you had a lot of like healthcare, you had a lot of oil stocks. Like it was more of a, it's different industries at that point in time. And so, now when you talk about like the biggest stocks in the world are all tech stocks. And so, that's how I view the market. I mean, and so
I totally agree.
The NASDAQ and the E-mini is just way more liquid.
That's right. That's right. All right, next one, please. Oh, last one. When choosing a portfolio beta-weighted delta, I've heard tastylive speak about saying neutral or equivalent to 0.1% of the portfolio. So for a $20,000 account, would you at most lean plus minus 20 in either direction? I believe they're talking about delta.
Delta, yeah.
What determines how much you lean?
Yeah, I mean, I think this is a good metric. When you're in a smaller size account, it's very hard to 20 deltas in either direction is very small. And it's very hard to hold that or put that on even without having, an outsized position be your directional assumption. You put on a call diagonal spread and you'll have 20 deltas, but it'll use $500 in buying power. Yeah. So it's not, it's hard to kind of quantify this. I think understanding delta and understanding what is too big. Like if you told me I have 1,000 deltas in a $20,000 account, I would say you're probably too heavy. And that's going to depend on like what sort of trade it is. Are we talking about 0-day SPX calls? Are we talking about call diagonals, 60 days out in time, 60-30? Are we talking about put spreads? Are we talking about naked puts? Like the deltas are different. They're not exactly equal across the strategy that you're using. So I think, hyper focusing on 20 deltas, and if it goes to 19, you're looking to get one delta, like it's going to drive you insane, and it's going to be too hard for you to do. I think just understanding delta and knowing, 100, 200 deltas is probably on the higher end of where you should be. But hyper focusing on being like exactly 20 or exactly 30 or whatever your metric is going to be very hard for you.
Yeah, totally agree with you. I would add that this is just guidelines for you. Yeah. And then if you're more bullish or you're more bearish, take a directional risk. We would have no problem with that. I have to add one more thing before we take a quick break here. I didn't mention for you, son, you finally got the dollar catching a little bit of a bid here. You've got Euro down around 385 ticks. You got the pound down also. You also have /6J down too, which is nice. So you've got all of the currencies that you've been looking at moving in your direction finally. Maybe that's what's hurting gold and silver too.
Mm-hmm. Unfortunately, I'm long the dollar at much higher values. So although this is nice to see, it does not give me my money back.
Hey, don't shoot the messenger. I'm trying to do.
I know.
I'm trying to support you.
I appreciate it. I appreciate it.
Let's take a quick look at the market before we take a break. Even the S&P has been kind of holding steady, down 29. NASDAQ down 170. Russell down 28. They're all up a little bit from the last time I mentioned them. Dow, there you go, down 180. Volatility hasn't moved at 1905, up 26 cents. Bigger move last night in all of these products than right now. Bonds are still down 12. They haven't moved that much. Bitcoin's moved $200 to the positive side, still down $1,200. Over 83.2. It was under 83,000 a moment ago. Ethereum down $67 on a percentage basis. That's a bigger move than Bitcoin. Oil steady from the last time I quoted it, up 22. Gold down 255, although that's higher than where I quoted it earlier. It's about $130-ish off of its lows, about $300 and almost $400 off of its highs. That's the big move in gold. Silver down 15, almost $16 to just under 99. Got down to 95, got up to 118. Not for the faint of heart. We're going to take a quick 90-second break and come back. We got more Tasty Live coming up next with the opening bell, a moment we've all been waiting for. We'll be back in 90 seconds. Tasty Live. Nikki, we are back, son. And you know what that means? Time for a little bit more Tasty Live with Fast Market.
Fast Market.
Beautiful.
It is a fast market, that's for sure.
It most definitely is a fast market. You have...
I sold some more.
Okay, that's what it is. I thought it was my ding that.
No, you didn't get
your ding.
You can do that now.
Yeah. Have a bad silver position on that I'm going to look to close. Figure out all of the nuances of it. If it's small loss or a smaller loss or a bigger.
Yeah, it's certainly not a profitable position.
It is not a profitable position, but a $15 move has got to help that position. Just close it all now.
Yeah, so take that and now do like a 20 delta strangle. You know, like in March, you basically go to a less volatile position. You got the same money.
You do it basically all out of the money options instead of having in the money options. You're taking advantage of the volatility in SLV, which by the way, at 93, I didn't think it would be that low on an IV rank in SLV. SLV markets are pretty good compared to gold markets. They're 100 times better. GLD markets are horrible.
Yeah.
Good work.
Crazy.
Crazy markets indeed.
So I sold out more Russell, more NASDAQ. I think I'm going to take some of that off right here into this move too.
Sure, why not?
If I can.
That's me, that's you. There you go. All right, you're closing a small portion of your trade.
Yeah, 25%.
Okay.
I mean, I just took like 40 handles out of it.
Yeah, no, you had to. I like it. Good job out of you.
All right, and that's E-minis. So I'm pretty equally short across the board. I'm taking some of it off the table.
I like it.
Let's do it.
Good job.
I'm shocked Vol is coming in.
I am shocked Vol is coming in too. I really am.
Crazy. Okay, let's do a fast market. Do some trade ideas.
Let's go. Beautiful.
Was that another ding I heard out of you?
I'm dinging all over the place, my son.
Yeah.
Yeah.
Big ding energy.
Big ding energy. Big ding energy is correct.
HPQ. Let's see what we're looking. Selling the 20 Delta March puts, collecting $1.80. Keep it simple. Paul, I cannot remember the last time I've traded HPQ, but it's roughly the same price that I remember at about $20.
You're right. You're right about that too.
What do you think about? I mean, it's at lows here. What do you think about doing like an at the money put, just like the 19 strike in March? We can wheel it as a long stock position if it goes down.
I like it. I like it.
Markets kind of stink here. I'm going to put this in at $1.50 and see if we get filled.
Kind of stink here. Yes, you are correct. So you
All
got
right,
to put it at your price.
I put it in at $1.50. It's right at the money. If you hear a ding, I'll let you know that if that's it.
Beautiful.
Do I take another one of my E-minis off here?
Well, I think you got them right where you want it, man.
I think so too. All right. All right, HBQ. So we're working that order. I'll let you know if we get filled on that. Thank you, Paul. My man. All right, CL. Crude showing great IVR. It is 65 IV rank. We do have a little bit of short delta there. It's at 65.82. Jumped into a delta neutral iron condor, the March 55.58 put spread, the 80.83 call spread for a 98-cent credit, which is $980. 3-point wide is $3,000 of risk. Perfect when IV is elevated like this. Sam and Fargo. I like it. Let's see what we can do here.
Hey, if you like it, I like it.
You're looking March, okay?
Yeah, I think you have to.
Yeah, and these markets don't look great either.
No.
Or sorry, I went to the 31 day. Hold on. 46 day is better. Okay, so you're looking at the 58.55. So you're about a 20 delta on the downside. I'm going to do this. I'm going to do this a little tighter and do like the 58.56, $2 wide. So this should net out about 75-ish cents. And then you're doing the 80.83. So you got a lot of room on the upside. I guess there's a lot of skew here. I'm going to move this to the 78.80.
Okay.
And do this at like 70 cents.
I don't hate
$700 in risk. With about $1,200 in, or I'm sorry, $700 in potential reward, $1,200 in risk. The same sort of 1/3 the width of the strikes as you were looking at.
Beautiful.
I'm going to try and work this. We'll try this at 71 cents and see where we get filled here.
All right. Try as you may.
All right. So I have that working.
Okay. We're in.
All right, next one, please.
Next one, please.
You want to take that? Do you want to take a look at this one? I'm trying to work these orders.
Sure. Unity got crushed, selling 35 puts across Feb and March, letting time work while it finds a floor. What do you think? Down $1.80, $36 stock. They are bullish. Stock is certainly down the last 5 days, fits that scenario. I don't trade a lot of it has earnings February 11th. I want to be in March options right now. They're good, not bad, not a lot of, you look at these puts, it's trade by appointment here. Selling 35 puts in February and March. So he wants to do kind of a laddered trade here. You look at March puts there, that's you in oil, right? You look at the
what I just get filled on. I'm having a little internet issue.
You got filled in oil iron condor, it looks like.
Okay. All right. So Unity, we're looking at the 35 puts.
Yes. I don't know if not a lot of volume here. I would probably do March or February, but I wouldn't do both. You know what I mean? Like how big do you really want to be?
Let me see.
You know what I mean?
You want to do something like the 32 puts, 26 delta, 20-ish delta?
Sure.
Or you hate it?
You can. No, I don't mind it.
All right. We'll do
I don't mind. I don't mind it at all.
$1.85. We're in.
Okay. I like it. I like it.
Thought we had him, Bat.
I thought we had him too. I'm the one that told you not.
I thought we had him.
Not to do anything.
Yeah.
Right.
Okay, so we are working that HPQ. Did we get filled? We got filled on oil.
Yeah.
And then we got filled on Unity.
Yep.
Cool.
Yep. Okay. What now, brown cow?
Next one, please. AI. All right. AI is at an all-time low, buying it up cheap, then selling an at-the-money March covered call for income. Ooh, I don't like income. I don't like to hear income.
You don't like the. You don't
while
like
I
the,
wait for the bounce.
You don't like the sound of an income trade?
No, I don't like that. AI. What's it trading at right now?
AI is trading at
like $11 and change here.
Yeah, $11.30.
I don't know.
Down $1.
I mean,
7% move. On top
and
of
it's gone from like 14 to
yeah.
I don't know if I want to step in front of this trade, Dylan, and I certainly don't look at this stock as an income stock.
Yeah, me either. I agree with you.
So I'm going to pass on that.
Okie dokie. I don't mind passing.
Cool.
Cool. Next one, SPX. Ooh,
no.
Ooh, no.
Spooky.
Spooky is right.
Yeah.
I'm not looking to get spooked in this one. What about you?
What do you think of SPX here?
I'm not looking to do a neutral trade. I think with what we have here in volatility actually contracting, I think you have enough problems in the world than doing SPX at the moment. What do you think?
Yeah, I think I'm going to pass on the SPX. We got some short delta here. That's where I'm leaning for the day.
Yeah. There you go. Me too.
Cool.
Awesome. Next one, please.
Oh, IBIT. Oh no, Zach. I have all the bag I can hold. So thinking of Jade Lizard and IBIT, bullish long term but neutral near term. That slight positive delta fits well. I like it if you don't have something on and you're definitely getting a way better entry than I am.
Sure.
But I'm gonna have to abstain.
Yeah. I tend to agree.
Aww.
Next one, please. Microsoft, huge reversal, near 420 support. Microsoft MSFT is 434, up $1. So I hope they did this yesterday. Going unbalanced iron condor, $30 wide. Microsoft IV rank of 26, good, not great. What do you think about this one?
So we just did the call diagonal spread there. So we bought the dip a little bit there.
Yeah.
So we've got some long delta. I kind of like where we're at. I don't know if we're going to add to it at this point.
Okie dokie. All right.
This is a failed fast market, guys.
Okie dokie.
I'm failing you.
You are failing, but that's okay. I'm failing myself. Don't worry about it. Oracle, what are you going to do here?
Oh, no. We've got all we can handle here, too. So we're short the Oracle February 165 puts and the March 150 puts. So we have a laddered puts position in Oracle. We got some long delta here. We got Brad looking at catching its breath, doing the 150, 140 put spread for $2.80 credit. I like it if you didn't have a position on. I think it's an interesting one. You got a 60 IV rank, relatively high implied volatility, but again, I unfortunately have a little too much here, or I have as much as I could handle.
Look at these metals. GLD back down over 5%. Silver down around 13-14%. The gold silver ratio spread trading 50.5 where it was 51. You've got metals moving. You got the market real complacent. Although volatility did just uptick in the market 1880 as the NASDAQ. Russell was down the most. It still is. It's down under 1%. It was 1.5% earlier. So you got really kind of tale of two tapes here.
Yeah.
Next one, please.
Next one, please.
LRCX, still rich. After earnings, nearly neutral. Iron Condor, 410.20, 270, 280. LRCX.
So we're looking at I mean, we could do a strangle here.
Okay.
Or even I guess we could do the Iron Condor. So you're looking at the 220, 210, 270, 280.
Yeah. Yeah.
You're kind of tight on this Iron Condor.
Uh-huh.
So I'm going to move this. I don't know. I'm having all sorts of issues here
with the internet.
Yeah, yeah.
Okay.
So we'll do the 220, 195, the 280, 300. I guess we could do this 20 points wide. 220, 190, 280, 300. Is that what we're looking at?
They're looking at 270, 280. You want me to? I could put it through if you want.
20 points wide. Yes, that would be appreciated.
All right. So what the
210, 190 maybe, and then the 280, 300.
210, 190. Markets are going to be a little bit wide in here too.
Yeah, just like a 20-point wide Iron Condor. I think just widening out a little bit.
Yep. 210, 190. And you want to do, on the call side, you want to do, what, 310 you said? Markets are really wide in here, son.
Okay. Then
like the 310 calls are 385, 565.
Yep.
You know, and the puts are $3, you know, $3. $2.50, $3.50. I mean, you can't do. I don't think today's the day for this.
Yeah,
in my opinion. All right,
next one, please. Or is that it? I don't know. I can't see anything.
Okay, FCX. You can't see anything. Do you want me to put on my screen?
No. What are we doing? FCX.
All right, so FCX don't want to fight the strong uptrend by going short, but happy selling the 60-75 March strangle. I'll put it up there for you. 60-75 March strangle. FCX is down $4. 60's right at the money. You've got an IV rank of 34 in here. If you're going to do something in here, you probably do the 55-75. That would be well, it may be more like the 55-70 if you're trying to do something delta neutral in FCX. IV rank of 34. I don't mind that trade. It's got a little bit of short delta to it too, but I don't think it's I don't think it's that big. E-mini S&P's down 31. You just covered some of your E-mini S&Ps.
Yeah, I'm coming back a little bit.
Beautiful. Look at you.
I don't know if it's me or I don't know what.
MES, you're covering some of that too.
Yeah, I'm lining up. So I'm out of half. I'm out of half of the MES and the NASDAQ.
Got it. I'm going to put this in at 350 and see if we get filled.
Perfect. Let's take a little break so I can restart, try and get my bearings.
All right, let's do that. E-mini S&Ps, let's go over the market real quick here. E-mini S&Ps down 25. NASDAQ down 158. Russell down a full 1%. That's $30. Dow down 168. Volatility up by 12 cents. The big mover here is gold down 5.5% to 5,050 something, and silver is actually catching a little bit of a bid. Gold getting weaker. Silver catching a bit, down 14%, 13.5% is catching a bit. We'll take a quick 90-second break, come back. We got more Tasty Live after this with a market measure. Nikki, we are back, son, and you know what that means? Time for a little bit more Tasty Live. That's right. What's going on?
I'm selling them out again.
Even the S&P,
I'm back up to like 75% size-wise.
even the S&P's back down 12, NASDAQ down 100, Russell down 23, Dow down 90, and volatility in by 15 cents, 1863. Gold still selling off, down almost 6% on gold. Silver still selling off, also down 13%.
They just smacked
flight to quality, buying equities.
I think that's part of it. I mean, that was my original thesis, was that if you got to move out of gold and silver, it would go into equities. I thought it would be the big tech names, but it's not there. It's a weird one. I don't know. I don't know. I still get the ick. I still feel the ick.
You still get the ick. All right.
I'm just shocked at volatility. I mean, they took 30 ticks out of vol within the last second while we were on break, like in just an instant, and they rallied equities 20 on the E-minis themselves that rallied like 20 from the lows there. It's just a little, I don't know, ominous. I feel icky.
You feel icky. My sentiment exactly. I feel icky too, but you got to trade what's in front of you. But you're doing an excellent job here of hanging in there.
I try. I mean, doing my thing here. Doing my thing here, Pops. I'm trying.
I know that's all you can do is try.
Is gold or silver volatility coming in yet? Not really.
Doesn't look like it. It is under 100, which is interesting, but not yet. All right. You ready to go?
Sure. I want to.
Let's do it.
Do I take off more? I think I'm going to take off some more of these calls on gold.
Okie dokie.
Taking off a little bit of risk.
All right. You're allowed.
I got these downside butterflies too. I think I'm going to take, should I keep these? These I'm going to keep. It's so funny. Remember when we were talking about gold and silver butterflies?
Yep.
Like
how cheap they were.
How cheap they were. So I have one that's the 445, 425, 405. So it's 20 by 20. It has moved $1 into this move where, I did this when we were at significantly lower prices.
Right.
It just gives you an idea of just how much vol has just exploded here, that I did this when we were probably more so like around 445-ish.
Yep, crazy.
Another 15 handles lower. Crazy.
Absolutely crazy.
All right, let's do it. Market measures.
Ready. Let's go.
Sponsored. The CBOE.
The CBOE.
When are the profits? Daily P&L trajectories. This is a good one. Lots of visuals here for our visual learners here. So most P&L analysis shows only the end of the day results. So a lot of the research that we do, we give you like probabilities. We give you, average P&L, of course, and it's based on end of day results here.
Mm-hmm.
But these trades, they move very quickly, minute to minute, and so we're going to kind of visualize that price movement for a number of different trades and number of different setups here. So the question is, does your iron condor reach peak profit at noon and coast, or do you build gains gradually until the close? So we're going to kind of quantify the P&L route throughout the day from starting in the morning to the end of the day and see kind of the optimal spot. So really what we're going to do is, when during the day do profits typically materialize? That's kind of the question we're going to answer here. And what elements of order entry meaningfully change this timing. So we're going to look at an intraday P&L trajectory across various Iron Condor approaches, exploring whether different strikes, entry times, and widths produce distinct profit patterns throughout the day. So we're gonna see what kind of looks best out of all these setups. And I think from our experience, you're going to see what is the best or what it has, been the most, the least volatile. So,
yep.
And we just got it. Oh my God. So that was
down
a 20 handle rally in seconds.
Yeah. Volatility doesn't lie, son. I've often tried to say to myself, how much does it lie? It just doesn't lie.
I know something.
Yeah. Yeah.
It doesn't lie. It's very true.
It doesn't lie. Unfortunately.
So using 3 years of unfortunately, sometimes I think it's lying.
Yeah.
Like today, I feel like I think it's lying. You got Bitcoin just getting murdered over the last couple sessions. Gold and silver trading like meme stocks. Equities at all-time highs. You got oil at highs. You got copper at highs. I mean, something's lying.
It is crazy.
Okay, so the study, we're going to be using 3 years of data. This is our full data set for zero-day options. They've only been around for 3 years. 3 years now seems like it's 300 years.
It does, doesn't it?
It feels like it's been around since I've been trading, but it's really only been 3 years. And so we're going to consider a wide variety of short Iron Condor positions. We're going to look at trades with an initial strike at the 50, 40, 30, and 20 delta. We're going to look at the long strikes of 10, 20, 30, and $60, with, the width of the spread. And we're going to look at the market open, 9 a.m., 10 a.m., 11 a.m. For those entries. So for each set of entry mechanics, we're going to take the results and find the mean behavior over the course of the day, as well as the one standard deviation dispersion. So you're going to see these dispersion graphs of P&L throughout the day. It's a pretty cool one here.
Okie dokie.
Bonds down 10 too.
Bonds down 10.
Interesting.
Yep, very interesting day so far.
So the first one we have, we're looking at short strike selection strongly influences how long it takes to get to profit. So here you're looking at $20 wide Iron Condor with $50 or 50 delta short strikes. You're basically right at the money. You can see these trades, they don't move a lot until the end of the day. And this makes complete sense because it's a relatively tight spread. This 20-point wide spread using the 50 deltas is an iron fly. You're going to be within the expected move on either side of the market. And so, this is naturally going to be a trade that you're going to have to hold a lot longer. You're going to have to hold this basically until the last hour of the day here. Yeah. You could see that throughout that, the first hour or so of the day, it doesn't move all that much. You're talking about, $20 to $25 on a spread that's going to probably trade, $10 to $15 in total value, $1,500 versus $5 in risk.
True.
So the next one here, we're widening it out a little bit. So we're looking at a 20-point wide Iron Condor with the 40 delta for the short strikes. And we're starting this obviously at the open. And you can see this one, your P&L moves a little bit quicker. And this makes perfect sense because you're moving further out on the curve. This is kind of getting closer to where we're looking. We go towards the 20 delta. But you can see as you get further out of the money, the trade's going to move quicker from a P&L standpoint. You don't have as much profit potential, but it's going to move a lot quicker in that first hour or two. That $20 to $50 profit range comes in that first, 2 hours or so. Whereas to get to the $25 or $50 profit on the 50 delta, closer at the money, you got to kind of wait towards the last 2 hours or so of the day.
Very good.
So the next one here, we're getting more towards where we kind of play, whereas the $20 wide spreads at the 20 delta for the short options. You can see here, this is kind of in line with what I think we've experienced over the short time of us doing this, semi-regularly, not exactly every day, but we do, 1 or 2 of these a week usually. But usually around that first hour, hour and a half, around when Q comes on, that's kind of where our SPX spread hits that $50 to $75 profit target, which is what we're targeting on these trades. We're usually selling these at like, $3 to $4 is our usual entry mark here. We're taking 10, 15, 20% of the max profit, somewhere between like, $50 and $100. And it usually happens in that first 2 hours. Like you can see the distribution here. By the time you get to, noon/1 or 2, 1-ish PM, you've basically made as much as you can make. Like you're holding all risk going into the end of the day. You're at that $100 mark, your 25 to 50% of the max profit is right there at noon. But these are the trades where if you're looking to like put it on and take a small profit and move on to the next thing, this is really where you should be. The 50 delta options, tighter spreads, right at the money, those are really binary. You're going to have to hold those to the end of the day. The 20 deltas, quick profits and you're out. That's kind of what you're seeing here. It comes in around the first 2 hours. It's a cool distribution here. It's cool to see.
It is a cool distribution. Crazy, I guess, splatter chart, you would call these. A little difficult to kind of see, but really what you're looking at is the cone. It's just a cone kind of.
Yeah, these are all occurrences looped together in a P&L distribution. So if you zoomed in on this, you'd see like these little lines in there, and these are each one of the occurrences, and you kind of put them together, and it's a distribution, which is amazing.
Yep, awesome.
So the next one here is a $10 wide iron condor with 30 delta short strikes, and we're doing this again at the open. Again, you can see around that, first 2 hours or so is where you're getting to that $50 to $75 profit range, more so towards the 50 range. But again, this is a tighter spread. So this trade, when you're looking at this at 30 delta, $10 wide, it's probably trading at about $2.50 to $3. So again, that $50 is like that 10 to 15% of the max profit, and it's coming, before noon. Like you're usually in this at the open, and then by noon you're out of this for $50 in either direction. Is the normal occurrence here. When you get to the closer to expiration, you're going to have a wider swing, and that's why the tail kind of flares out at the end, is because these get more binary as you get closer to expiration. You see the tail widen out on all these trades, as you get into that last hour.
Which is not unusual, right? That's what you would expect. Yep.
Totally.
Beautiful.
And so here we got a lot of these. I mean, we've got a full 12 slide deck here. And so the choice of width with more looking at like buying power here. So a lot of people want to do this with as minimal buying power. We're looking at a $30 wide iron condor with a 30 delta short option. So we're getting a little bit bigger on this trade. You can see again here, the first 2 hours is when you're getting to that $50 to $75. I think all of these are going to kind of show that, is that, like that's kind of your spot to be in and out of these, is in at the open, managing them, within the first couple hours, which is where all of our research has really been.
That is correct.
So this one is getting more of like a synthetic strangle here. So now you're talking about a 30 delta for the short options, going $60 wide. Again, this is you're at this point, like you're getting a little bit too wide, and you can see this looks a lot like the $30 wide spread, and that's because you're really not adding to the position. This is a point where it might make sense to just up the contracts if you're going $30 wide or even $20 wide with a out of the money spread. It makes sense to just up the contracts instead of going $60 wide, because your relative credit is going to be really, really small. You might only collect another 50 cents or maybe $1 for going $60 wide versus $30 wide. And so here, you can see it's a lot like the others, but you have much wider distributions. If you can see on the chart here, you have some big losses on the downside, and that's because you're just you're simply just adding more risk without adding much more reward to these trades.
Yeah, it's definitely a risk trade, and not the reward that you would look for. I mean, 0 days are instant gratification, instant pain. I mean, we always talk about it's advantageous to put them on when volatility is expanding. That is not today. Volatility is actually contracting, if you can believe it or not. Volatility is down to 1865. Remember, last night it got up to 20.
Yesterday it was 20 intraday, and then we ended the day at like, below 19.
That is correct.
Absolutely nuts.
Yep.
So the next slide here. So whenever you started, the first few minutes of the trade were the least predictable. That's not a shock. Most of these trades, as soon as you put them on, it seems to go against you at least 10 to 15 cents.
Yeah.
They're not instant trades. Again, it usually is like that first hour is when you see things start to move. Hour to 2 hours into the day is when things start to kind of decay. So here we're looking at a $20 wide iron condor using the 40 delta for the shorts. Again, it's kind of the same story across all of these. The next ones, though, we're going to be looking at starting later in the day. So here, we're starting at 9:30, which is an hour after the open. And still, this was kind of the same thing, the same sort of story. It takes about 2 hours for these trades to get to that $50-ish mark. Here, we're looking at $20 wide iron condor, 40 delta for the shorts. Just starting it an hour later, it's going to be a cheaper spread because there's going to be some decay. But again, it starts to work after about 2 hours.
Very good.
So the last one here, starting at 11 Central. So this is a couple hours after the open. These trades, when you get further into the day, you have to hold these towards the close is really the key here, is that you either have to start this at the open and be out in the first 2 hours. If you don't do that, you're going to be trading it and holding it to the rest of the day. So those are the two kind of options that we're giving.
A lot of hopium when you're holding it and trading it to the end of the day. Now, markets move, right? I mean, so it's not it's an outside shot, maybe a 30% chance shot by just looking at it here, but it's an outside shot. But it really is a lot of hopium. This is a trade probably that I would look at that's gone bad, not a trade that I'm looking to put on. Does that make sense?
Correct. Yeah, for sure.
Okay.
For sure.
Okay.
So a couple takeaways for you. Zero DT premium selling success relies on accumulating many small edges. Daily P&Ls were average to nearly flat, with profitability built through consistent repetition, not large wins. We've shown this multiple times of just managing these trades for conservative amounts of profit, 10, 15, 20%, greatly increase not only the profits that you have on the trade, but they reduce those big tail losses, which really flatten out your P&L distributions. Near at the money strikes rarely hit 50% of the max profit. This shouldn't be a shock to you because these trades you're going to have to hold till expiration. Those were the very tight distributions where they kind of flare out at the end. That's because you have to kind of wait to the end of the day here. Further out of the money options, out of the money positions with smaller credits can reasonably aim for higher percentage targets. So when you're going to that 20 or 30 delta short option, you can increase to the 20 or 30% of the max profit because you have a little bit more wiggle room for the market to move there. The first few minutes of the trade showed the most rapid P&L movement. So right when you put this trade on, it's going to fluctuate. And so, you got to keep that in mind as well. So a mix of data and experience is needed to understand your trade's rhythm and enable the confident management. I think our mechanics have worked really well for us of just like kind of taking the $50-ish, looking for that $20 for the short options. You go 10, 15, $20 wide on the spreads, but really just the key being in and out of these trades, not getting married to these.
That's really what the key is, being nimble and swift with these. Go ahead, you're going to say something?
Volatility is now back up.
It's going to be like that all day long, especially going into the weekend. I would expect that we've seen probably the lows in volatility for the day, even if the market goes higher. If even the market goes higher, I don't think volatility is going to go much lower here.
I don't think so either. Because yeah, this is.
We're going into the weekend. It just volatility does seem to stay bid.
Yeah, this week has been. Is this one of the crazier weeks you've experienced?
One of the crazier weeks where we really didn't go anywhere. We're 69.70 on the E-mini S&P. It's not 68.70. We're 67.70.
Yeah.
We really haven't moved anywhere on the week. It's crazy how much volatility in the market has. You just closed some of your scalps that you put on there, correct?
Yeah.
Very good.
I mean, to your point, I think the vibe of this market has been one of the weirder between the gold and silver. My thoughts on volatility being too low and the market just going nowhere. It's been one where I don't know what you can make of this market. Like, I don't know how you put it's not bullish, it's not bearish, it's just goofy. It's a kangaroo market. They coined that term for the bouncy up and down kangaroo market.
Yep. This is exactly what you have. A kangaroo market is correct.
But could you imagine if you were just a long buy and hold person, and you're looking at your portfolio and you've got SPY / an index of some sort, overall broad-based index, it's gone nowhere. It's gone nowhere for about 3 months, up or down a couple percent. And then you look at your Microsoft position and you're like, what the hell? Microsoft is down 35% from highs.
Yeah.
NVIDIA is moving, $5-6 a day. Maybe you bought some SanDisk, which has 5x'd. You look at your portfolio and you're like, what the hell is happening here?
It is crazy. It's a mixed bag of tricks. You said a kangaroo market for sure. I'd like to see volatility put a little egg on my face and see the volatility collapse here. Market catch a little bit of a bid with the rest of the markets, but we'll see. We're going to take a quick 90-second break. We're going to bring back the guys from the trade desk, see what's going on there. We'll be back in 90 seconds. It's Tasty Live.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
You hear it all the time. Spoos up or spoos down. What exactly does that mean? Spoos is a slang term for the S&P 500, specifically the S&P 500 futures contract /ES. It's the world's most liquid asset. In the S&P 500, billions and billions of dollars trade hands each day. The S&P 500 represents the top US stocks, all in one basket, traded through one contract. The S&P 500's movement day to day gives you a good overview of the market as a whole and what it's doing.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
What's up, Tasty Nation? Welcome back to the show. This is Options Trading Concepts Live. My name is Mike. I'm here with Jamal, and it is a fabulous Friday. It is a blizzard again in Chicago. Just when you thought it was over, we are back. Crazy day in the precious metals. E-minis, NASDAQ down, Bitcoin down again, sitting at 83, but silver down 20%. Massive gap down, and the day after I decide to sell a strangle, I now have an in the money short put. So as it will happen, yeah, precisely. But either way, one contract, I can hold the risk. I'm sure this will keep bouncing around, but definitely a wild move.
I certainly hope so. I hope the party's not done. I hope it keeps bouncing around. I mean, look. This was always going to happen, right? I mean, we knew this. Even with all our trades the way we played for it, this was always going to happen just because of the way that it was moving up. I know this is what I've been expecting. I've been expecting silver to pull back in a strong way along with markets being down. I mean, this is kind of how these things end.
Yeah. And interestingly enough, downside move paired with a little bit of a vol crush here, which you can also expect to see. IV rank at 95. It was at 125 a couple days ago. So you're seeing a little bit of a pullback here in volatility as well as the price of SI. But I was talking to Jamal about the strike that I sold to the upside. The highest strike available in March. I sold this for $200 yesterday at the close. Now it's trading for 50 cents. And I was basically saying, sometimes when you get these upside moves with massive call skew, you will see that a lot of this premium is really flat at the top. So yesterday we were looking at the 190, the 200, the 210, and they were all basically within 20, 30 cents of each other. And when you look at open interest, plenty of open interest and volume at this 210 strike. So in these rare circumstances where you have massive call skew and tons of implied volatility, and you see that it's kind of flat premium across the board, I'm almost always going to just go to the highest strike available, because on the other side of the coin, you have to assume that people are buying that strike, looking for a continuation to the upside. But crazy to see that in a 49-day cycle, we've got 75% of the value out of this short option. And I think now, given that we got this vol crush out of the 210, I think it makes sense to move this down to like the 150, something like that now, which is still well outside of the expected move, and pick up some more premium to offset some of this risk.
Yeah, the strangle that I had in March, the 75 150, I just rolled my 150 call earlier today down to 125, 120, I forget, the 120 strike. So yeah, I did some rolling myself. But yeah, I mean, this is just a remarkable move here. I still feel good about the 75 put. There's nothing to do about that as of now. Hold on to that thing. We're good. But yeah, what a remarkable move you got. And obviously, not to be outdone, gold flirting with 5,000. It's still hanging in there. Again, these are happening because I guess, finally there was a successor name to Fed chair, which is going to be weird to get used to. I mean, we're not going to be saying Powell for much longer. And so I guess this guy is considered to be a hawkish guy. He's going to be considered someone who keeps the independence of the Fed. And that's why we're seeing these move in gold and silver finally today. It was just a matter of time, but clearly that's the news that it's dealing with as well.
Yeah, huge moves across the board. Silver, gold. Let's check out platinum too, down 15%. I assume copper's moving the same way, down 4%. Yeah, just a huge move across the board in that sector specifically. And you can see we've got some more downside movement in the E-minis, NASDAQ, but a lot of other futures products specifically not moving too much to the upside. Natty gas, big move. Crude continues to climb. But yeah, just a wild day for precious metals.
Do you have a GLD position? I actually don't have one. I've never had one.
I do not. The last position I had was a 300, 310 call diagonal. And that was back in June of last year.
Whole lot has changed since then, that's for sure.
Oh yeah. But yeah, Definitely possible to get a position on in here, but I do have the positions in silver. I still have this downside put diagonal that I put on, I don't even know, it was like a month ago, I want to say, the 65.55, and then we watched silver just rip higher, and now all of a sudden, this is coming back into play. $160 back today on this diagonal spread. We're gaining some value back. If we get another day like this spread's going to fill up, and luckily I still have this on, which hedges some of the risk in my 87 short put. But yeah, big move there, and I was filled on the roll down from 200 to 150, so I picked up another $1.40 there. So the net credit received on this position is exactly $1,000. So my break even is at 77 to the downside, and we're right around there. But regardless, I wanted to take the risk. I wanted to take advantage of that premium, and we'll just roll it perpetually moving forward, regardless of what happens with silver. But seeing massive volume in SLV, 170 million shares traded today, and it's 11 a.m.
Wow. Yeah. That's crazy.
Crazy indeed.
Not to be outdone, by the way. We're down 54 handles. We're down additional almost 20 handles since we started the show in BS. Excuse me. Markets are not. This is what I've been, dude. How many times have I said this since we've been on the show? This is what I've been waiting on to see how this was going to play out, because you knew it was going to be ugly, and this could accelerate to the end of the day. We'll see.
Yeah, absolutely. I think, I don't remember the last time we've had such a glass ceiling here in the E-minis. Completely flat. When you look at the movement we've had, literally from end of October to now, it's just been chopping in this narrow range. We haven't been able to sustain E-mini futures above 7K. And, the markets they feel like they're kind of rattling a little bit here, especially with today's move.
Yeah.
Apple had earnings yesterday. That was a nice earnings trade. And it just goes to show that even with a downside move in Apple, with my call calendar spread, I had the 265. So I was looking for an inside up move. I bought the March cycle, sold the 1 day, but reduced cost basis enough to where even on the open, when Apple was down like $1.50, $2, this was still a profitable trade because the short premium went to zero and the March cycle held on to enough value to allow me to sell out of this for a 50-cent profit. So directionally wrong, but volatility was correct in the sense that we knew we were getting that big vol crush in the 1 day, of course, and that's the only reason why that trade is profitable. But good timing, because if you get out now, it's probably not looking as good since Apple's continuing to sell off here. Yeah, $5. So it would be a scratch right now if you didn't get out. But still, nice to see we can close that winner on a small down move because the vol crush was so aggressive. And then Visa, not looking great here. These are the very frustrating ones where MasterCard goes up 5% and then Visa announces and it's down. It's like, how is this possible? But that's why you keep your risk small. We went with the calendar spread here, and we still have next week. So this thing could reverse next week and we'll be good. We just need both of these options, the 335 and 340 combined value to get to $300 or more. And that can happen pretty easily with a decent rally here. We need a 5-point rally, basically, and we'll be okay. Anything else on your radar today before we pop over to the YouTube chat for some questions?
Not really. I mean, a dollar is making another move here about 3 days in a row. That's something I'm looking at. It's still surprising to see Bitcoin down, I guess, amidst all this. You would have thought maybe as money is flowing out of metals, maybe they would flow into Bitcoin, but still not much of an uptick there. So it's mostly it.
Yeah. Nice to see the dollar moving. My Tasty FX positions are not doing great, but the dollar franc coming in nicely from where it was. This was down like $1,000 a couple days ago. And some of these other positions, just keeping my eye on it. But this is why you got to trade small. You get a ton of leverage in these things. And even with my little micro lot positions, it's still growing teeth into this big dollar sell-off. But again, trade small enough and you can withstand the variance and even get into dollar cost averaging if you can throw on more micro lot positions. But as it stands right now, I think I'm good in terms of my exposure, and I want to be able to withstand any further downside movement if it happens. And if we get the reversal, I imagine it could be swift to the upside in terms of the dollar, considering how far and fast it fell. So we'll see. We will see. Nice. If you want to join us in the YouTube channel, we're streaming live there. Just pop over to Tasty Live. You'll see this video front and center. You can throw in your trade ideas, questions along the right-hand side chat. I've got the Refer a Friend program pinned to the top of the YouTube chat. If your friend joins, deposits $2K, you both get $100. So check that out. All the terms and conditions are there, and instructions on how to get your referral code in the platform. Let's see here. What do we got? What's for lunch at Taste Trade? I'm not sure. We are not there. Probably something legit. Fridays are usually the very legit lunches. All the lunches are great, but the Friday lunches are usually like hand-picked because there's not many people in the office, or not as many people in the office. You can kind of go nuts if you want to.
Yep.
Let's see. I was telling myself to be done with silver after 135. Yeah, this move is crazy, but it's not over yet. I mean, this is, like Jamal said, this is what we expect to see. When you see a huge ramp up, you should expect to see some kind of pullback at some point. This, of course, is a huge pullback, but still, 100 IV rank, like this is not the end of the story for silver or gold or platinum or copper.
Not in the least.
Yeah. Is there a way to see a 2-year chart of Bitcoin futures? Yes. So any of the futures products, if you type in ES, it's going to bring you to the H contract or the active contract. But if you type in $/ES, that is the continuous chart with all of the rolls, and then you can change to a 2-year. So if we go to $/BTC, we can go to, let's call it a weekly 2-year chart, 3-year chart, whatever you want to do. And you can get that continuous chart of the Bitcoin futures. So all you need is that $sign in front of the ticker symbol for any futures product that you want to make continuous. Sold my SLV and half of COPX yesterday. Still thinking about buying back in. Very nice timing. Very nice timing. But yeah, I mean, if you liked silver yesterday, you got to like it today. Unless this spooks you.
Which I'm sure it is. A lot of people.
Mm-hmm. It's funny how the brain works.
Oh yeah.
It's up ripping from 100 to 115. You're like, ooh, I got to get in before it gets to 200. And then it reverses to 80 and you're like, ooh, maybe I don't want to do this.
It is a trip how that works, man. The psychology is a trip.
Mm-hmm. Does anyone actually follow futures contracts rollovers or no? Same thing happened in Natty Gas 2 days ago. Yeah, I mean, it is a thing. When you're rolling from one contract to the next, you can see a lot of liquidity leave the current contract, go into the new contract, and especially if it's a directionally similar large order book, I mean, you can get big moves from the rollovers from one contract to the next. But I don't think we don't play for that. But it's definitely something to be cognizant of.
Yeah. I just closed out my nat gas short put spread today, just slightly with positive on it. I'm like, I am not going to mess around with this thing. I'm going to get out.
Love to see it.
Yeah.
Yeah, what a move. This thing's nuts. Just goes from 4 to 2, and then it's like, oh, just kidding. Let's reverse this whole thing. It's nutty. But nice trade.
It's tempting. It's tempting to get back in.
Yeah.
Just widen out.
True. Any research from Tasty on the average consumer trader? And if consumer traders primarily income trading or retirement account wealth, or do they buy high liquid growth products and hold? I think everyone has their own risk tolerances. Everyone has a different portfolio, so it's hard to kind of bucketize that. But yeah, I would say there is something to be said about conservative strategies versus aggressive strategies. I would say if I had a lump sum of cash and I was just being conservative and trying to make income on that cash, I would be doing something like I'm doing with the Micro E-mini product and with Jamal's Micro NASDAQ product, where we're just selling premium on both sides. Even with the market moving around like it is, like these options are still way far out of the money. Like it's a nice way to generate revenue against risk. And we're leaning long. So if the market rips higher, we'll just adjust it. If it doesn't, we'll adjust to the downside. But it's a more predictable way to trade if you're just trying to get exposure to the markets. If you're trading the S&P 500 or the NASDAQ, as opposed to single name stocks that can and will rip around and whip around like Microsoft and Meta, you get exposure to them indirectly, but your worst day in an MES contract is what, 7% before they shut it down?
Yeah.
So very different than an equity that can go up or down 30, 40% after hours and be super volatile. All right. How to play a long GLD position, debit spread or calendar or diagonal? Shall we get into it?
Let's do it, because I feel like there's some opportunities here for sure.
Yeah. We could just do let's just look at like the 500. What does the 500 look like? Wow. 23,000 open interest, super liquid there. If we look at March and Feb, long March, short Feb. Yeah, the 500 strike. Yeah, something like this, like $500, reducing cost basis by 50%. If you look at the short premium in the Feb cycle versus March, collecting $500, paying $980, and you can clearly see you've got more than twice the amount of time in March, but you're collecting more than half of the premium in the near-term cycle. So something like this, I think, is totally fine. If you want it to be more directional, you can.
Well, the one thing I'll say too that's really nice about that trade is if you look at the vol on both of them, you can see clearly the Feb as it makes sense. That Feb 500 call is like 10 points higher in vol than the March 500. So that's actually really nice. This is exactly the reason the situation where you want to do a calendar spread. You just really don't get it that often. That's why we use them for earnings. But this is exactly the reason in a normal situation that calendar spreads were designed for. When the vol in another month in front of it is way higher than the next month, the next term vol.
Indeed. And yeah, this is a pure extrinsic value play. It's going to be the cheapest play on the board when you consider how much you're risking versus how much you can make. And yeah, I think when you look at how you might be able to differentiate this, you can go to like a diagonal spread. You can go to, calendar spread, what have you. But yeah, I think when it comes down to how you're going to approach this, you just got to make sure that you're comfortable with the risk as this thing is, flying around like crazy. But yeah, I think I need to restart this platform really quick. I think this Zoom is messed up. But yeah, GLD calendar spread, diagonal spread, that's what we'll go into.
I mean, I'm looking at a crab in here too.
Mm-hmm.
The March, again, just arbitrarily strikes, but March 460, Feb 475, two of those short and long, one of the 490s. Like that's for six. It's under 7. It's like 678 right now.
Yeah. And the nice thing about that is the premium, again, is pretty flat. So you can choose where you want to have your long option and where you want to have your short option. And that upside premium is super juiced right now. We were just looking at 500 strike in Feb and it's trading for $500. It's absolutely nuts. But yeah, I think we can get into something in GLD.
It won't fill me, which means it's a good trade.
Yeah, that is always a telltale sign.
Oh, yeah.
All right. GLD. Let's pop in here. Long March. I think I'm just going to do that. Just check out the 500. 500.
Yeah, I like that too.
Yeah, especially because you're way out of the money in the Feb cycle in terms of implied volatility, but still picking up a ton of premium. Let's see if I can get.
I'm going to wait on the crab because I'm actually a little worried that this thing is going to be in free fall until around the futures close, because they usually close like the regular trading session closes at I think 1:30 our time. I believe 12:30 our time, 12:30 our time. I think this thing is going to be a little bit free fall. So for now, I'm just going to put the 500 on, and if I'm wrong, then I just get that crab at a worse price later on. But if I'm right, I can actually get better strikes.
I like it. Yeah, I'm going to let it sit at 420 and see if we get a fill. These markets are a little wide, so that's another thing you need to be aware of is in these big moves, you're going to have, even with super liquid products like GLD, you're going to have wider bid-ask spreads. And if you want a specific price, you're going to just have to be patient and see if you get filled. And then you can walk the price up 5 cents, 10 cents, whatever, to try and get filled. But yeah, we'll see what happens there. But trying to get into the 500 calendar spread, long March, short Feb for $400. I like the risk reward there. If we get that rally, it could easily be a $500-$600 winner. Sold an SLV put Broken Butterfly on yesterday's dip, almost at the money now. Yeah. SLV put Broken Butterfly. I assume you went to Feb because you can go to Feb since all this premium is absolutely nutty. But yeah, let's just look at like a 5x10, 80, 75, 65. See what this looks like. Looks like a 50-cent credit, somewhere around there. And yeah, I mean, if we isolate just this position and we look at this on a expiration risk graph here, you can see if you collect 60 cents, you have no risk to the upside. But if we continue to slide closer to 75, that's your sweet spot at expiration. And then your max loss is about $400 below 65. So yeah, I like the idea. I think it's going to be tough to get a lot of this value out of the spread just because IV is so high that it's going to really prevent you from realizing anything close to $500 until you're at expiration. So that's something to keep in mind. But still, if this is the risk you want to have, you can totally get away with it. If you want undefined risk, I think that's really where the big opportunity lies, just because you can create these really wide put ratios. And in this case, your break even, because you can go so wide, even if you pay a little debit for it, either way, if you did an 80, 72 and gave up all your premium, you've got a break even below 65. And then you can sell out of this put vertical spread, pick up more premium, and then roll your short put forward. And that's how you get this nice low break even. And then you can continue to build on that break even with a put ratio spread. But this is undefined risk. Broken Butterfly is defined risk. Ideas on shorting SanDisk.
Jesus, I don't want to touch this name. I've been telling anybody who will listen, don't touch this name for like the last couple of months.
It's nuts.
I mean, it's nuts. Honestly, I mean, it looks a lot like NVIDIA looked a few years ago, and this thing could be at 1,000 at some point, honestly.
Yeah.
I don't even know what the hell is, I don't even know why. I don't really, I mean, I know it's chips and there's obviously a lot of emphasis on chips right now, but I mean, I don't know. Again, there's a lot of chip names. I don't know why SanDisk is doing exactly what it's doing. I know it had earnings, but when you see this type of thing happening, yeah, be careful of the shorting. But, that being said, what the hell? Let's try to find a way.
Yeah. I mean, I'm not going to do this because it's just too expensive. But if you're hell bent on shorting SanDisk, like I would say, you absolutely defined risk. There's no reason to get crazy into a stock that's just ripping with no ceiling in sight. I would do something like this, like a calendar spread where you can make, 10, 20, 30% on a downside move. You could also consider short call spread or a long put spread, something like that. The problem is there's so much call skew here. If you just look at like the 750, 150 points out of the money, and then you look at the 450, 150 points out of the money, you have a 3-to-1 call ratio. Yesterday in silver, we were looking at a 10-to-1 call skew, but the call skew doesn't help you if you're selling a spread, because if you sell the 700, nice and juicy premium up here, but then you're going and you're buying an option that is just as expensive. So 20-point wide credit spread for only $4, I think it's tough, especially considering you could reach 700 tomorrow or Monday. Like, it's just, this thing is moving like crazy. So I would lean with a calendar spread or a small put spread, long put spread, something like that. But these markets aren't great. These markets are $3, $4 wide. And the more legs you add, the more that's going to hurt you in terms of getting in at a fair price. So I'm out on SanDisk, but absolutely defined risk.
Yeah, honestly, I was thinking about selling the put spread earlier today. I didn't do it, though. I didn't pull the trigger. I feel like it's a little wide, too. I mean, it's just going to be kind of a pain for all.
Mm-hmm. How do we plan to manage this Intel trade? So Intel, we had a call calendar spread for earnings, the 60 strike, long March, short the 1 day. Intel sold off. We've climbed back. So we're still okay in terms of plenty of time, 49 days left. We need, if we look at the debit paid, luckily the short option reduces a lot of cost basis on that trade, but $315 debit paid. So where on the strike plane is an option trading for $300, about 3 points higher than where we are right now. If you look at Intel at 47, you look at the 50 strike, it's trading for $3. So with that said, I would say we need Intel to get to like 55, and this option would be trading for about $3. Just because higher stock price means more extrinsic value in these out of the money options. So a 5-point difference between the stock price and the strike price would probably be the same as a 3-point difference between a lower stock price of 47. So we need Intel at the expected move to the upside, and we'll be able to break even on this. But as it stands, nothing else really to do here. I mean, when you look at Feb, the 60 strike, technically, if you wanted to, you could sell this option for 40 cents, but I don't want to do this because 40 cents, yes, it's cost basis reduction, but if Intel rips higher in a week, if we go from 47 to 55 in a week, this option is going to go from 30 cents to $1.50. And that's really going to hurt you in terms of getting value back. So I'm just going to lean long with this long call. It's only trading for $100, and we'll see where we go, but we need to move to like 55, I would say.
Is that like a leftover position or something?
Yeah.
Oh,
yeah,
dude,
leftover
this is such
from
a wild day. Look at oil. Oil just dropped like $1 in like a minute.
Good.
I was like, wasn't this thing positive?
We need this. We need this between 65 and 55.
Yeah.
So
I mean,
we'll
I feel good because just like we talked about yesterday, it's like, you know what? I see that. I saw the move. And it's like you almost want to try and play that, but it's like, nah, just look at the chart over the last couple of months. We get these big moves up, and then eventually there's a fade, and the fade is happening. So.
Natty Gas has always been known as the Widowmaker, literally for 50 years. Yeah. Super volatile, super levered. It's crazy.
Yeah.
For the Visa trade, will you just let the shorts expire and leave the calls? Yes.
Yes.
It is a filled on gold, 420.
Yep.
So yeah, Visa. we had these short calls, but this is why our cost basis was so low relative to just buying the calls. This would be a $500, $600 loser if we didn't sell the calls against it. It's only a $200 loser because we did sell the calls. But 7 days to go in the longs, there's nothing to do there. Yeah, I mean, the only thing you could do is like turn these into vertical spreads. But again, you're picking up 18 cents, 19 cents. You're not looking to, you're basically killing the trade if you do that. What you're looking for is on Monday, a reversal of 5 or 6 points to where these options gain a lot of value with a lot of extrinsic value left, as much as it can hold on to. And that's really the best case scenario. But yeah, going forward, only $100 in risk, and we can make back all this value if we get a reversal next week. Anyone know when the 0-day pattern day trading rules change? Not yet, but we will be ready.
Well, yeah,
it's going to be great. How would you manage the following SPX put diagonal? Let's take a look here. SPX put diagonal. Short the 68.50 in Feb 13. Okay. 68.50. Long the 217.68.80. Okay. So you got a 30-point wide diagonal spread on. It's trading for $1,200 right now. It's left over from another trade. Normally I would close, but I want to try and make this a win or a scratch. We need to know what your total cost is. But either way, there's not much to do with a trade like this because there's only 1 week. There's 4 days between the short and the long. Into this sell-off, I guess you could consider, like, I don't know what your cost basis is, but this is a 30-point wide. So if you're trying to reduce cost basis and still give yourself a shot, maybe you look at buying back the 68.50 and moving it up to the 68.60, something like that. Pick up $200, or you can move it a little bit higher, but you still want to make sure that whatever your debit paid is less than the width of this vertical spread or diagonal spread, so that if this market does continue to sell off, you have no risk to the downside. So it depends on what your debit paid is. A QQQ Feb spread trading for around $1 yesterday. You would think that the credit would be higher today, but it's only a 66-cent credit today. 595, 590. Yeah, interesting. If we look at the net change, yeah, so interestingly enough, these values are all wacky, but yeah, 66 cent credit today. When you look at the Q's dropping, the VIX is rising a little bit, but VIX futures not really moving at all today. Yeah, it could be just the skew. If this is really playing a role here, like we're seeing an 80-cent increase on the net change on the 590 versus a 60-cent increase on the short. So your long is now more expensive, which does make sense. I mean, if you get a violent sell-off in these markets, you will see the put skew start to pick up, which makes the long option more expensive to buy to define the risk. So maybe that's why you're seeing a slightly smaller credit than yesterday. But yeah, that's the only thing I can think of, all things considered.
It just changed too.
Yeah. Do you personally hold micro NASDAQ and MES overnight? Yes. Do you usually manage it with sizing and stops? No. And do we hedge overnight with risk? Do we hedge overnight risk with options? So you can do all those things, but the whole idea behind our year-long trades is that we trade them small enough to where we don't have to worry about what's happening overnight, what's happening day to day, because our one contract is a small enough size to where the E-minis could be down 30% in a couple months, and we'll have moved this option down. We'll be taking heat on the position, of course, but it's not going to get too big to where we're going to have to get stopped out. And especially with a micro E-mini position or a NASDAQ position, I don't want to get stopped out on downside moves or upside moves. I would rather give myself the ability to manage it versus exiting and then watching it reverse 6 months later. We have plenty of data that shows if the micro E-mini or if the S&P 500 or NASDAQ sell off 10%, 15%, 20%, the probability of the price being higher 1 year later, 3 years later, 5 years later, it's like 99%. Don't quote me on that, but that's the idea. Is like historically, all market sell-offs have recovered and gone higher. So if that is going to continue to be the case, I want to be sized correctly to where I can withstand that and offset the variance to the downside and live to fight another day and benefit from the continued premium that I collect. Holding shares in RKT, considering selling the March 18-16 put ratio and selling a 22 call for a 61-cent credit. The sympathy sell-off from PFSI seems overdone. Yeah, I like the trade.
What's that?
I don't know. Penny.
Huh.
Yeah, I mean,
That
this
is.
you could say this is overdone.
Is that?
Yeah, I mean, crazy, down 33%. But yeah,
Don't trade it. Don't even know.
Yeah, small price point, $17. So I like the idea of if you already have shares, selling the put ratio 18-16 gets you a break even at 14. So let's say your shares are at like 25, you could bring that basis down to 20 if you take shares at 14 in terms of a cost basis. And then if you have a 22 short call, as long as your cost basis is around 22, not too much higher than that, then yeah, it's going to be a nice trade to layer on if you're willing to take more risk in there. So yeah, I don't mind it.
Yeah, that's a good move.
Yeah, especially for a sympathy move.
Yeah.
SoFi had earnings yesterday too. They were up after the close, and then they're selling off today. So kind of a wild day here.
Yeah, it is. Seems like not many people want to carry risk into the weekend, particularly metal risk.
How do you make money on days like this week? Small profits disappear with these aggressive moves. Yeah,
true.
It can be tough. This is why we have hedges on in the portfolio, like SPX. I have all these positions on, but this is going to expire worthless for a 55-cent win. This butterfly is going to expire worthless for an 80-cent win. I've got this 100-point downside butterfly that is a scratch now, but it's an effective hedge, especially when you consider my short put spread that I sold to finance a long call spread. My butterfly, if we get below my short put spread, my butterfly is going to appreciate and offset a ton of that risk, if not all of it. So having hedges on helps eliminate some of these big liquidations, but the answer is size. You have to just be able to trade a correct size to where you can withstand the variance. Like even SLV, yeah, this sucks, down $600 today in this strangle, but at the end of the day, as long as SLV stays around here or goes up above 87, I'm going to keep this $1,000 in the next couple months. So that's going to be a $1,600 swing in P&L. So got to be sized small enough to be able to withstand it. And if you can't, in terms of undefined risk, then you got to go with a defined risk trade. And again, just be sized correctly to where if you hit a max loss, it's not going to be the end of the trading day. What about Circle? Short put on Circle? I haven't traded this in a while. I mean, it's so tough. Like this thing, look at this thing.
It was one of my bigger losers last year. Yeah.
Yeah, I mean, it goes from 300 to 60, and it's just like sputtering around at this low level. But
yeah, that move from 140 to whatever it was, that's the one that hurt me actually.
Yeah, it's been crazy. And a Feb short put for 250. I don't hate it. Earnings are coming out Feb 25th. So this is before the earnings announcement. If you go to March, you're going to get a lot more premium but you're going to be in the earnings cycle. So just keep that in mind. But yeah, I mean, if you're trying to pick up shares or share exposure in Circle, like you really haven't had a better time than now. And you can sell a 60 strike or 55 or 50 even, and pick up some premium, get your basis really low relative to where the stock has traded over the past year, and go from there. But again, if you're selling a naked put in a product like Circle that is at the bottom of its barrel, you got to be willing to assume the risk of shares if it does continue to slide. Otherwise, you might as well just sell a put spread if you're not willing to do that.
Yeah.
For the MES strangle, if it reaches 50% profit before 21 days, would you roll or close and wait? If it goes against you, would you roll to the untested side? Is there a point where you'd exit the untested side? So, yeah, I mean, if we're at 21 days and we're at, 50, 60% profit, then yeah, I'm just going to mechanically roll. Or even before, if we're at 28 days or 29 days and we've collected 50% or 60% profit on the position, then yeah, we can roll and just stay mechanical. We're always going to prefer to roll into sell-offs because it's going to result in a higher net credit with a nice little vol pop. That's what we did a couple days ago. But yeah, if we get tested to the downside at 66.50, I'm going to buy back this March, roll it to April or May, and I'm going to move it down 200 or 300 points for a small scratch or small credit. At that time, I'm also going to evaluate what kind of premium I might want to have on the upside. I'm sure there will be decent enough premium to where it still makes sense to have the short call on. But if we're in like a market meltdown, maybe I wouldn't. Maybe I would just hold the short put and call it a day and see if and when we rally back closer to that short put and then reestablish the short call. But even into big sell-offs, the short call premium is still going to be there, and it's not going to hurt me with the assumption that if we do get a reversal back up, I'm just going to move the whole thing up and move with the market to the upside. But yeah, we'll cross that bridge when we come to it. But it's really just going to be subjective to what's going on in the market at that point in time. Let's see. Tesla. The only stock in the world that's up today.
Yeah, it feels like it. It's been grinding up. It's been grinding up pretty much all day.
Yeah. All right. Manny's long shares. Been selling call ratios on up days. Nice. Converting to credit butterflies when it goes down. Want to sell a call ratio today. How would you pick between a May 495.10 or a March 470.480 for this? So May feels a little long. 20 points wide, 495.10. Picking up $1,700. I think if you're going to May, why not do this? Why not go make a 495.40 and pick up $500? Like, if I'm going to May, I want to give up a lot of that premium to make this super wide and give myself a huge profit potential to the upside. So that's me. If I were doing something like this, your upside cap is at 600, which is pretty crazy. So if I'm going to May, I think making it wider makes more sense. If you're going to March, that 470, 480 is, let's see what the credit is. Same kind of story here, like picking up $1,100. It's similar to just like selling the call here for 480, the 480 strike for $1,400. I don't mind this, but I might do a similar thing, like make it 20 points wide, pick up $6, give yourself $2,000 of share profit potential versus just 1,000 with a slightly higher credit. Do you have any thoughts on this? Similar, different?
Yeah, I'm kind of the same. I mean, I would, it's always interesting when you're looking at like, short, a little extra upside in Tesla, which can obviously make big moves, but I think it's a decent time to do it without the catalyst and, collect a little little something.
Yeah. Either way, it's a nice place to be if you have shares that are profitable. But I do like the idea of, and really, I get what you're doing. If you're selling a call ratio and Tesla sells off, if you have a 470, 480, it's going to be a little bit easier to buy this 490 to turn into a free butterfly. But still, if you have a 470, 490, you'd have to buy the 510 to make it a free butterfly. And that 510 is going to lose a ton of value if Tesla sells off as well. So you're probably looking at a similar thing, but I'd always rather have a 20-point wide free butterfly than a 10-point wide free butterfly, of course, because your 20-point wide can give you a lot more value prior to expiration just because it's twice as wide.
Mm-hmm.
Is it just Andrew, or have I sounded a bit more bearish lately? I don't think so. I'm still a permable. Don't get it wrong. I mean, all of these positions are ultimately bullish or neutral. CL, slightly bearish now. It was neutral. MES, going to be bullish there. It's neutral right now. GLD, bullish. IBIT, bullish. Intel, bullish. Meta, bearish. But this is going to be worthless.
I mean, if we weren't bullish, we would structure those year-long trades a whole lot differently.
Yeah, for sure. But yeah, Microsoft, bullish call diagonal, MU, the Super Bowl couldn't be more bullish. Actually, no, this is an Iron Condor. I forgot about that. 400, 300. So this is naturally short because it was neutral. Nike bullish, Nvidia bullish, Palantir bullish, silver bullish now after a 25-point sell-off. But yeah, I've got a ton of bullish positions here.
This is amazing. I'm sorry. I just can't stop looking. Like, it's so many things. So like this crab that I was queuing up in GLD, I just got it queued up so that when, like if price falls or whatever, I can get a chance to get it. Mm-hmm. It is all over the place, man. It was like $6.50. Then it just jumped up to $7, even though the stock is $2 lower. I don't know, $2 or $3 lower from when we initially looked at it. It is wild. My God.
What strikes you looking at?
Long the 460 in March, and then 15 points wide. Short the 475 in Feb, and long the 490.
Yeah, I like it. Yeah, these markets are chopping.
I know. That's why I'd rather wait. Honestly, I'm probably going to wait till the end of the day. Now that we have that 500 calendar spread on, I'm like, I got something on. Let's just see if it gets crazier towards the end of the day, which I feel is, a slight possibility. And then you can actually just rearrange strikes, right? And get the actual strikes you want, at least at the end of the day when this thing is either made its move or whatever.
Yeah. And the nice thing, like, it would be nice if we had more narrow bid-ask spreads, but at the same time, because they're wider, you can just set your price and then see if you're filled. Like, GLD's been flying around. If you set this, it's trading at 660 right now. If you set this at $6 or even less, like you can just have it in there. And if GLD drops 10 points, you'll probably get filled. And that's going to be a better scenario anyways, because you're going to be filled at a lower price point. So yeah, definitely nice premium in there, of course. But yeah, we'll see what happens throughout the rest of the day.
Yeah. Good Lord.
Couple more questions here. How do you guys personally make an assumption? Good question. It depends on the situation, but like, I would say my core assumptions are pretty barbaric. Is price down? Yes. Then be bullish. Like when we were trading micro crude or even like Tasty FX, we're looking for price extremes and we're taking the other side, but we're taking the other side in a small way to where we can withstand any variance. So like micro crude, historically, I was buying contracts when it would reach like 60 and just holding it. Eventually it rises above 60, you close it. I think Microsoft's a good example. I want to get bullish Microsoft for sure. I want to see how the market shakes out the rest of the day and into next week. But like, if you ask yourself a simple question, do you think all of the components of the Mag 7 will eventually reach their previous highs in price? My answer is yeah. So Microsoft is a great candidate for a bullish position if you're willing to take the risk, in my opinion, because it's at 430 and it was at 550 3 months ago. Google, on the other hand, like, where would I put my money? In Google at all-time highs or Microsoft well off of highs if I'm bullish? Microsoft is my answer. So that's kind of how I approach it. And then once I have a directional assumption or a neutral assumption in a stock, I then go and I determine what kind of strategy I can deploy based on my risk tolerance, which is if I'm doing a diagonal spread or calendar spread, I like to keep it around $1,000 or less. And if I'm doing an undefined risk strategy, I want to be able to hold that position regardless of what happens in volatility going forward, which means that stock has to be under $100. Or in the micro mini futures situation, I know I'm going to hold this the whole year, so I can get a little bit more leverage there, and it's less volatile naturally. But like my only other undefined risk positions are in IBIT and silver. Both of those around $50, $60. Silver's at 80, but I can hold those trades even if they both go to zero, which I don't think they're going to. The risk there is still palatable. What about you?
Same deal. I mean, very simple on making assumptions for the most part. I do try to, like, in the case of something like a silver, you do try to keep a level head, right, and not necessarily chase, and figure that at some point there is going to be an equal and opposite move to the other direction, and so you just try to like not jump. That's one of the things that I've changed. Like I try not to jump in with in those situations where there just seems to be the crowd is going all one way. I try to wait for the right time to be contrarian. And again, I've been talking about it as it made this crazy move up. As it got crazier, it got more interesting to me because of that, right? So that's the other thing I'll do. But yeah, for the most part, very simple assumptions. I mean, again, if something is down, it looks like an extreme. I do pay attention to, I guess, crowdsourcing in a way, and paying attention to like Twitter is one of those things. Seeing how many people are talking about something makes it a lot more interesting to me.
100%. Well said. Last question here. With 1 minute left, what do you think of an Intel strangle 35 days out? I was expecting these markets to be a little bit wider, but 35 days out puts you in a weekly cycle, which is usually less liquid than the monthly cycle.
It's there in March. I mean,
yeah,
for people who want to do it.
Yeah, the same strikes, 40, 55. You're picking up a little more premium in March, but you have way better markets in March than the weekly. So that would be my only comment. But yeah, either way, if you're just covering the expected move, I don't hate it. It's a small price product, so you can withstand the variance there. And you're still dealing, even though IV rank is lower, you're still at a 60% IV, which is plenty of premium to offset intrinsic value risk down the road. So yeah, I don't mind it. I have a leftover long call though, so I want to rally. So if we're both positioned that way, maybe it'll work. That's it. Thanks for tuning in. If you've got any further questions, you can find us on Twitter. I'm at Trader Mikey B. Jamal's at Jamal Chandler. Stay tuned though. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. Check out the referral program, tastytrade.com/referral. If you bring anyone in, again, and they deposit $2K or more, you both get $100. So check out the landing page linked at the top of the YouTube chat. But yeah, have a great rest of your trading day and weekend. We'll see what happens with silver. I imagine, given the move today, we are going to see some crazy Sunday futures open prices and some implied prices over the weekend as well. So definitely will have my eyes peeled for that one, but keep the risk small. Make sure you can withstand any and all variance if you're taking undefined risk. That's the easiest way to approach it, I think. But yeah,
for sure.
We'll see you on Monday, same time, same place, 11 a.m. Central. Peace.
See you guys.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Let's go. You wanna see? Turn it up.
What is going on, everybody? Welcome back to Risk and Reward. Today's Friday. It's been a really volatile week. We got more volatility in the metals here, which we'll touch on in a moment, and across the broader market as a whole. But before we get into things, hope everybody's doing well. Let us know what you're looking at, how you're managing your positions. Brother Gus, how we doing today? How we holding up?
Excellent. I'm doing
That's what I wanted to hear.
it is Christmas morning for me this morning. I feel so vindicated. It's finally happened. I knew it had to happen all along. Right. We were finally getting the big drawdown in metals. Drawdown, correction. There's a few different words we could potentially use here. And this does not seem like it's going to be a temporary one, as we've seen in the past. I think we are going to hold these lower levels to an extent. So yeah, I'm feeling good. I'm a happy camper.
No, maybe we've finally seen the crack that we're all waiting for. It'll be interesting to see how it kind of pans out. What a run these metals have been on. So I'm curious about how the kind of snapback or that dead cat bounce might kind of look, whatever it might be. But the volatility is definitely there, and I'm glad we finally got the crack. So we're going to call it the relief crack, because I'm sure many others were in the same boat too. So it'll be just managing these positions from here on out. So that's definitely been top of mind.
Yes, there's no doubt in my mind that we will get a dead cat bounce of some sort. I don't know. I believe that the broader run is over. I don't know that we will eclipse higher highs, but I do think that we'll get some kind of bounce into next week as people stream back in to buy these things and try to keep the dream alive. But I do think the dream is dead.
Yeah, for the time being, at least. I mean, good Lord, let's bring this up and get a look at how these metals have been moving. There we go. Yeah, as you can see, SLV, one of the names we've been keeping an eye on, just an absolute massive move to the downside. And interestingly enough, these last couple days, I think today chat, correct me if I'm wrong, guys, but I think it's the third largest down move in 60 years in silver, if I'm not mistaken, so far today, so far. So some record times we're looking at in terms of directional moves that we're seeing in these metals. And no, I mean, it is a nice one for the year, Gus, right? I'm sure it's working out really well on your end, but these positions really came back on my end as well. So it was kind of nice to recoup some of those initial losses, I think, earlier this year on gold. Even sitting in this Netflix position and just some of those other ones, didn't really think silver would be the one to really scoop up all of those other trade ideas we had put on too. So it is a nice one to start the day, at least.
Yeah, for sure. It's I as everybody knows, I tried to short silver 3 times unsuccessfully amid the run up, but as it just continued to run up higher and higher, and this line just continued to become more and more vertical, you're forced to figure that whenever the collapse comes, it will come in even more dramatic fashion as well, which is what we're seeing today. So I wouldn't say that I was necessarily doubling back down every time, but I did slightly scale up the position size each progressive time that I was trying to get short. The first time I knew I was trying to catch the flying knife, it was very small, which gave me a lot of room to kind of increase the position size by about 20% every time, and still stay within my comfort levels for what I can tolerate within my portfolio. And so I am largely short silver right now. I have a naked 70 to 65 put, which I'm going to be taking off before the end of the day for sure. We really don't seem like we want to hold this 78 level. There keeps being these little slightly lower and lower dips down to the 77 range on SLV. So would like to see this, I don't know, maybe touch 77, 76 like that. Or if we get back to 80, I will be quick to liquidate those. I'm not really going to try to get too cute or up, I don't know, some orders of magnitude, 3, 4x, something like that on those. And additionally, I have a 103, 101 short call vertical. So just needed to stay under 101. That's 3 DTE February 2nd, which is Monday, obviously. So I'm just going to let that ride until Monday. I would be so shocked, but also do think that it is a non-negligible chance that we open up over 101 on Monday, just with the insanity that we've seen with this.
Yeah.
But when I say non-negligible, I put that in the ballpark of, I don't know, maybe 5%. We're talking very serious tail risk that we could possibly rebound that much. But I'm willing to take that chance and let these grind down for max profit. About $40 notional left on the bone, and I want all of it. I've lost too much. I must get it all.
No, I mean, you're really in the driver's seat in this type of position, right? I mean, taking the positions off, into the lows today. I mean, into the later days, whenever the market's closing today, I'm sure we're not going to see any strength coming into the market. I'm kind of in the same boat. I mean, a move above 101 would be really aggressive, although we've been seeing a lot of volatility here. So that's nice. You're in the driver's seat, so you kind of just get to decide on how you want to manage the position.
To acknowledge chat, we do have a rebroadcast tag on this. I don't know why. This is very much live. Hello, Big Deal. Hello, E-Media. This is real. This is real live stuff happening right now. We're in the here and now.
Put a spoon on your head right now, Gus.
Yeah, right.
I gotta prove it.
Prove that you're real, man. In the age of AI, put a spoon on your head is a dead thing. I don't even know.
Right. We need a new one.
Yeah. What is there something that AI is not allowed to say? I love you. Like, what can AI not say? I don't know.
I know we still have those detections, right? Whenever we're trying to log into a new account or a device, sometimes it'll give us click the 3 bicycles that you see.
Yeah. You want me to? I can solve a captcha real quick. You guys want me to whip out a captcha on my phone? Put it up to the camera.
No. Real broadcast right now. We're live. Our silver's trading at 78.73 right now. SOV, that is. And let's go through the rest of these positions. We had a little bit of QQQ on. We sold an added limited call spread there, so we have a little bit of short delta on in the overall market. It is 21 days left till expiration, so we can decide maybe we want to roll this one, maybe we want to take it off today, or maybe we want to, just take it off and be patient and redeploy the capital elsewhere in a different asset, or if we want to redeploy it into QQQ. But it is 21 days left till expiration, so we're going to have to decide on that one at the same time. We got some semiconductor exposure on right now. This position is still near break even. Sold an added money call spread. Got some short delta on in there. 49 days left to expiration, so we got a lot of time. And then Netflix, good old Netflix. 21 days left to expiration. Not much we can do here. Our hands are kind of tied, but Netflix is one of those positions that has kind of been dead to me for quite some time at this point. So we're gonna let Netflix play out and see where it goes from there. But it's been a little anticlimactic on my end for the Netflix position.
Yeah, definitely a bumpy road for Netflix, in which I am still long. I still have my VIX shorts on, which are still 40-60 TE. Happy I gave myself a little bit of wiggle room on those. But we're pretty much unched on those at this point as VIX starts to work back down just a little bit. Still chilling in the mid 17 range, but not over 18, approaching 20 like what we were seeing yesterday. And yeah, I mean, outside of the silver shorts, it is a lot of red in my portfolio today, apart from my Nancy Pelosi stock, of course, which is flying. Yeah, catching a nice little move on Resolute here as well. But outside of that, yeah, a lot of things sliding on me. But it's all things that are so far above the range that I need them that it's really no cause for concern in the macro. It's just a bad look on the day. But we are slightly green due to how deeply short silver we were here.
No, 100%. I love that. A lot of volatility in these markets. We'll continue to keep an eye on gold and silver. Let's take a look at this watch list, see what else has kind of been moving on us. Metals has just been taking the headlines for the last couple weeks. It's been hogging the headlines. Maybe we get some other movers.
It has. I'm actually so excited to not talk about metals.
I mean, I think the entire year so far of 2026, we've just spoke about gold and silver into the new year.
Yeah, maybe more so than I even care about my positions. I just hope silver doesn't
at this point
crazy level, just so that we can stop talking about silver, because we have to do this every single day.
At this point, just know the gold and silver positions are in the portfolio. Just know they're in there. No, with that being said, some more movers that are down on the day. We got WDC, Western Digital Group, 10.5% slide today, especially after such an insane rally we've seen.
Yeah, Western Digital is they're a storage company, correct? They're like a hard drive manufacturer.
I wouldn't be too sure.
I believe I have that, but yeah, I know SanDisk is flying, so perhaps just a sector sentiment move there. Although I actually don't know what SanDisk is doing today specifically.
SNDS. I think SanDisk was SNDSK. Yeah, there we go. SNDK.
Yes, continues to fly. Opened way higher and has drawn down a little bit. But yeah, SanDisk is one we haven't really acknowledged as much as we probably should have in the past few weeks and months. A rally that somewhat mirrors what we've been seeing in the metals, and just absolute insanity since September for this company. Up over 100% now, I believe. Well over 100%. I mean, if you go back to just last August, this is a sub $50 stock. We're over $600.
Wow.
Then just back down just below
that's a sleeper
levels
for
now,
sure.
But craziness.
No, what a wild move. Just looking at some of the strikes over here. I know the March 20th cycle, it's showing us some $10 strikes. I think this is something we're gonna have to keep on the radar at the same time. Some of these names after they start to calm down a little bit here.
This is one that I was kicking myself for not getting short this off open this morning. That move felt like way too much, but this was just another one where I didn't really want to step in front of the freight train here. It's been moving with zero regard for pretty much anything, just flying straight to the upside. Definitely would have been some good short opportunities to get contrarian here this morning, but with how much the silver was printing, I decided I wasn't going to try to get cute, and that was the wrong decision.
Hey, maybe it'll come back. Maybe it'll offer us more opportunities. I'm glad we at least have this one on the radar. Same with WDC. They both have some pretty solid implied volatility, and at the same time, very liquid products. 25 million shares traded on the day already. Lost the silver short put spread.
Got me laughing in chat talking about next screen banner filter is going to say future casting January 30th, 2077.
I'd like one of those. See what these positions are going to be at.
I'll tell you what's funny about that is if we did somehow do a future broadcast from 2077, would any of that actually be tradable? Like, you obviously know what's going to happen in the future, what's going to be popping. Maybe there's something that IPOs 10 years from now that we know is a 50x by that time, and you could know to get in an IPO and hold the bag. But like, not really going to be anything actionable for today. We need something like January 30th, 2030. We could start to make
not too much for today. Anything outside of gold and silver, what would you buy 30 to 60 days ago if you knew how they were going to pan out over the next couple months, other than silver and gold? Is there a name that would pop up in mind? I know Meta panned out really well.
You said how many days ago?
Let's go, 30 to 60 days ago, the last month or two.
I mean, I suppose SanDisk, as we were just talking about, comes to mind pretty quickly.
Meta has been moving really well. I know you had that Meta position as
I
well.
did buy that 30 to 60 days ago. So
Yep, you did. You actually pulled the trigger on that one too, so that one's nice.
call me
That's
the
nice.
Oracle. I would have sold my UNH.
Oh, right.
And yeah, maybe liquidated my Paramount as well. But I don't know. That's a fun question. That's a good thought experiment. I'm not too sure. JP Morgan has been on quite the run.
Some of the banks.
Yeah,
catching the bid.
there was just her name escapes me right now. There was some member of Congress who bought some JP Morgan last August and then had just sold it and disclosed it like way past when you're supposed to disclose things, and the fine was very menial.
Wow, maybe
ASML. ASML could be a good one.
ASML. Which one has this one been up to?
A future cast I would pay for. This is we got to get on this, guys. Let's figure out. We have to figure out time travel, and then also figure out how we can beam that information back. Or perhaps we could just record it, and then I could throw it on a SanDisk hard drive, which will be $10 million, and just bring it back with us.
If you were to short NASDAQ right now, what price would you look to buy back if it were a scalp for you? We'll jump over to the TradingView platform here in a moment. I know the market's been so aggressive to the downside, so maybe we can look to see if we can find some long targets for at least a short-term move or something along those lines, depending on where our value areas line up. We'll take a look at it, Brandon.
Hey boys, I was looking for a way to short SanDisk after WDC's pullback. They're the same for the most part, moving in tandem up until today. Yeah, I mean, I think it's just, and SanDisk, I mean, from yesterday's close still is just way up. You sort of expect things to, start to, when you get this type of gap, that's the type of move that I usually like to try to get short into. It'd be really hard to sustain that momentum when you're talking about $100 gap to the upside overnight. That's going to be pretty hard for those gains to hold on. But yeah, I definitely should have gotten involved and sold some premium there on SanDisk earlier today. And I'm not surprised to see WDC moving down alongside it.
It's so interesting to see so many assets and so many different underlyings resembling a parabolic type move with such like a blow off type behavior at the top of these moves. It's just kind of interesting. We're seeing so many of them at the same time. And not to continue to circle back around to gold and silver, but seeing those type of behaviors in something like in a commodity like that is just even more impressive. But just looking at these other underlyings, man, a lot of parabolic type behavior going on, which can make it really difficult to manage some of these positions. See if I'm debating at myself. Hard to know when the momentum parabolic move ends fully, 100%. Again, I gotta say, I think it's one of the most difficult trades because these parabolic moves, the risk to reward isn't so heavily in your favor, but you can't really see that in the time being, right? It's like it starts off by wanting to chase the long side at the highs, and it just continues to parabolic higher. So it is just one of the most difficult, in my opinion, behaviors to trade and manage.
Yeah, absolutely. And it's just, and it's hard too when it's not when it feels a little bit more substantiated, when it's not an earnings report or something, but some other catalyst event that drives these things higher, I'm usually less inclined to try to step in and get contrarian against the giant moves to the upside or the downside. But when you have I feel like it's much easier to evaluate when there is a binary event and you had expectations headed into it, and and you have a good picture of what should happen in every circumstance, and then one of those circumstances transpires and it what you expected to happen does not happen. It's much easier for those alarm bells to start to go off, and I'm more inclined to try to get short in or long against the moves in those spots than I am in a situation like SanDisk where it's just like, oh, holy cow, what's going on. And yeah, I mean, definitely learned some lessons trying to short silver all the way up as well, although I have that has finally panned out for me here.
I think a lot of people did.
To your credit, Big Deal was talking about ASML in the bad trader days. That's absolutely
it was in the days. I mean, ASML, that was definitely prior to 30 to 60 days. That was a good one. 12 months. It's like 12 months, 12 to 18 months. That was a good call. Let's go ahead and jump over to this TradingView platform, see how the volatility has been on NASDAQ. Let's check it out. It's been a really choppy market. We haven't really done much for the day. Kind of just been observing. I think for the most part, silver and gold is really just taking that attention and deciding on how to manage that position. But we haven't done too much over here, but we can see that the market has been trading around the same levels of value that we've been looking at all week, now kind of trading beneath the point of control. So this is going to be the point of control for the last, 14 days, I believe, if I'm not mistaken. So 25,705 represents the price level that had the most trading volume or most trading activity. So we can consider that the price level that the market showed the most quote unquote interest at. And what that means to you is going to be different depending on how you view the market. But we're still selling off near these lows. And circling back around to the comment that you made, Brandon, would love to see how the market responds around 25,558. There's a couple of reasons for that. Let's zoom out a little bit. Let's go to the 5-minute chart, aggregate some of this data. Around 25,558, not only is it our value area low, not only is it our main value area, but also we have a very prominent swing low that we put in there. I think that was just yesterday. So I want to see how price responds if we come down here and sweep these lows. Are we going to get a lot more selling pressure? Are we going to get a little bit more buying pressure? Maybe we can decide if we want to get long or short from here. But that's going to be the next level we'll keep an eye on, our next area of interest, if you will. And the market's still volatile to the downside, and we still have a couple hours left of market open, a little more than a couple hours left. So I think it's pretty reasonable to at least expect a potential opportunity. So we'll see how it responds. Coming into some key levels for the most part. We pull up the VWAP over here. We can also see how, there we go. We can also see kind of how the VWAP was playing into the price action for today. Not something that I like to use all the time, but it is always a nice reference point just to see where the volume weighted average price was at. And whenever we traded back into it today, after we put in a new day low, you can see we got more seller aggression coming after that, sending us back into this level of value. So again, once we get down to this value area low, it'll just be interesting to see if we can expect a mean reversion or a continuation. But with how much we've sold off already, continuation would be difficult. Not that we can't continue to sell off even more. We've seen the market put in 500-point ranges, 600-point ranges. Will we see another range like that back-to-back days? I don't know. Is that very common to even see? Probably not. So I'd be a little bit more inclined to look for the long first. But at the same time, it's like whenever price comes to these levels, we'll try to stay as objective as possible. But it's like some of these things are going through the mind whenever we get to a key level of interest. So we'll see how it responds. It's just been a lot of volatility. This morning was so choppy. Right. I mean, we were taking out the highs, we were taking out the lows. So if you're a range trader, maybe you got some more opportunities within this range. But other than that, very difficult market, in my opinion, to trade in. Nothing that I felt super convicted in. So just been sitting on my hands for the most part today. We'll see what we get.
Yeah, absolutely. And yeah, man, SLV just continues to crater. We were at 78 when we started this stream. We are now under 72, put in the mid-71 range, just continuing to grind down. New Home Nation, you are welcome for the ZSL idea. I found ZSL as a product that exists at pretty much exactly the right time with all of this. I'm actually kind of glad I didn't know it existed the first 3 times that I tried to short silver. I only discovered ZSL once the time was finally right to get involved with that.
Don't even want to look at silver anymore because now it's going to be a little bittersweet now because all those positions are off. We're selling off even more. I know those premiums on the puts are getting pumped right now. So at this point, man,
it's insanity. I mean, yeah, we're going to break below 71 here. I mean, just collapsing. But I mean, this is what I expected, and this is kind of the warning that I was issuing this entire time was that there was so many, obviously, because the price continued to push higher. There was so many people buying at the 80 level, at the 90 level, and so as this continues to work down, the panic selling is only going to compound on itself as all of those people who were buying at levels that were probably too high begin to try to get out of this. It all just compounds on itself.
It's like unraveling right now.
Yes, absolutely. I liquidated. The only thing that I have taken off the board is half of my ZSL. If you guys might recall, I got in at $14 notional a contract on those, which was super duper cheap. So I was able to put 10 of those on. So I've gotten out of 5 of those, still holding on to the other 5. Maybe looking for the $3 level on ZSL itself. And then SLV, yeah, actually nice little bounce here, back up to 74. We're flying all over the place. But yeah, now I just sort of continue moving the goalposts here. I think now I'm at a point where if this SLV gets back up to 75, I'll probably go ahead and take off this naked put, being 7 DTE. But if we continue to work down, I will just continue to move those goalposts downward, a mental stop loss, if you will. I don't have a tangible stop loss on tied to the underlying, but that's where I'm at there. I am going to go ahead and take off, I don't know, 2 more of these ZSLs right now. I wanted to have this many so that I could scale out. So let's I'll go ahead and go for that right now at
Nice.
30.
A little bit of management into these lows.
See if we can get a fill there. Actually, I'll do I'm willing to go down to 28 to see if we can get a just nice little ding ding, nice little 100% there on those 2. And then we got 3 fires left, purely playing with house money now. So that's where you want to be.
Ah, what a good position to be in. Absolutely, just fully in the driver's seat in that position. I love it. Good stuff.
Yeah. Destiny said block is a thing. I believe he means XYZ, which I still call Square.
I used to trade Square so much. Square used to be one of my favorite products to sell premium on. The first year that I was trading options, it was Square and another name I forget that were trading very correlated with each other. But it was always a good product to trade. Really, really volatile. Crazy to see it's XYZ now.
Square to block, it's like what are they getting at there? They added a third dimension if you think about it, because a square is a 2-dimensional object, but a block it becomes 3-dimensional. So what are they trying to tell us here? These are the questions.
These are the real questions. There's a bigger picture at hand here.
Would anyone play AMD to the downside? We can take a look at AMD.
Let's take a quick look. AMD hasn't been getting a lot of love lately.
It is not. Yeah, I guess I'm inclined to say probably not. At a glance at that chart, there's a gap that needs to be filled at the upside. It's dangerous to short any AI names in this environment. Seems to be pretty good historical support at that level as well. Well, I guess there's a big gap to the downside that needs to be filled as well. So throw out my original point, but there does seem to be good resistance here. Yeah, I don't know, with the sell-off that we have going today, but there could be potential for some short-dated short positions in AMD. But I never want to be short these AI names for too long, because it just feels like once a month you have some headline break that drives them higher and saves them.
That's what we've been seeing as of late.
We could take a look at MU too. Micron. I haven't thought about that in a little while. But I know this has been on a crazy run, and yeah, giving a little bit of it back here.
Let me zoom out a little bit. Big runs to the downside as of late.
Yeah. If you log in a few bad days in a row here off those highs. But yeah, still just an incredible year that Micron has been having. I mean, this year, like the past year or 2 years, I mean, the number of things that we have seen, 5x, 2x to 5x their share price seems to be more pronounced than usual in any given 2-year period.
100%. And again, even just pulling up Micron once again, just adding to the basket of names that are ripping to the upside. What else do we have over here? Earnings March.
STX also in the SanDisk and WDC bucket.
STX. There we go.
We have Palantir earnings on Monday. That's something that's on the radar for sure.
Some PLTR. What's PLTR been up to?
This is a wild chart for STX. What the heck?
Again, I think it lands in the bucket of all the other underlyings we've been looking at. Once again,
it does. I mean, yes,
the same behavior on almost all the
incredible run up. But this in the shorter term here, last couple weeks, just a U-shaped situation here. That's so strange. A perfect plateau, really. Vertical up, and then we're pretty much vertical on the way back down. Interested to see how far that falls.
Oh, we will. We are coming down to the wire here now. We'll see if the market wants to respond at around this value area low, so we'll keep an eye on it. But we are coming to a close here. Anything else top of mind? Gus, I know silver, you'll be managing those positions, but anything else before we wrap for the day?
Looking into next week, it's Palantir earnings Monday, it's Pfizer Tuesday, it's Google and Amazon Wednesday, Thursday, in no particular order. I believe it's Google Wednesday, Amazon Thursday, but don't quote me on that. But the earnings craziness only continues into last week. A lot of those market maker stocks are reporting, and we could see some big moves one way or the other. If Google goes off Wednesday and reports great numbers and flies, we could see a big day Wednesday, and then if Amazon follows that with a bad earnings day, we you could see that pull right back. So, or vice versa. So expecting to see a little bit of volatility as we head into next week. Whether that whatever direction that it comes, I'm not sure. They could also both go great, and we could just see things chase higher highs. I'd love to see SPX hold over 7,000 for more than an hour. That would be great.
Yeah, it would be nice. It seems like Michael Burry's PLTR position should be panning out really well in his favor as we looked at the market and PLTR being at its lows. So it's not near its highs right now. So it feels like it was just yesterday we were talking about Michael Burry making those comments, putting those positions on.
I'm on the record before and after Michael Burry saying that PLTR is fairy dust to me, and that I love
valid. I remember it.
And I don't agree with all of Michael Burry's theses right now, especially his short Nvidia. I don't know how much I buy into that thesis. Comparing Nvidia to Cisco seems to be a little bit crazy to me. But Palantir, I think we've been ahead of the curve on that one for some time, and I'm not surprised to see us stagnate a little bit and maybe let revenue catch up to valuation.
Agreed. I love it. Love it. That's going to do it for today's segment. Steve, Tay, Edward, Arjun, everybody else, thanks for taking the time. Big deal. Thanks for taking the time to hang out with us. We'll just manage these positions. We'll see how gold and silver pan out. A lot of volatility in the market right now. I think just keep first and foremost just risk management through these volatile times. That's going to do it for today's segment. Thanks for taking the time to hang out. Be sure to stay tuned for more segments coming on next. We'll catch you guys next time. Peace.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Rise higher, ye Taurian markets, I will thee ride. Oh, let the horned bull now be thy guide. Increase the yield, as the longs have long planned. Be not inert in flowery field like Ferdinand. Reward the longs their bulldog-like persistence. Like Lord Michael of Jordan, soar beyond resistance. Reward those who see upside positivity, as if in some ill-advised Pamplonian activity. Trip thy hooves o'er trading streets most stony, cobbled with the confidence of masters Tom and Tony. Climb with ease the line of Tim Knight's profit chart, and with thy rise make proud Slim's technical heart. Gore the matador of pessimism with thy horn. Let red capes of resistance now be torn. This market yoke to wagon now could pull to follow up the thundering of the bull. In market glory let us be arrayed. Oh, hear this exhortation now from Tasty Trade.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
And we are back. This is OSP back, still in studio in Chicago. Thomas Westwater there, coming to us from what looks like a basement pickling jar situation. Still, though, in the Chicago,
something like that.
Still, though, in the Chicago area, Thomas, kind of a trip. I'm at the desk, and you're logging in remotely. This is the whole world's upside down.
It's a change up, yeah. But I mean, it is a crazy day. So
boy, is it a crazy day! My God. Let's get right into it because we got to look at these metals. This is a bananas situation out here. If we can go straight to the charts here, that would be a chart of silver. And don't let this ticker here confuse you. I just like these other charts here. But here's a chart of silver. And my God, Thomas, talk to me.
Yeah, I mean, I think this has something to do with the Fed chair announcement, Kevin Warsh. It's the biggest down day for gold on a percentage basis. I'm still looking back. I'm pretty sure at least in 20-25 years. But this is huge. I mean, I've never seen anything like this for gold.
Yeah.
I mean, I'm finding back in 2013 it was down 9%. Yeah, it's a long time. This is pretty wild.
Yeah, I mean, this is a massive move, and for a while there, it looked like volumes were relatively thin, but now we're starting to build back up here. So this is starting to look like a little bit of conviction. Now, obviously, you get to a point when you look at stuff like this where the circuit breakers, at least on the futures side, are going to be a conversation to be had. And I'm just looking here. It's got to be a 10% move within 60 minutes to get a trading halt here. Over the past bar here, it looks like we haven't been able to quite get all that. But let's see. The biggest move over the course of this down move seems to have been about almost 3% down in a single bar, but certainly not anything approaching double digits or even north of 5. So it doesn't look like we're in that kind of an area here for now.
No, and I mean, I actually got long a one OZ contract yesterday, so definitely horrible timing for that trade. I've already gotten out of that this morning.
Me too.
Just want to really reduce the exposure here. I mean, I think a lot of people got out, so it's this is wild too. We're seeing big moves in other parts of the market. So I think it's the Fed chair announcement. He's not the most dovish pick that he could have went with. So that's kind of interesting. He has been publicly saying that rates should be lower than where they are now, but I don't think he's probably like Kevin Hassett. He's going to be more of an independent thinker. So I mean, to me, this kind of shows that the market was pricing in a Fed chair that was going to be less independent and something that's kind of unprecedented. So, a lot of this coming out of gold, I think, was hedging against monetary instability in the future. And now that risk has been removed. So, you're seeing this counter trend to what we've been doing, and it's huge.
Absolutely. I think I'm with you there, especially on this idea that we are going to get this new Fed chair, and I think the concern was that it would be a Stephen Meehan type of situation where, regardless of what the policy objectives might be dictated by the data, that there would just be a predetermined thing here. And of all the options on the table, I mean, the finalists it looked like were Hassett, Chris Waller, and Kevin Warsh. Of the bunch, Kevin Warsh is by far the most hawkish historically. And what's interesting as well here, he's an acolyte of Stanley Druckenmiller, the great Stanley Druckenmiller, and has been working at his home office. Now, of course, Stan Druckenmiller is someone that's very respected, and rightfully so, by the markets. Scott Bessent is another acolyte of Stan Druckenmiller. And so with him at the Treasury and Kevin Warsh at the Fed, there is perhaps a sense that there is a degree of sanity in baseline economic policy that seems to be emerging. Obviously, we don't have the absence of that with Bessent and Powell, but the president clearly has friction with Powell. So if that friction were removed but sanity maintained, I think the markets would look at that and go, okay, we don't need to be so concerned. The dollar is up pretty considerably here. Not obviously the flip side of what's going on in the metals. The metals are absolutely melting down, but you can see here the direction for the euro just as a baseline for what the dollar is doing. It's not quite crossing any Rubicons yet. I would say my line in the sand here is this high here, right around 118.60, let's call it. But the dollar is stronger on this.
Makes sense.
Yeah.
Confidence is coming back in. Cooler heads have prevailed is some way to see it. I don't know. Has Trump, has he said anything, reason why he picked this pick instead of Hassett or Marin?
The statement that I saw didn't mention why he picked Warsh over Waller and Hassett. He did give all of them their kudos though, and said it was a tough call. What's interesting, I think, here is, of course, the president referred to Warsh as looking like he's from Central Casting, as though that matters. But the president seems to like that kind of thing. So, okay, cool. We know Kevin Warsh has been at the Fed. He was a Fed governor for 5 years. He was there during a very tense period. Obviously, he was there during the Great Recession and the Great Financial Crisis. It took him a while. He was relatively hawkish. It took him a while to come around to needing to cut rates, but ultimately, as the situation got there, he was a vocal supporter of cutting rates to zero, of doing the first round of QE. So he doesn't seem like an ideologue per se when push comes to shove. And that's a good thing. The coverage today of what Stan Druckenmiller himself said about this, because now both of his guys, essentially people who studied markets under him and around him, are going to be part of the administration and then also at the Fed. He said it would be wrong to assume that Kevin Warsh is universally hawkish. And that's probably why he got the nod for the job here. It seems like he's willing to be flexible. And that's what you need. Not necessarily just because the president wants rate cuts. You just want somebody who's going to look at the baseline and say, okay, here's what the data says. I need to be intellectually open to all kinds of options.
Yeah, and you know, Trump has said before, you know, he nominates people and he gets told one thing, and then he says once they get the job, they do something different. So I'm wondering if, you know, that was a reflection on his first administration.
Yeah.
So I'm wondering how intentional he is with, you know, what he wants the end effect to be versus what he says puts out to the public. But you know, there's kind of a lack of reaction in treasuries, you know, compared to what
you're mainlining my head here, Thomas. That's exactly where I was going. Go ahead.
Yeah, I just find that odd. I was looking through the charts this morning, and I'm like, you know, you see gold with this gigantic move. You know, you see currencies moving, you see the market moving, And then you look at the ZN and ZB contracts, and even the closer ones to the interest rate sensitives, the 2-year and the 5-year.
Yeah,
they're
here we have the
reacting
5-year
the way
on the chart right here. To your point, it's soggy.
Yeah, I'm curious. I've been trying to think about it. It doesn't make too much sense to me.
It's an interesting thing because, the markets clearly don't think, looking at the price action here, that this is some sort of an autopilot to aggressive easing, because we'd see it here. In fact, let's go all the way down to SOFR rates. Let's take a look at SR3. Let's go to the December 2026 contract here, and obviously this is the price. So the way you arrive at the yield here is you would take 100 minus this quote of 90. What is that? 96.81. And so as you look at this, this little bit right here, that's rates going higher. That's essentially the 3-month SOFR going higher, but not by much at all. And the trend here seems to be relatively straightforward and pointing down. So it doesn't really seem like, at least as far as the pricing for policy expectations, this has changed anything.
Yeah, not too much. I think, the reaction for the market from this is the implications for a policy mistake are greater than, the ability to really drag down rates too far, because that's, if you did get someone that was more dovish than what the data warranted, you would get, you'd only be able to do that for a little bit because the markets would react very poorly at that point. But, that's what I'm seeing, the risk being taken out of gold here is there was hedging against, a Fed that was more prone to make policy mistakes rather than the interest rate path itself being changed.
I think that's spot on. I think what this reflects is not so much that it's going to change the path of monetary policy, but that sanity and responsibility in this very, very important job is going to be maintained. I think you can say all kinds of things about Kevin Warsh, but he is not somebody that, in my mind, represents a threat to the institutional credibility of the Fed. And I think that's the most important thing here. If you're not going to challenge the institutional credibility of the Fed, then let's have a debate about policy. Let's see what the data shows. There's 12 voters on the committee. This committee this year is going to be a little bit more hawkish than last year's committee, just because of the makeup of who's on it. But at the very least, what you have in this role, if Warsh gets confirmed, and get to that in just a moment, that's a fun can of worms unto itself. But if Warsh gets confirmed, ostensibly what that means is you have somebody who has been at the Fed, was at the Fed during a very tough time when the central bank really had to do all kinds of interesting things, and I would say heroically saved the economy from what was going to be a much worse issue. I remember being a trader in 2008. I remember seeing that crisis in real time and trading that crisis in real time. What the Fed did was nothing short of miraculous. And so looking at somebody who was there and was a part of that as the next Fed chair, it's got to be encouraging for the markets, especially after these inquiries into Fed Chair Powell, which is just completely beyond the pale for for an independent central bank. I think it's got to be encouraging, this pick.
I think he will get confirmed. I think the problem is in the subcommittee, because Tom Tillis is saying
that's right.
Until the investigation is complete, I'm not going to confirm. So I'm wondering when or if the market is already pricing that in, we'll have to watch how steadfast he is with, if he's going to hold on to that or not. We'll have to see. I mean, I think they'll get him through, but that could be a hiccup that delays it a little bit.
Yeah, there was a statement earlier today from Deputy Press Secretary at the White House, Kush Desai, who said that the White House is looking forward to confirming Warsh quickly. And Tillis came out today and he had an interesting quote. So before that he was saying, yeah, okay, let's finish this investigation into Powell. Let's put that over the finish line. Today he's saying, if this investigation is stopped, he's willing to vote for this confirmation. He saying Warsh's praises, saying he's eminently qualified. Also, Tom Tillis does not run for re-election next go round, so he's really got no kind of levers that could get pulled. I don't think he really cares. And what's going to be really interesting here is if the White House were to drop this thing, if the DOJ were to say, you know what, we want to get Kevin Warsh confirmed, let's just put this Powell inquiry in the paper shredder and call it that. Under other circumstances, somebody might say, well, so Powell was right. It was politically motivated. But I think for this particular administration, I don't think they care about those optics.
Yeah, I think they'll put this one in the back pocket. They'll let the confirmation go through. That's the path of least resistance, I think. So, to make more of a show out of it after you got your pick, you want to get him in. That's a lose-lose for everyone.
Yeah, I would think so. Looking at the way stocks are reacting to this, doesn't seem to confer a whole lot of confidence. Do you think this pullback in stocks has to do with this pick or something else? I ask primarily because the price action in the metals would suggest that this is, as we've been saying, a vote of confidence in economic policy making. And looking at the bonds, it isn't an expectation that he's going to be overly dovish or overly hawkish. Things aren't really moving as far as policy expectations are concerned. So it's tough to say that stocks don't like a hawk here, and that's why they're down. What do you think this sell-off in the equity side of things is all about?
I think it is related, in some way, but I don't think it's like the main driving force. And I don't know. I'm wondering if the upcoming government shutdown is spooking the market a little bit. But overall, we're down 2 days. Am I going to buy here or try to scoop some up? I don't know. We're 20.4 with IBR. The VIX isn't up as much as I thought it would be, with everything else. I don't know. I'm going to wait to buy here, I think. I just don't. If it wasn't a Friday, I probably would. I might sell a put spread or something. Mm-hmm. I've already got an MES position, a long call spread. So I put that on yesterday. I'm not going to get any more exposure. I got some Tesla long, some NVIDIA long, but I think I'm heavy enough in equities for me.
Yeah, I mean, I still have a little bit of short exposure basically against October's highs in both ES and in NASDAQ. Basically just looking for whatever this was up here to keep holding. And so we'll see. I mean, if it breaks higher, okay. So it goes. I mean, whereas back here, let's go to the continuous contract just to get a degree of sanity here. I was obviously and vocally skeptical of this whole run-up. It looked stretched. But now that we've kind of had correction sideways for several months. I think there's been a lot of digestion. I would not be against or opposed to getting long if this were to clearly break out. I think it's had a good time to digest and reset, and sentiment has kind of chewed this thing over. Not dissimilar here, I think, is the NASDAQ. And same sort of an idea. I mean, I think it tried to break out here, these highs, and now it's, of course, failed and come back into whatever this congestion is. If it clearly broke out here, I'm not opposed to getting on the long side, but for now, these October highs are holding. And so I'm just short against those until.
Yeah, so the high's been rejected. You know, we're selling off a little from there. I would wait, you know, before adding. I would wait for, you know, that previous level to break. I think you have to wait for that. I don't know. Otherwise, I'm not too, you know, if I wasn't long already, I don't know if I'd be too enticed to buy right now.
Yeah.
But we still have a lot of earnings coming up. We have the government shutdown news coming. I mean, volatility, it could continue to go higher. I think I want to keep some money on the side for if that happens.
That makes a lot of sense. I mean, if you kind of look at what the bounds are for NASDAQ, you can kind of get the sense that you're looking at maybe something that is getting a little bit soggy. You've got some negative divergence here on, in this case, RSI, but you can use whatever oscillator you like. They're all going to have basically the same thing on it. I don't really look at them for overbought or oversold conditions. I'm not sure I believe that such a thing objectively exists. But looking at just the arithmetic of negative divergence makes sense. Oh, something is setting higher highs on the price, but when you look at the ratio of closes up to closes down over a period, it's losing momentum just on pure arithmetic grounds, which is what RSI is. Okay, I get that. And so it's pulling back here a little. I would say my threshold to add would be a break under whatever this is. So if we were to, let's say, take out this right here, maybe I would add and see if I could lean into it a little, something like that. But other than that, I'm just going to sit and wait.
Yeah, the one I'm actually kind of interested in the Russell because the intraday price action we're getting right here, we started getting buying once we dropped under the December high, and I think it looks, you know, it's still something I'm not going to get into, but if I did, maybe the Russell.
Yeah. This is a pretty juicy pullback here to a level where sort of natural support seems to exist. I mean, whatever is going on right here seems to be some kind of an inflection. And if you squint here on the daily, let's go to a 4-hour. Well, let's go to an 8-hour. That might be the cleanest. You can almost see a kind of head and shoulders situation right here. It's a little bit cockeyed, but life is not ideal sometimes. Shoulder, head, shoulder. And then if you were to take a look at this, let's say the implied move, see what we can surmise here. If we were to say from here is our distance for the head to the neckline, this would extrapolate down to about here, give or take. So I would say if you clear this support, there's still a good short in here. There's some distance. That risk reward can be okay.
Yeah, whenever head and shoulders are always interesting. I think they work the best for equities. That's,
they do.
You know, my subjective opinion, but you think so?
Again, I wouldn't say I've empirically studied this by the numbers, but my feeling is, yeah.
That's what it seems for me. Yeah, I don't know. So this is a Friday. The Russell is down the most. I mean, so maybe you can make an argument that it does have to do something with interest rates, since maybe the Russell companies are going to be a little bit more sensitive to that. But as long as we're getting economic growth, like what is forecasted, these companies, I think long term, this is really good for the stock market. I think this is a digestion move. We have to, there's some negative sentiment headlines going into the market. I think it's going to be a long next week. I'm actually kind of talking myself into getting a little long the Russell here. I think it could, sentiment could turn around. We have earnings next week. Those could be good. Work out the deals on the government shutdown. Ask yourself how much more risk is going to come in and what could that be from? I kind of see a retracement here where risk is going to come back in next week. I mean, anything can happen. There can be another negative headline from somewhere, but I think that's probably the base case scenario.
Yeah, I mean, I think that makes sense. I am certainly not opposed to getting long Russell here if this is going to hold, because this would be a nice little pullback. I was looking at this breakout right here, which obviously neither the S&P nor the NASDAQ matched. I wanted to get long here, and I couldn't find vol that was priced good enough risk-reward wise to make the thing make sense. Like, no matter how much I messed with different settings for the verticals, either selling puts, buying calls, more distance, more out of the money, you couldn't get better than 1-to-1 risk reward, and that's just not a worthwhile thing in my mind. So I was looking at this and going, okay, probability of profit less than 50% and 1-to-1 risk reward, you're asking for it. So I'm hoping now, if this pulls back and holds, that I basically get a mulligan. I get to go and buy around these levels again, and that'll be fine.
Yeah, I like that view too. The one thing the market is kind of forgot about really quick is a possible strike on Iran that could be coming this weekend. So, the Fed news has overtaken it, but that is still there. So I think looking at oil, not natural gas, but mainly oil, I think the equity market might react to it also, but not a direct impact. So I'm curious to see. It's happened on a Friday before. The administration seems to like doing things, over the weekend when it comes to a military escalation. So this will be interesting to see for oil and what Iran does back. Are they going to try to block the Strait of Hormuz, strike regional bases in the area? Overall, I think this is going to keep oil elevated until it happens, but it could be like the strike on Fordham, the nuclear facility, where once it happens, then it's kind of like a sell the news event.
Yeah. I mean, I cannot tell you if this is confirmed information because it's tough to say that it is. I don't see it from the kind of news source that I would say is beyond reproach necessarily. But there is a story out there that a plane full of Iranian government VIPs departed from Tehran, Airbus A321-231, operated by an IRGC-linked airline, left Tehran yesterday and arrived in Moscow's Vnukovo airport today.
VIPs, did they say anyone in particular?
I am trying to figure it out. It's unclear if the Ayatollah was on it. I would not be. It would be interesting to see if suddenly he starts to respond to all of Chris's DMs once he's out of Dodge.
Maybe. How would you feel if, someone was about to attack us and you see all of our leaders getting on a plane, and just piecing out.
Also, that's why I'm a little bit skeptical, right? Because I look at this and I go, okay, if I am a foreign intelligence service that wants to encourage the protesters back into the streets, this would be a story to help that.
Yeah, and possibly target energy, rile them up,
Yeah.
Create a little unrest.
Yes. And so if I was gonna be a foreign intelligence service and I wanted for the protesters to be back out into the streets, the leaving of the authority would be a good story. But I think the Iranian street is very clever, and I think it understands this. So we'll see how this goes. But of course, this was exactly how Bashar al-Assad left Syria, just like this. So unless the Ayatollah is visiting his Assad friend in Moscow, I suppose this is possible. It looks like an interesting set of circumstances. I mean, if this gets confirmed, then the situation could be very different, to your point, come the Sunday open. Looking at crude oil here, we do have a little bit of a tick lower. Now, it's not convincing in my mind. I don't think this changes the game here necessarily, but are you still as bullish as you might expect to have been without this news?
No, I wouldn't really be too bullish if it wasn't for this geopolitical premium priced in. And I think that's going to come out once we attack. Is that what you meant?
Yes, I think so.
I'm trying to see, what am I in? Yeah, my order for crude oil did not fill yesterday afternoon. I was trying to get in.
Interesting.
I'd trade it range for right now, so maybe an iron condor. I don't think we get over 70.
Interesting.
It's just we're looking at supply builds, in the United States, elsewhere. So going all the way into Q2, I think almost every forecaster, and OPEC is probably the most modest, but calling for these inventory builds. I just don't see oil, staying between here, chopping around. But I'd give myself a little more downside for doing an iron condor. But I think the volatility is there to, you got good options. I'm going to try to put this on again since it didn't fill yesterday.
This is an interesting spot for crude oil. So for me, I thought that this is a different geopolitical story than what we were sort of collectively fading over here, you, me, Chris. For example, this right here. When this happened between Israel and Iran, I think all of us looked at it and said, okay, these guys don't want a prolonged firefight. This is not going to be a war. This is going to be a shootout. Everybody's going to do the performative volleying they need to do, and then we're going to call that a day. And so this was a very convenient fade. I think all of us took it and liked it. This, I think, might be a different story. And my sense is that what we're looking at is not a flash in the pan geopolitical type of shock that hits, rattles things, and settles. It seems like the sum total of U.S. actions plus whatever's going on in the Iranian streets is threatening China's supply. Because the biggest buyer of this shadow fleet crude pipe is China, clearly. The Economist was guesstimating in not this most recent issue, but the week before, hat tip to the Economist, that about a fifth of global crude supply is this illicit sanctions busting flow from Russia, Iran, and Venezuela, and of course, mainly Russia. And it makes sense that it would be that large. It also makes sense that the only customer big enough to absorb that much crude from a Russia and an Iran would be China. So and it's not like those are the only places where China gets its crude. It's the world's biggest importer. It does a ton from Saudi and the rest of the Gulf and Iraq and Brazil and Guyana. So in my mind, it's not like China is going to not have oil. They're going to get their oil. The question is, at what level are they going to get their oil? Because obviously the sanctions busting oil is sold for cents on the dollar. So they're going to have to buy at market rates. And in fact, the U.S., I think, has already told them, you can get your Venezuelan crude. We'll let that go out. But you're going to have to buy it at market rates. And so if China is buying suddenly not Russian, not Iranian oil, and it has to go out and buy at market rates from, let's say, Saudi and Iraq, then those supplies weren't expecting to get that demand. And so maybe the glut doesn't look quite so gluttonous, as it were. So maybe that's good for a larger rise in crude. It seems to be taking out some major levels, whatever this down move was from the middle of last year. The series of lower lows and lower highs here has been taken out, and we're sort of stair-stepping higher in a relatively orderly fashion. So I'm watching it closely. I'm still holding long. I've been long since about this breakout here. And when we got this initial pullback on when the president hesitated attacking Iran right away until those assets were deployed to the Gulf, I bought a little bit more. So I'm looking at this continuing to work for now. If there is a plane with the Ayatollah on it that's landed in Moscow, I think you would expect a more significant pullback, to your point, were that to be concerned. But in my mind, I would look to buy that pullback unless it were to cross some sort of red lines.
Yeah, and you know, once the geopolitical premium evaporates, if it does after an attack, I don't think it's over long term because, you know,
yes,
Iran, I think, is going to continue to be a focal point of foreign policy for, you know, at least the next 3 years, it seems.
Yeah.
And I don't know what is sought there. Regime change, that would require more than obviously just military strikes from the air. I don't know where this is going, but I think it's something the market has to keep watching. I guess Trump was speaking today, and he pretty much said a decision hasn't been made. It sounds like they're still considering what to do. So maybe not this weekend. I would look into next weekend.
I think you're right. The thing that constantly kind of grinds on me as far as Iran, and I think that's why I completely agree with you, this is not an issue that's going to go away, even if the Ayatollah has left, even if the IRGC kind of big wigs are out and have themselves a flat in Moscow along with the rest of the rogues gallery. It seems to me that there isn't an obvious successor. I mean, obviously, we're talking about Reza Pahlavi, the former regime's crown prince. That's a possibility. I'm not sure he has the kind of juice to get all of the various factions in Iran, all of the minorities, into some sort of a unity government to write a constitution and get everything together. It's unclear that this isn't going to be something that becomes maybe not Iraq-esque, but more akin to the Balkans, where you have different groups start to pull in opposite directions and you get a Yugoslavia-level situation where the Azeris go this way, and the Parsis go this way, and the Balashis go that way, and the whole thing starts to disintegrate. Obviously, that would be a nightmare as far as regional stability. And so one would be, I think, wise not to over-extrapolate, to your point. If there is regime change in Iran, it's not going to be a simple one-and-done kind of thing.
Yeah, definitely. Kalshi, the odds of the Supreme Leader out before September 1st, 48%. That's down from a week ago when it was at about 70%. So,
yeah. It's an interesting set of circumstances here. Before we run into the end of the show here, we have a little bit of an abridged show. What would you say is your highest conviction idea here going into the weekend? Either something you want to do next week or something you already have on.
I'm still pretty long nat gas. I think, this winter is looking like the midterm forecasting for late February. It's still going to be really, really cold. I think this still has some more juice. I think you can sell put spreads. There's a lot of volatility in here. There's a lot of premium to be had. You can be selective with where you want to go in your duration because there's volume all over the contracts. So I'm staying long natty yes.
What a trade, Thomas. Well done.
Yeah, and that's been the best trade so far for this year. So hopefully we can keep it going. Had a couple last year where, you do good on 2 or 3 nat gas trades in a row, and then you get one that, flips you on your head. Yeah, that's how it is now.
It is definitely the rocket ship of assets sometimes. I would say for me, the biggest idea here was silver. I started selling a little bit when it got soggy, and yesterday I sold some more because our good friend Chris was vigorously arguing with me about signs of maybe reversal here. I was looking at this and saying, you know what, this thing might be looking like it's rolling over right over here, and I think he wanted to go and buy it, so I sold some more and made him a market. There you go. I think this is not. I mean, it's coming back from the extremes. I mean, this is wild. It's gotten as low as 74.
That's crazy. Crazy.
It's just crazy. I got out of my gold position, by the way, this morning. I'd rolled from the G contract out to the J. The G contract was an incredible run, and once we got to about once I gave back about 1% of that P&L, I said, you know what, that's it. I don't want to give away any more P&L. Goodbye. Yep. So now
there you go.
Yeah. So now I'm just on the silver short side, and looking for that to continue. We'll call it there, Thomas. Everybody stay tuned. We have more Tasty Live coming right after this. And of course, I'm going to wrangle Mr. Vecchio here for last call to close out the day, hopefully. And we'll see what he thinks about this silver meltdown. In the meantime, don't go anywhere. Tasty will be right back.
See you, everyone.
So I am going to show you the 5 most important pieces to the option return puzzle. 5 things that have completely changed the way that I trade. Boom. Hey, Jim Schultz here with you guys for another crash course, man. We are back, and this is the option returns crash course. And so over the next, 30, 40, maybe 85 minutes. We're going to work through the 5 most important pieces to the option return puzzle. But more importantly, we're going to work through why these are the 5 things that you need for consistency and sustainability in your option trading. And if you hang with me all the way to the end, in the final piece, we're going to talk about what type of returns you can expect from doing all of this in the world of options. All right, that all sounds pretty good. But with these gimmies, there's going to be some gotchas, as there always is. You might have to completely change the way that you approach the world of options. Which brings me to the very first piece of the puzzle. Prepare to make a 180-degree turn right now. And here's what I mean. I started trading options so many years ago the same way that almost every trader starts in the world of options, by buying options. Whether it was long calls or long puts, almost 100% of traders start on the long side of the option contract. And I mean, this makes sense. Because when it comes to long options, right, you always have the potential for effectively unlimited gains with limited risk. I mean, that's a win-win by anyone's calculation. The problem that I experienced firsthand, and that every option buyer experiences, is lying underneath the surface of these 2 gimmies are 2 formidable gotchas, as we are going to see when we break down this long put trade in Apple inside of the Tasty Trade platform. So here we are inside of the Tasty Trade platform, and we're going to look at Apple for the purposes of this example. Right now the markets are closed. It's actually a Sunday afternoon, and so that's kind of nice from the standpoint of looking at prices and different things. We can examine things more easily in isolation. So right now you've got Apple at 176. Let's say that I was bearish on Apple, and so I wanted to go the more traditional route that most traders start with, which is what we just referenced. I'm going to go in here to the trade page. Let's just say I'm looking at the May cycle with 33 days to go, and I want to buy a put to play and implement my bearish bias in the stock. So maybe I'm looking at the 170 strike put. Now, why I'm choosing this strike and, what the differences are, from one strike to the other, let's not get bogged down in those things right now, because they don't really matter for the purposes of what we're going to work through. So let's say I go to buy this 170 put. So I click on the offer, and you can see this is a long put. You can see I'm paying $296 for it, and it's got all the other metrics. We're going to reference a couple of those here in just a minute. But if I click on the curve view, and I make sure my analysis tab is highlighted, you can see you can kind of toggle that guy on and off. If you toggle the analysis guy, the analysis button on, then what you see is you have a nice graphical representation of what you are up against, or what you have working for you with a long put. You can see if Apple goes down to, again, kind of play my bearish bias in the stock, then I could potentially make a lot of money. If I even scroll over on the screen, you can see this line is sloped upwards, so I'm making more and more and more money. As you can see that right down here, by the maximum profit being $16,704, and that of course would happen if Apple went all the way down to 0. Now, if I'm wrong, right, as we referenced there a few minutes ago, my losses are capped, right? The most I could potentially lose is going to be the debit that I pay on the strategy, or the $2.96. So again, this looks like a really good situation by anyone's calculation. Well, the problem, or problems, or gotchas, I should say, are going to be at least threefold in this situation. Let's look more closely at the break-even point on the trade. Now again, this is the break-even point at expiration, right? There are a lot more moving parts. There are a lot more things happening in the real markets, but it makes the illustration no less valid. I'm going to essentially have to jump over the hurdle that is covering the cost of the debit that I pay before I can make money on this trade. I'm going to need Apple to go down below 170 and jump over the cost that I've paid before I start making money. Yes, I can potentially make unlimited profits. Yes, I can potentially make a ton of money on this trade, but I need to be directionally correct. That's the first problem, because that's really, really hard to do. Okay, the second problem. Look at this theta. Now we're going to talk about theta in just a little bit inside of this very course, but what this number essentially shows me is that every day that passes is going to cost me money. Specifically, it looks like it's going to cost me a little more than $7 or 7 cents on the option price. That's going to be the hurdle that I need to jump over. In fact, it's going to mean the hurdle that I need to jump over is actually getting higher and higher and higher as time goes on. But thirdly, and this is essentially just a summary of the first 2 points that really drives the message home, because I need to be directionally correct to cash in on any of this profitability, because I need to jump over this negative theta hurdle that gets higher and higher and higher as time goes on, I'm left with a very, very low probability trade. I'm left with a very, very low probability entry. Long options are always going to be inferior probabilistic trades for you as a trader. And so be ready for that. Be prepared for that if you're going to take on the long side of the option contract, or you could even consider a different approach. So if you're looking for consistent, sustainable results over time, the truth is this: you're going to have a very hard time getting there with long options. You'll constantly be facing an uphill battle with trying to predict direction in an unpredictable market and overcoming the low probabilities that stem from time working against you. So naturally, you're probably wondering, all right, Jim, so what's the answer? Well, you, sir or madam, are in luck. Because the great thing about the options world and the options contract specifically is there are always two sides, the long side and the short side. And as we've just seen, the long side is a pretty tough go. So that begs the question, what about the short side? Well, that is where everything flips over and everything comes to life, as we're going to see by continuing with this Apple example. Except this time, we're not going to buy that put, we're going to sell that put. All right, so here we are, same situation. Still looking at Apple, same stock price, nothing has changed. We're still in the May cycle with 33 days to go. But instead of buying this put, we are going to sell this 170 put. So if I click on this guy, click on the put to sell, bring up the curve view with the analysis tab checked, let's look at how this situation is different. If you now look closely at what we have in front of us, you're going to see essentially the mirror image of what we had when we bought the put, right? When I bought the put, I was faced with potentially unlimited profitability with limited risk. Well, here I'm going to effectively have the opposite. Limited profitability with potentially unlimited risk, which of course is a very, very significant difference. But look at what else we have. You have Apple at 176. Look at where your break-even point is. You're collecting roughly the same as what you would have had to pay if you bought this put. Your break-even point is down around the 167 mark. And so essentially, if Apple just stays where it is, and it can even afford to go down a little bit, you are going to be in line to keep the credit that you collect on entry. So in other words, you don't need to be right directionally. That's a huge gimme. That is a huge gimme. Okay, secondly, look at this theta number. Now, again, we're going to talk more about theta specifically inside of this course, so I'm just glossing over, the basics of the basics right here. But what this number is telling me, because it's positive, I'm going to have time working for me. Right? I'm going to have time working for me to the tune of about $7 per day. So again, I don't need to be directionally correct. There's no pressure to get the directional move right in the stock, and every day that passes works in my favor. But then, thirdly, look over at this probability. We were at 27% on the long put. We are now at 73% on the short put. The probability of profit, the probability that you make at least 1 penny in this trade at expiration, 73%. That is so much more effective of a foundation when it comes to what it is that we are trying to do over time, over the long term in our portfolios that it's really, really, really hard to ignore the power of short options. Now, is there more to consider? Like managing that undefined risk and controlling your position size to defend against outlier moves. Like knowing when to enter a short options position and when to exit a short options position. Not to mention all the things you'll need to do or want to do along the way over the life of the trade. Yes, I mean, there's all that and then some. And that's why I would encourage you, in addition to this crash course, lean on all the other resources that are already available to you. I mean, you've got the tastylive live show, you've got the tastylive archives, hey, you've even got the YouTube channel, including, shameless plug, a bunch of other crash courses that are already on the channel, done by yours truly. But when it comes to option returns specifically, and consistency and sustainability with those option returns, you have to be ready to make that 180-degree turn right now. Start focusing your energies on the short side of the option contract. Now, that being said, even if being on the short side of the option contract, selling options allows us to mitigate our directional risks and our directional exposure in the marketplace, we can't eliminate that directional exposure, which conveniently leads us right into the second episode of this crash course, where we are going to talk about delta and how delta impacts your option returns. And that second episode starts right now. Hey, Jim Schultz back with you guys inside of the option returns crash course. And we just learned, we were just challenged to move away from the long side of the option contract and embrace the short side of the option contract. Doing that leads to higher probabilities and more ways to win. But in addition to that, it also allows you to minimize your directional exposure by holding smaller delta positions. So you can significantly reduce your delta, which essentially allows you to significantly reduce your reliance on market direction with short option positions. However, for a single position, you can't eliminate delta completely. In fact, before we dissect delta and show you how it impacts your option returns, that brings me to the second piece of the option return puzzle. Day to day, delta is going to be the biggest factor impacting your returns. Now, this is not a guarantee. This is not necessarily going to happen every single day. There will certainly be days when other metrics in the return equation step up to the plate and steal the spotlight from delta. That will happen. But by and large, on average, you should expect delta to be the captain of the ship, so to speak, when it comes to the option returns that you're going for and the P&L on a given position day to day. All right, so now let's turn to how delta specifically impacts your option returns. And to do this, we can actually begin with a more or less textbook definition of delta. Delta measures how an option price will move when the underlying stock in the option moves. Even more specifically, delta measures how the option price will move when the underlying stock moves by $1. And to really better understand how all this works, let's take a look at a few examples. So for example, let's say you have an option on McDonald's that has a delta of 30. That means that for every $1 move in McDonald's, that option position will move by 30 cents per share or $30 in total, since the contract, every option contract, is always for 100 shares. Or let's say you have an option on Microsoft that has a delta of 50. That means that for every $1 move in Microsoft, that option position will move by 50 cents per share, or $50 in total for the contract. And lastly, let's say you have an option on Tesla that has a delta of 95. Here that means that for every $1 move in Tesla, that option will move by 95 cents per share. So almost the same as the stock itself, and $95 in total for the whole contract. And picking up right where that last example left off, deltas always range from 0 to 100. Now, they can be positive and they can be negative. We're going to talk about that in just a couple of minutes. But for right now, just think 0 to 100. If an option delta is 0, that would literally mean the option price will not move when the stock moves. This can only happen at expiration. Similarly, if an option delta were 100, that would mean that the option would move dollar for dollar with the stock. The stock moves by $1, the option moves by $1. This also can only happen at expiration. Now, there will be plenty of times where option deltas get close to 0, like 3 or 5 or 10, or get close to 100, like 90, 95, 97 before expiration, but at expiration is the only time when you will actually see a true 0 or 100 delta. All right, so now we're beginning to set a foundation for delta and how it's going to impact our option returns. Let's push this a little bit further to better understand bullish delta and bearish delta. So if you're bullish on a stock and you're using options, you will have either a long call or a short put or some complex strategy that features long calls or short puts. With either of these, you will have a positive delta position. This simply means that increases in the underlying stock price are beneficial for you, and here's how that plays out. With a call option, if the stock price increases, then the option price will also increase. That's the general relationship between stock price changes and call option changes. They follow each other. So if you buy a 40 delta call in Apple for $2 to establish a long call and Apple rises by $1, then the option price will rise by 40 cents and now be $2.40, ceteris paribus, or all other things being equal. This helps you, of course, because when you buy options, you want the option price to rise so you can sell it out for more than you paid for it at some point later. With a put option, if the stock price increases, then the option price will actually decrease. This is the general relationship between stock price changes and put option changes. They move against each other. So if you sell a 25 delta put in IBM for $1.75 to establish a short put position, and IBM rises by $1, then the option price will fall by 25 cents and now be $1.50, ceteris paribus. This helps you here because when you sell options, you want the option price to fall so you can buy it back for less than you sold it for. Now, if you're bearish on a stock and you're using options, you will either have a short call or a long put or some complex strategy that features short calls or long puts. With either of these, you will have a negative delta position, which simply means that decreases in the underlying stock price are beneficial for you. And here's what that looks like, where the same call option and put option relationships hold true. Stock price decreases would decrease call option prices, and stock price decreases would increase put option prices. So if you sell a 30 delta call in IWM for $3 for your short call, and IWM decreases by $1, then the option price will fall by 30 cents to $2.70, ceteris paribus. This helps you because you can now buy back the call that you sold for less than you sold it for. If instead you buy a 20 delta put in IWM for $4 for your long put and IWM decreases by $1, then the option price will increase by 20 cents to $4.20, ceteris paribus. And again, this helps you because you can now sell out your put for more than you paid for it on trade entry. And of course, the opposite to all of this is also true. If you're bullish and the stock goes down, that's going to hurt your option position. And if you're bearish and the stock goes up, that's going to hurt your option position too. All right, so that's a nuts and bolts, stripped down to the chrome run through of how delta works in isolation. Of course, in real time, there's always a ton of other things that are impacting your option position. It's not just delta. But from a purely delta standpoint, as we begin to build up our foundation of understanding option returns, this is how delta works when it comes to dollar for dollar movements in the underlying stock. Now, over the life of a position, which might last days, it might last weeks, it might last months, the delta effects are going to be cumulative over time. Here's what I mean. Suppose we sold a put in Amazon for $2.50 that has a delta of 30. Now, over time, delta itself isn't static, it is dynamic, and it will move and change as market conditions move and change. But for the purposes of this illustration, let's just assume that this position's delta stays at 30 over time. Let's say on the first day, Amazon rises by $1. This is good for us because a short put is a bullish position, and at a delta of 30, we know that the option price will fall by 30 cents and it will now be $2.20. But let's say on the second day, Amazon falls by $2. This is not good for us and will cause the option price to increase by 60 cents. So it's now at $2.80 and we currently have a loss on the position. On the third day, let's say Amazon rises by $1.50, so the delta impact will be negative 45 cents, bringing the option price down to $2.35. And on the fourth day, let's say Amazon rises another $2.50, yielding a delta impact of negative 75 cents, which brings the option price all the way down to $1.60, so a comfortable profit at this point. Okay, another example. Let's suppose we sold a call in TLT for $3 that has a delta of 40. And again, we'll assume that it stays at 40. First day, TLT rises by 50 cents, which is not good for us because we're bearish on TLT with this short call. The delta impact will be plus 20 cents, bringing the call price up to $3.20. Second day, TLT rises again by $1.50, which has a delta effect of plus 60 cents, bringing the option price up to $3.80, so an even bigger loss at this point. Third day, TLT drops, so giving us a little bit of relief, but only by 25 cents, which only has a delta effect of minus 10 cents, so the option price now is $3.70. And on the fourth day, let's say TLT rises by another $2, which will have a delta effect of 80 cents. So now the option price is $4.50. So a pretty significant loser at this point. Now, with these two examples, the most important takeaway is to see how the delta effects are indeed cumulative and they add up over time. And just as we referenced with our second puzzle piece, hopefully now you can see just how impactful delta can be on a daily basis from pretty modest moves in the underlying stocks. Sure, we had one winner and one loser in these two examples, but the stock could have just as easily chopped around over time, essentially yielding no delta effect in the end. A situation and a phenomenon that you might think is pretty uncommon, but it actually happens more regularly than you might think. Which actually ends up being the perfect segue, it's almost like this is all planned, into episode number 3 on theta, which starts right now. Hey, Jim Schultz back with you guys for the option returns crash course. So far, we've moved away from long options and we've dissected how delta impacts option returns. It's now time to reveal the third piece to the option return puzzle. Time decay is your most reliable profit driver. And that is where another option Greek comes into play, theta. With delta, we saw that how much delta the option position carries is clearly going to impact the P&L as the underlying stock moves around. With higher deltas leading to bigger P&L swings and lower deltas leading to smaller P&L swings. Well, here with theta, just how impactful time might be to our P&L is going to be directly related to how much theta we have on that position. And this is simply because that is precisely what theta measures. How much does an option price change when time passes? Usually viewed in daily increments. Now, whether you choose to buy the option, play the long side, or sell the option, play the short side, plays a big role in determining how theta is going to impact your P&L. Let's take a look. Simply put, option prices only have two components, intrinsic value and extrinsic value. The intrinsic value measures the inherent worth of the option. Like, is it giving the long side any additional benefit for having it? And the extrinsic value measures essentially everything else, like time premium, volatility premium, interest rates, etc. Well, at expiration, the value of the option will collapse down to its intrinsic value only. This is because when the option expires, there is no time left for any of those other factors like time, volatility, and the like to impact the option price. So in other words, at expiration, the extrinsic value of an option has to be 0. Well, this conclusion directly impacts option buyers and option sellers. When you buy an option, you are paying for this extrinsic value. You are paying for this because it is essentially what is giving you the chance to land a big score. More time or volatility are good for you as the option buyer. Well, if this extrinsic value decreases over time, which it does, all other things being equal, that is bad for you. And that simply means the passage of time is working against you. Hence, this is why long option positions have negative theta. Conversely, when you sell an option, you are collecting extrinsic value. You collect this because it is part of the credit that you pick up on order entry, and it serves as compensation for absorbing the risk that the stock will move against you. But again, this extrinsic value will decrease over time, which is good for you, so you have the passage of time working for you. Hence, this is why short options have positive theta. Now, admittedly, I kind of glossed over the components to option pricing, intrinsic value, extrinsic value. Well, the reason why I did that is because if you want to take a deeper dive on option pricing specifically, there's already a crash course on the YouTube channel. It's already out there, it's already ready for you, so I would encourage you to give that guy a look. But as you can see here with option returns specifically, having the passage of time working for you is uniquely beneficial. And to push this point a little bit further, by selling options and creating positive theta, this is what increases the probability of profit on these positions, as we've already seen with that Apple example. You can make money without being directionally right at all because you have the power of time working for you. Similarly, this is what decreases the probability of profit on long option positions. You have this headwind that you have to overcome. You have the negative theta. You have time working against you. So you have to get the directional move correct to overcome the obstacle that is in your path, that is time working against you. All right, so let's take a look at some profit examples with theta. Suppose you sold a put with a theta of $4. Again, remember, there are always a million other things impacting an option price. But if we just isolate theta to add to our foundation, that simply means that the extrinsic value will drop by $4 per day for the entire contract, ceteris paribus. This is 4 cents per share to match the option quote that is always given on a per share basis. But remember, every option contract is for 100 shares. So 4 cents a share, but $4 for the whole contract. So if you sold the option for $2 to begin with, or $200 for the whole contract, and it was completely out of the money, so its price is only extrinsic value, that means after the first day, the price will fall to $1.96. After the second day, it will fall to $1.92. After the third day, it will fall to $1.88, and so on. Again, we're keeping theta fixed over time, even though it is indeed dynamic, just to simplify our efforts a bit. Similarly, suppose you sold a call for $6 that has a theta of 5. Here, after the first day, the price will be $5.95. After the second day, the price will be $5.90. After the third day, the price will be $5.85, ceteris paribus, and so on and so forth. Okay, so that gives us a start to understanding how theta is impacting our option returns. But remember, theta will be working in concert with other things, like delta. So let's now combine what we learned from delta with what we just learned from theta and put these two together. Using our delta example from before, let's say we sell a put in Amazon for $2.50 that has a delta of 30, but now also has a theta of 4. Using the same stock moves from the earlier delta example, let's combine delta and theta together. The first day, Amazon rises by $1 and the extrinsic value falls by 4 cents per share from theta. This means the option price will fall 30 cents from the delta effect and 4 cents from the theta effect, yielding an option price of $2.16. The second day, Amazon falls by $2, which again is not good because a short put is a bullish position with positive delta. But again, the extrinsic value falls by another 4 cents from theta. So the option price increases by 60 cents from the delta effect, but it decreases by 4 cents from the theta effect for a net result of plus 56 cents, bringing the option price up to $2.72. Then on the third day, Amazon rises by $1.50 and the extrinsic value falls by another 4 cents from theta. So here, the delta effect is minus 45 cents and the theta effect is minus 4 cents for a net change of minus 49 cents, bringing the option price down to $2.23. So here, you can see how delta and theta are working together over time to impact the option price and thus your returns. Now again, on a day-to-day basis, delta is going to be the star of the show. It is going to cause bigger swings in P&L. But over time, as a premium seller on the short side of the option contract, time decay is going to be a far more reliable profit driver when it comes to your option returns. Because again, remember, the delta effects are cumulative and they will oftentimes cancel out as the stocks go up and the stocks go down and they essentially don't go anywhere. Well, the theta effects are always cumulative too. And so they're adding up over time. It may only be 4 cents a day or 5 cents a day or whatever, but over time, over the course of a couple of days, a couple of weeks, a couple of months, a couple of quarters, a couple of years, these can be really, really significant drivers to your total returns. All right, so delta has an impact on P&L. Theta has an impact on P&L. There is one more factor that also has a significant impact on your P&L, and that is going to be vega and volatility. And that's the next episode that's going to start right now. Hey, Jim Schultz back with you guys for the Option Returns Crash Course. It is now time to reveal the fourth piece to the Option Returns puzzle. With the first piece, we know not to buy options, we know to sell options instead. With the second piece, we know that delta is going to be the biggest impact on our options P&L on a day-to-day basis. With the third piece, we know that time decay is actually going to be the most reliable factor to our option returns over time. Well, here with the fourth piece, here is what we want to understand. Play for volatility contraction. Why is that? Well, before we answer that question, let's back up and understand how volatility impacts option positions and option prices to begin with. So just like delta shows you how option prices change when the underlying stock price changes, and theta shows you how option prices change when the passage of time changes, vega shows you how option prices change when the implied volatility of the stock changes. Specifically, vega measures how the option price will change when the implied volatility changes by 1 point. So if an option had a vega of 5, for example, that would mean that for every 1 point change in implied volatility for that underlying stock, the option price is going to move by 5 cents per share or $5 for the whole contract. If the option had a vega of 12, now every point in implied volatility that changes is going to be worth 12 cents per share on the option price or $12 for the whole contract. Now, just like we saw with both delta and theta, you're going to have positive vega and you're going to have negative vega. So let's dive a little deeper into this idea. Simply put, if an option has positive vega, that means increases in implied volatility help and decreases in implied volatility hurt. If an option has negative vega, that means increases in implied volatility hurt and decreases in implied volatility help. And when it comes to options, the following is always true. Long options have positive vega and short options have negative vega. A call or a put, it doesn't matter. When you buy options, increases in implied volatility always help you because that increases the option price. So you are positive Vega when you buy options. When you sell options, decreases in implied volatility always help you because that decreases the option price. So you are negative Vega when you sell options. So how would that impact option prices specifically? Well, let's suppose you were looking at a put option in Disney selling for $3 with a Vega of 8. Furthermore, let's say Disney has an implied volatility of 30%. Let's say implied volatility suddenly rose by 1 to 31%. That would mean that this option would rise by 8 cents and now be selling for $3.08. This would help anyone who bought this put because the option price is rising, always what option buyers want, and hurt anyone who sold this put because option sellers want option prices to fall, not rise. Or let's say instead that implied volatility had suddenly dropped by 2. That would mean that this option would have fallen 16 cents and now be selling for $2.84. This would help anyone who sold this put, again because they want the option price to fall, and hurt anyone who bought this put because they want the option price to rise. And that is how changes to implied volatility impact the option price and begin to impact your option returns. All right. So what I want to do now is let's build a cumulative case using delta, theta, and vega. Let's dive in. Sticking with the same Amazon example that we've been using, you sell a 30 delta put for $2.50 that has a theta of 4. Let's now also add that it has a vega of 10 and the stock's implied volatility is 50. Again, for simplicity, we'll assume that delta, theta, and vega all remain constant over time. So the first day that Amazon rises by $1, let's say its implied volatility also drops from 50 to 48. So here you have a delta effect of minus 30 cents, a theta effect of minus 4 cents, and a vega effect of minus 20 cents. 10 cents per point, and the IV dropped by 2 points. So the new option price would be $1.96. $2.50 minus the 54 cents from delta, theta, and vega. Okay, the second day, Amazon falls by $2. Let's say its implied volatility rises from 48 to 51. So here you have a delta effect of plus 60 cents, a theta effect of minus 4 cents, and a vega effect of plus 30 cents for a net change of plus 86 cents, bringing the option price up to $2.82. On the third and final day in this example, Amazon rises by $1.50. Let's say its implied volatility falls from 51 to 47. So here you have a delta effect of minus 45 cents, a theta effect of minus 4 cents, and a vega effect of minus 40 cents for a net change of minus 89 cents. This brings the option price down to $1.93, which would mean that your profit on the position would be $2.50 minus $1.93 for 57 cents per share or $57 per contract. Okay, so my hope is that you can now see how delta, theta, and vega, direction, time, and volatility, impact option prices and in turn impact the option returns from your positions and your portfolio. Also notice how, again, in these examples, delta was almost always, if not always, the biggest of the three. Now, this is almost always going to be the case. This is what we referenced earlier with that second piece to the option returns puzzle, with delta being the biggest driver on a day-to-day basis. This is not something that you're always going to see, and it will be dependent on what you're actually trading and some other factors in the market, but most of the time, this is what you will observe. Of these three metrics, delta, theta, vega, delta will be the largest and the most impactful on a day-to-day basis. Now, I want to answer the question that we posed after we unveiled this piece to the option return puzzle. Why should we be playing for volatility contraction? Well, the answer is actually very, very simple. Most of the time, market volatility is in a state of contraction. Most of the time, market volatility is very stable and usually going down, like 80+% of the time. So naturally, we want to be positioned to take advantage of that, right? It's very similar to what we saw with positive theta and the passage of time. by selling options, we are positioned to benefit from the natural tendency of volatility to contract in the marketplace. This is because when you sell options, you're negative vega. So you are positioned to take advantage of falling volatility by taking the short side of the option contract. Now, of course, there's a lot more to this, as my seasoned traders out there will know, with implied volatility rank, volatility clustering, binary events, and all sorts of other things. Not to mention, just because volatility usually contracts doesn't mean it's always going to contract. There will be times when you are going to have to manage potentially some pretty hairy positions where volatility is expanding rapidly. But those are all separate discussions for another time. Many discussions we've already had in those other crash courses that I referenced that are already on the YouTube channel. But here, I wanted to stay focused at the task at hand and really build up that foundation for understanding what impacts option returns, specifically from the short side, delta, theta, and vega. All right, so now it's time to get into the final piece of this puzzle, which is going to be, what can I expect from doing all this? Like, Jim, I'm investing all this time, I'm investing all this effort. What types of returns can I expect by selling options and doing them the way that Tasty likes to do them? Well, let's take a look. That's going to be the final episode of the crash course that starts right now. Hey, Jim Schultz back with you guys for episode number 5, the final episode inside of the option returns crash course. So to this point, we've talked about selling options, not buying options. We've talked about delta's impact on option returns. We've talked about theta's impact on option returns. And we've talked about vega's impact on option returns. Now, I want to reveal the final piece to the option return puzzle, and I want to answer arguably the most important question that you probably have when it comes to selling options. What type of annual return can I expect doing this? Now look, if you ask 10 different traders this exact same question, you are going to get 10 different answers. Some of them will be high, some of them will be low, some of them will be realistic, and some of them will be purely imaginary. Not to mention that there are so many different factors that go into determining what a specific individual's potential is going to be when it comes to generating returns. I mean, you've got skill level, you've got experience, you've got account size, you've got schedule, you've got so many different things. So it is a very, very difficult question to answer by and large. But for the final piece of the option return puzzle, I think that an annual return somewhere between 10 to 18% per year is a realistic target for most traders. Now, admittedly, that is almost certainly on the lower end of the spectrum when it comes to what you've likely heard is possible in the world of trading options. And just to be clear, I'm certainly not even going to pretend to be the arbiter of truth when it comes to what your potential returns could be. They could certainly be higher than this. I've seen it done. You could potentially do that. But when it comes to establishing some kind of baseline, some kind of reference point for most traders to wrap their heads around to determine if this is even a worthwhile endeavor, I think a 10 to 18% range is a realistic target for most traders, and here's specifically why I chose that range. So as we've gone through in this course, you have your 3 main profit drivers: delta or direction, theta or time, and vega or volatility. Yes, interest rates and even potentially dividends do impact option prices too, but by and large, it's going to be delta, theta, and vega that really move the needle in the end. Well, taking a closer look at those 3, here is what we have. Direction, as a profit driver, is the least reliable. The market is unpredictable, prices are random, so putting any stock in delta as a profit driver in the short term is a mistake in my view. Yes, markets move higher over time, and over the longer term horizon, that should be factored in. But in the 45-day cycle that we like to trade, it's too random, it's too unpredictable, so direction doesn't factor into my range of returns at all. Volatility as a profit driver is more reliable than direction, given market volatility's tendency to contract over time most of the time, but still, it's very difficult to quantify just how much contracting volatility will add to your returns over the course of weeks, months, and quarters. Not to mention, volatility doesn't always contract. It expands too, and sometimes very rapidly at that. So for this baseline range of annual returns, volatility doesn't factor into my numbers either. But time, as a profit driver, this is the most reliable of the bunch by far. Again, we know that extrinsic values must be zero at expiration, and we know that by selling out of the money premium, we are selling options whose prices are 100% extrinsic value. So from the moment we press review and send on an undefined risk option trade, time is working in our favor. That's incredibly powerful, and thanks to the tastylive research team, it can be quantified. So generally speaking, we like to hold portfolio theta at some percentage of net liquidating value. And the range that we typically target is 0.1% of net lick to 0.5% of net lick. So if we had a $10,000 portfolio, 0.1% would be $10 of portfolio theta, and 0.5% would be $50 of portfolio theta on a daily basis. If we had a $200,000 portfolio, then 0.1% of net lick would be $200 of portfolio theta, and 0.5% of net lick would be $1,000 of portfolio theta on a daily basis. Now, why we might choose one end of the spectrum over the other end of the spectrum is a longer discussion for another time, and you can find a ton of resources around that very question in the tastylive archives and already on the tastylive YouTube channel. But for now, all we need to understand is that the lower end of the spectrum, so 0.1% or 0.2%, is more conservative, and the upper end of the spectrum, so 0.4% or 0.5%, is a lot more aggressive. Therefore, let's say that we held 0.1% of net lick in portfolio theta, and let's suppose that every single one of our trades worked out perfectly. We never took a loser, and everything expired worthless. A very unrealistic outcome, but an important boundary for us to establish here. If that happened, and we assume 360 days per year, which is a typical accounting convention, then our annual returns from theta alone would be 0.1% times 360, or 36% per year. And if we held 0.2% of net lick in portfolio theta, our annual returns would be 0.2% times 360, or 72% per year. Terrific numbers, no doubt, but unreachable and unrealistic. So how do we use this reference point and turn this into something that is more meaningful and is more realistic? Well, this is where the tastylive research team comes into play. The research team has found that when following our trading approach to managing trades and taking into account both the winners and the losers that you can expect when you do so, a reasonable expectation is that you capture 25% of the daily theta that you hold. So that means holding 0.1% of net lick in daily theta could yield a 9% annual return, 25% of 36%. Or holding 0.2% of net lick in daily theta could yield an 18% annual return, 25% of 72%. And that is where my 10 to 18% range comes from. Now again, these numbers are conservative and your mileage may vary, and maybe you feel like delta does require a home in your return equation. Or maybe you feel that volatility actually can be quantified when it comes to taking volatility's tendency to contract and turning that into a tangible return number, especially when you account for waiting for implied volatility ranks to spike before you sell premium. By all means, tinker with this, tweak this, make this your own. I encourage you to do that. But still, If we stick with the 10 to 18% range, the reality is this. If you were able to earn a 15% annual return consistently selling options, then you would be absolutely crushing it. I mean, that would be 5% more than the average annual return on the S&P 500 over the last however many years, and you wouldn't be tied to the market going higher to make money. You wouldn't require the market moving up to generate your returns. You would be able to fully customize your directional bias in your portfolio and still churn out 15% annual returns, a realistic target that I believe most traders with enough skill, experience, and understanding of the markets could achieve. That would be a wildly successful investing career by anyone's calculation. All right, so I can't believe it, but man, we are done. The option returns crash course is now complete. You are finished. And I really cannot thank you guys enough. I am so humbled that so many of you take time out of your day and time out of your schedule to invest in my content. Thank you. I really hope that it brought you some value in the world of options. If I can ever help you guys in any way, please, you can always reach out to me. You can email me, jschultz@tastylive.com, or we can connect on Twitter, X, whatever they call it these days. I am at jschultzf3. I appreciate you guys, and I will see you guys next time.
Looking for market insights you can count on? Check out Option Trades Today, your go-to podcast for timely trading analysis and strategies. New episodes drop every Tuesday and Thursday at noon. Available on YouTube, Tasty Live, or wherever you listen to podcasts. Don't miss out on the trades that matter. Stick with the bat, stay ahead of the market. Watch Option Trades Today.
What's up, everybody? Welcome to the Life Cycle of a Trade, the series where we break down the thought process behind trade entry, trade management, and closing order. In this video, we're going to cover a jade lizard. I'm looking at UAL. UAL trading at about $66 and change. It's had a big move lower. It's kind of bounced back in the last couple weeks here, but still very much at the lows, or at least the recent lows going back to, October, September of last year. I think this is an interesting point to do some naked premium with a jade lizard. So with a jade lizard, the goal is to sell a put and a call spread for enough credit to cover the upside risk of the call spread. So essentially, if the stock were to rally through the call spread, you'd have some sort of leftover premium above the width of the spread. So when we set these trades up, I typically want to go as wide as possible on the call spread and do it for as small a credit, and that's just because a small credit above the width. And that's just because if the stock does rally, the call spread isn't going to go to its full intrinsic value right away. It's still going to hold some extrinsic value. So a wider spread allows this to be a faster moving trade. So I'm going to look here at about a 30 delta put, which puts us at about the 60 strike here. For the call spread, I want to be about $5 wide. You can see this one at 467 is a little bit cheaper in credit than the width of the strikes. When we look at the analysis mode here and pull up the risk profile, you can see I do have a little bit of risk to the upside, 30 some odd cents here. But again, if we do get that move to the upside, and you can see it in this orange chart here, which is our Theo profit potential, it doesn't really hurt me until I get it, unless I hold it into expiration, where if the stock was at 80, this would trade at $5. I have $4.63. It wouldn't be enough to cover that full width. Of course, if it happens prior to expiration, there's going to be some extrinsic value held in this position, so it wouldn't be too bad of a situation. But for our purposes, we're going to try and do this for a little bit over or just about a $5 credit here, just so we can do it. Or maybe we even do this $2.50 wide. I want to collect about $1 on this call spread. or at least 90 cents or so. This one trades at about 90 cents. You could see here, kind of a cheap one. All right, we're going to do this here. We're going to do the 60, 70, 72.5 Jade Lizard here. What this sets us up with is this gives us that Jade Lizard risk profile where we have no risk to the upside. We're selling about 90 cents in premium on this call spread, so we do get a little bit extra boost to the downside in terms of our break even. It's trading for a $4 credit or maybe around that. We'll see if we can get filled around there. $800 in buying power, so a little bit bigger of a position, but not huge for us. Let's try and put this in at 410. We just saw it mark at around 410. So maybe we can get that. Bid-ask spreads are not ideal here. They're a little bit wide, but markets are moving right now, so that's not a shock. All right, so we put it in at 407. We got filled at, we put it in at 405. We got filled at 407, so a little bit of price improvement there. We've had some nice trades in UAL before, so we'll see if this one works out. A Jade Lizard in UAL. Stick around because we're going to be managing this going forward. The stock has had a nice bounce higher. It's trading at 74 and change. If we go and look back at the market snapshots and we go to the underlying last price, you can see we placed this at 66.50-ish, between 66.25 and 66.50. Stock is now trading at 74 and change, so it's had a very, very nice rally. Now, a Jade Lizard is a combination of a short put and a short call spread where you collect enough to cover the width of the call spread. So we had the 72.5 call spread. We did the whole package at $4, so we were naked on the put side. That $4 and change covers this $2.50 call spread width. Now, one of the things we talked about was just the way that spreads move and options move is that, this spread, even though it's $2.50 wide, is not going to trade at $2.50 until at expiration, right? So it's only trading at $1.50 right now, which means that the value of this spread really didn't hurt us all that much. And we can kind of see that when we go and look at this put, right? So this 60 strike put, when we go to view option on chart, we sold this at $3.05. It's now marked at $1.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Going to show you the 5 most
bang. And I promised last week this would be a barn burner, and it has been. A lot to talk about, not enough time to talk about it. I just want to, from time to time, I do say this. I'm so grateful to have this as a platform to speak. I have my own site. A lot of you are on slopeofhope.com. And of course, I have free reign there to share my views. But here on Tasty, which I was like right from the beginning. Before the beginning, I was here all the way through. And not only is there no censorship, there's not even guidance about, hey, Tim, promote this. Hey, Tim, don't talk about that. Hey, Tim, dress this way, etc. Nothing. It's just an open platform. And I say what I think. And we live in a world now which apparently, journalists are getting arrested and people are sued for speaking the truth and so forth. And I am just so grateful to have a place where I can share my largely unvarnished views with you. The only varnishing going on is from me, myself. Because if I just really let it out and said everything I felt, then some of you would leave. But I don't want to do that. But it's pretty close to how I feel. So thank you, Tasty, for existing. And hats off again to the founders of the company, Tom and Scott, for putting that DNA into the organization. That just trust those to speak their mind responsibly and openly, because otherwise, are you going to listen to Jim Cramer all day? What a world that would be, huh? Anyway, lots of motion going on. Red all over the place, which is my favorite color, including precious metals, which, as I mentioned earlier this week, I sold almost all my bullion. Why is that? Because things were getting too crazy. And it's stupid, but like I said, when I got basically a busy signal with my bullion dealer, it's like, that's never happened in 40 years. So anyway, got out, sold all the silver, not to the penny at the top, but $111 in cash per ounce, not bad. Sometime this year it'll be higher, and I'll get back in, I guess. But yeah, this was a crazy, crazy week, and it'll just keep getting crazier. I've got some charts loaded for you, and like I said, this is, again, one thing they could say is you got to fill 5 hours, Tim. I could do it. There's so much to talk about, but we're going to do this as swiftly as I can. We're going to start off with the big earnings event yesterday, which is Apple. Boring. It came out, and this is the largest company on the planet. It is exploding up 0.23% higher. Change the symbol to BFD because this is like a non-event, which I'm glad for. I don't want this thing to go up 20%. So thanks, Apple, for being a complete dud. KLAC is plunging over 15%, which is great because, I'm a semiconductor bear. I'm a hyperscaler bear. Anything to do with the AI infrastructure, I'm utterly earth-signed about. So that's right on. Microsoft continues to bleed. Saw the latest Bill Gates news. Boy, that'll put you off your food. But yeah, we're plunging Microsoft again. Nothing to do with Gates or his activities about 13 years ago. It's just that people are realizing that trees don't grow to the sky, and we haven't had a bear market in 18 years now. It's ridiculous. We are so due for like 30,000 points off the Dow. Give me a good bear market, something really, really. And speaking back to journalism again and free speech, that's what scares me. Because if things really start going south, if the Dow's like quintuple digits lower and there's just wipeouts all over the place, you can guess Brainiac is going to be, God knows, banning short selling, banning puts, arresting anybody bearish. You think it's a joke? It's not. I mean, things are going to get very weird. So at some point, maybe I will behave myself just so I can hang out with my dogs here. This is the sort of terror that we're approaching. But for the moment, I'll tell you the truth. What else? Meta, which, as I said, out of nothing but spite, I shorted yesterday. Spite's working out. This is a nice big red bar on that one. And just it's all flowing to the cubes. The cubes yesterday was a pivotal day yesterday. Because here's the thing. This was the week the bulls should have run away with this thing. The bulls should have just blasted higher. We should be at 50,000 something on the Dow, lifetime highs all over the place, in your face, etc. And they stumbled badly on. They started to kind of get a little stumbly on Wednesday, and then Thursday they just completely blew it. And it was a great day yesterday. It counter trend rallied massively. It pushed way back up higher. But we're approaching right now the lows of Thursday. Long short of this is that the bulls blew it, even with all the advantages they have, which is everything. And so, yeah, if they can screw up this badly with so much support, help them, but he won't. Anyway, what else? So yeah, the cubes have broken down nicely. There's the trend line. We had broken below it. We rallied, and for a day, pushed above it again, and then that barfed all over its lapels. So yesterday we did some more damage to the trend line, and today we've been trading below it all day long. So this was the moment here. The scary part was intraday on Wednesday. Our bullish friends should have just like blasted this thing to kingdom come, but there's only certain levels of preposterous, risible, absurd overvaluation that you can reach before somebody takes profits, right? Those levels were reached. Semiconductors, SMH, because God is kind, it's finally dropping. Yesterday was the lifetime high. And the kinds of stuff that I swore I would never short again because they've been so painful, I still kept shorting. STX, which is finally plunging. MU, which is finally plunging. I almost went insane yesterday and bought ZSL. Boy, that would have been nice, huh? Was it like 60% earlier? But anyway, SMH has reversed down hard. And we're basically, any gains from this week have been laid waste. Okay, well, let's turn away from equities for a sec as they continue to bleed out and turn our attention to precious metals. So, quite the chart. Look at that. Gold is down $431. Lifetime high was yesterday. And it is undoing a couple of weeks of gains because, we've been just green. I don't think today is the end of it. When will gold be a good buy again? I don't know. Give me a break. It only just started falling, a few hours ago. But wave 4, if you will, has more than one day to it. So what is it, baby? So yeah, plungeroonie there. I had bought dust yesterday, made a nice quick fat profit on it, got out. Another mistake. Dust is up 23+% now, exploding higher. So everything's falling. There is no safe place to hide. Remember that ridiculous acronym TINA, there is no alternative. That's when, the government was pushing stocks on people during COVID and so forth, and by going trillions of dollars in debt and forcing equities higher. We've gone from this is no alternative to there's no place to hide, except for like inverse ETFs, but everything's falling. Silver is even worse. Look at that. Weeks of gains, completely destroyed. The $111 in cash I got from my silver is looking real sweet right now because I'd rather have all these pieces of paper than those metal coins clinking around. So that's pretty cool. We've basically returned to where we were way back around Christmas time within just a matter of hours. So, I'm sure there's people out there who couldn't take it anymore and just finally clicked the buy button when we were at like 117, and now they're like, oh my God. So that's spectacular. Absolutely spectacular. What a fun market this is. Just a total kick. ZSL, which I didn't even know existed until a week ago, has blasted higher. You may remember my little anecdote, I think I shared on Monday, which is some poor fella put his entire portfolio into ZSL here. I can only assume he got stopped out and sold it all, on Monday. But the crazy thing is that if he had just said like, no, I'm not selling anything, it'd be like pain. But he actually, and I'm sure this didn't happen, but he would actually be in a profit now. That's how massive this move is. And this is a leveraged fund to keep in mind. So it takes extra big moves to undo that. So this is a rare exception. You can see this is just a triple diamond slope all the way down. And then you get, yesterday was the lifetime low on this at the open. Buying at the open yesterday would have been the trade of the year because it's like doubled since then. So that's ZSL. 4 minutes left. Jiminy Cricket. Here's SIL, which is the silver miners, also collapsing. And then over in more minor metals, PPLT platinum plunging about 17.5%, and my frenemy palladium off about 15%. So a lot of blood out there. Over in crypto land, hey, crypto and precious are finally moving the same direction, right? Down. So Ethereum crumbling away. Bitcoin threatening 80,000 support. You know, I'm sure we'll see a leading 7-digit there sometime soon. Michael Saylor's strategy is catching a bid for some reason. It's up 3.22%. So now it's down only 74% instead of 75%. But the items I mentioned yesterday, lifetime lows. Here's Bullish, BLSH, which is down about 7.5%, and Circle Internet, which is down about 6.5%. So stablecoin king getting wiped out. As I mentioned, I've got, I'm so short I could jump off a nickel. So I've got 34 different short positions and 2 very aggressive long positions, which are also bearish. FNGD and I don't know, something else. I forget the other one. But a few of the just plain old shorts or along the following line. So AMD reversing hard, which I appreciate. This is down almost 7%. ARM, which is just the gift that keeps on giving, down over 3% more. BDN, Brandywine, down just a little, 1/3%, but it's such a nice chart, really is. What else? CoreWeave. I mentioned earlier about my affection for hyperscaling type companies, and I didn't include one here, but another one is OWL, OWL, which I think is a big financing arm behind a lot of these hyperscaling movements, and they're getting just blown to smithereens as well. So that's CoreWeave, which is down over 5%. Crazy-haired Alex Karp's company, down again. This is the guy who blames short sellers for his troubles, and has the affectation of zany hair because he's really smart looking. Oh yeah, James Altucher, he pulls the same thing. My hair's kind of tidy. I don't go for the crazy look. But yeah, old Alex Karp, who took over my office at Profit, by the way, back when I sold the place. They're cracking below this really pretty head and shoulders top, and I'm sure much lower prices are to come. And I say again, this is with the full blessing and support of the Trump administration. Palantir is a buddy of that organization, of that federal government, and the recipient of their largesse. And even so, look at this thing. This thing looks ready to burn. Here's an interesting one, Sophie, SOFI. This gave me a scare this morning because I was short Sophie. It opened strong after earnings. As you can see, you can also see that it's been selling all day long. Look at this. Look at that open. Way above yesterday's, but plunge-a-rooney down it goes. So that's looking headed also much lower. It's very good when you see a big open with a big gain and a lot of high-fiving and people screaming and shouting how great life is, and then just falls to pieces. I mean, it's like I said yesterday, if something should rise but it falls, sell it. This needs a little adjustment, like so. Doink. Okay, well that's doomed. What else? CarMax, KMX. This one's down about 2%. A couple more here. I know we're getting close to the bottom of the hour here. Monroe, MNRO, also down about 2%. And one last one, SGHC, which is down over 7%. Remember this one, Supergroup? I introduced this one to you right. I was cracking below the head and shoulders. The last chart I've got for you is actually my favorite short right now. And I hope I'm not jinxing it by saying so. But it's old Michael Dell's organization called Dell. I'm crazy about this chart. And I've got more puts on this than I should. And I'm also short the chart itself. But I've got 34 positions. This is my favorite for what it's worth. Okay, well, have a good weekend. I will see you next week on Monday, and we'll see what other mayhem we've got. And of course, remember, next week we've got Amazon, and we've got some other giant multi-trillion-dollar company whose name escapes me, but I'm sure it's very important. We'll get there. So I hope you're doing well. I'll see you here on Monday. Bye-bye.
Looking for market insights you can count on? Check out Option Trades Today, your go-to podcast for timely trading analysis and strategies. New episodes drop every Tuesday and Thursday at noon. Available on YouTube, Tasty Live, or wherever you listen to podcasts. Don't miss out on the trades that matter. Stick with the bat, stay ahead of the market. Watch option trades today.
Trade size varies between traders. In a larger sized account, a trader might trade 10 contracts per transaction. In a smaller sized account, a trader might only trade 1 contract per transaction. The term tranche allows us to quantify and size to a common denominator. 1 tranche would represent normal trading quantity. 2 tranches would represent 2 times the normal quantity, signifying a larger trade size. Of course, trade sizing is immensely important. We recommend a tranche being far less than your max exposure.
Putting on strategies, that's easy. Taking off strategies, that's also pretty easy. But what do you do with everything in between? Well, in our Options Crash Course Strategy Series, we're going to show you how to handle the winners. We're going to show you how to handle the losers. But most importantly, we're going to show you how to handle everything in between with simple and clear guidelines and reference points. We'll see you guys there.
Tasty Trade has crypto, and you can trade with 0 commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm, listen up, y'all, get out the damn stall. It's the last call, hey, the last call, the last call, the last call.
Oh yeah, we're back. It's still Friday, January 30th, 2025, 2026. How did I screw that up? Time zone problem. I'm back in New York.
Must be looking at that silver quote too hard.
It might be. The nuking of the metals today is point goes to you, I suppose, in terms of who got that one right.
I'm not mad at my shorts that I had to run away from my gold longs this morning, so I don't let my my prior wins turn into something that they weren't supposed to turn into. I'm happy to say I escaped.
Have turned.
Have you?
But no, they have not. They're not good. No.
No. I mean, I gave away about 1% of my gold gains and said, you know what? That's all the gold gains I'm gonna be willing to give away. I'm gonna keep my P&L. Thank you very much. So I ran away from that. But I'm still sitting on these silver shorts that I doubled down on with you yesterday. So see how it goes.
We're all having fun here. We're all having a lot of fun, except for the people who've been long gold and silver and the metals. Copper's down the least, and I suppose, Josh, we can go right to the charts. Copper's down the least here today. That's not my chart.
That's not your charts. Those are my charts. But I suppose we can look at them.
Looks like you're running the show here, then.
You keep talking, though.
All right. Well, then.
There we go.
All right. So what happened today? I mean, the catalyst, it appears, overnight was Kevin Warsh.
one Kevin of Warsh bests another Kevin of Hassett.
Yes, and in doing so, the market thinks that Fed independence is all of a sudden safe once more.
I mean, it's not a bad assumption.
It's not a bad assumption.
Relatively speaking. I mean, given the options.
I have 2 problems with it. I'm going to get the obvious one out of the way first. He's the son-in-law of one of Trump's biggest donors. So there's that.
I mean, there is that.
There's also the actual problem. There's a real problem.
Mrs. Louder did put $5 million into MAGA Inc.
Yeah.
Does this have anything to do with it? Who knows?
So how independent then is the pick? But the issue that I have is that we have access to the transcripts from the global financial crisis.
Yes.
We can see what Fed policymakers were thinking in 2007 and 2008.
Right.
There is a single person who was the most wrong about everything and was reading the tea leaves the worst. And that was the next nominee for Fed chair, Kevin Warsh.
There is that.
He was screaming about inflation being the top line issue. He was hesitant to cut rates. He was downplaying the scope and scale of the mortgage crisis. He got it all wrong.
In fairness, he then found religion.
Did he? Yeah, did he? And then he seemed to find a different religion come November 2016, just as he seemed to find new religion come November 2024, which I point out because earlier he was talking about how it was ridiculous that the Fed was cutting rates leading into the election. And when Trump was elected, he was coming out saying the Fed needed to cut rates even more aggressively in line with Trump's views. So I have my own personal issues with the pick.
All of those assessments are completely factual. They're not opinions. They are points of record.
They're points of record. And I appreciate you noting that. I'm not trying to be opinionated. I'm just looking at the facts.
No, those are points of record, clearly.
But it's enough, Ilya. It's enough here to break the back of silver, which just 2 days ago saw a CME margin hike.
Yeah.
It's the worst day in history for silver, which is something that I didn't think would be rolling off my tongue, nor did I think my visit to Chicago would be top ticking.
I'm going to be telling my kids that I sold the top of the worst sell-off in silver's history for years to come.
Interesting place where it finds some support today, though, right? Because we know that the driver here for silver has, at least in my view, and if you look around the macro world, it seems the consensus has formed around Chinese households stockpiling silver. There's a lot of retail demand right now coming out of Asia. All right. That hasn't changed. The Chinese government importing and hoarding all of the metals, that hasn't changed either.
Right.
But clearly there's something here with the margins going up and this expectation of an independent Fed moving forward. That is enough for a lot of over-levered hands to cascade and break. But we find some support here today, Ilya.
We do.
As we have retraced more than half of the move from the November 21st low to yesterday's high in a single session. That puts us down right at the swing low from January 8th, coinciding with our 50-day moving average. So there is there seem to be some technical buyers down here.
Yeah.
First and foremost.
Yeah.
Are you bottom picking it now that you've caught a $40 move to the downside?
Not silver. I got shaken out of my gold position because the losses were starting to get a little hairy. As you know, I was in the GCG contract and had just a swimming run in it. And then it came up to just a couple days to rolling over the contract. So I rolled into the J, and obviously that has gone differently. So once I hit just around 1% give back of the prior trade's P&L, I said, I'm not giving away any more P&L. No, thank you. And so I got out. I did not short. I know my rule for this year, as it always is, but I've been looser with it than I wanted to be this year, was if your trade is wrong, the opposite is right. And what that is it's a call not just to close positions, but to flip them. Because the market volatility here, the back and forth, the knee-jerk reactions to things have been so violent that it's been the right thing to do. If you have a good level where you say, okay, at this level, I'm wrong, that's been a good trigger, not just to get out, but to go the other way. I did not do that here. I'm happy with my silver exposure for now. Let's let it see what it does. I'm not selling gold. I'm looking for gold to find some level of bottom here. I'm looking to be a buyer again. I have a hard time envisioning that Kevin Warsh may be becoming the next Fed chair. And I say maybe because Tom Tillis may have something to say about that.
She did today.
He sure did. He also made it very clear, just as a quick aside, not to get overly distracted, but he said it a little bit differently today. Before, he said that what he wanted to happen was to have the investigation into Powell concluded before he could approve the next Fed chair. Today he said, well, if you stop the investigation, I guess I'll let this nomination through. And
yeah, effectively.
Yeah. Well, I mean, he used the words. He said, if this investigation is stopped, I think Kevin Warsh is qualified. And he is qualified. whatever you think of his judgment, he is qualified. He knows
he has the qualifications.
He knows the
sure.
levers. He knows what he's doing. Now, whether his decisions about what to do are right or wrong, we'll see. But he certainly knows how to make those decisions and how to pull the levers that then need to be pulled for those decisions to actually be realized. So if we get a situation here where the investigation is canceled, great. That's a good thing for Fed independence. Deputy White House spokesperson Kush Desai said today, we're looking after the Tillis comments. We're looking forward to getting the Fed chair approved quickly, which means maybe the White House is going to drop this thing. Maybe they're going to go to Pam Bondi over there at the BOJ and go, set him down. This is over. Call off the dogs. And so maybe that's what we're going to see. And that would be good for Fed independence in the sense that you would at the very least take this ridiculous and frivolous thing and put it to bed and get back to something that looks more like independent policy making. I'm also encouraged by the fact that both Warsh and Bessent are Stan Druckenmiller acolytes. That's a good thing.
Who would have thought that the Treasury Secretary and the Fed chair under Trump would both be folks from Soros?
Former Soros, yeah.
Just
amazing. In the Republican administration.
Make it up.
It's amazing. But I do have a lot of confidence in Stan's judgment. Stan Druckenmiller's judgment is, I think, beyond reproach in most instances.
We reference him all the time.
Yeah, in
He's
most
one of the people
instances.
that
And so
informs our trading style around here.
yeah, and Kevin Warsh has been working at his Duquesne family office since leaving the Fed. So I think I give a lot of credit to Stan Druckenmiller's judgment. So this is probably a good thing that the pedigree for both of them is that. I think Bessent has been easily the saner of the economic policymakers in this Trump 2.0 version. I certainly don't have the same things to say about our Commerce Secretary or about Kevin Hassett or about Stephen Meehan.
Didn't Bessent punch Elon Musk in the face or something?
Extra points.
Several months.
Extra points.
Okay, fair play.
So not because I would advocate the punching of Elon Musk in the face. Certainly not at all. I just you gotta give certain level of conviction points for that kind of commitment to policy. And so I look at this as, given the options, I would have felt similarly, for example, about a Chris Waller, who knows the machinery, who's a Fed insider, who understands how the sausage is made. I like that as well. It would have been very disheartening if it was a Kevin Hassett situation.
Yeah, don't you think it's a little odd that when you look at the commentary today regarding Warsh, I'm not seeing. Maybe I am, but it feels like the commentary is focused on his views on inflation from 16 years ago. Can we at least give the guy some credit that he's allowed to change his mind over time?
I mean, these are Fed policymakers. It would be absolutely awful if they didn't change their mind.
Yeah. So
just as silly it is to be a perma bull or a perma bear, it is silly to be a perma hawk or a perma dove. Everybody always gave Janet Yellen guff for being a perma dove, except during her time at the Fed when Greenspan was chair, she was one of the loudest hawks. So you want to be a flexible viewer of monetary policy just as well as you want to be a flexible viewer of financial markets. Conditions change. You have to be open-minded.
I thought our producer Josh brought up a great point. Not only has gold bounced from its 21-day moving average, the 1 month, and silver bouncing from the 50, that these are even the levels for those moving averages is kind of insane.
Yeah.
And it speaks to how the velocity of this move and how quickly, just the last week has been, how many times have we drawn a trend line where, the aggressive one, the even more aggressive one, once they break, it breaks hard. This has not been a good day for me, as people may surmise, given my shtick and positioning, more importantly, around here. It's wiped out probably 2/3. I got to check again later, but like 2/3 of my year-to-date gains, which I'm not terribly upset about, considering silver's down 28%. And if I hadn't made those adjustments last week on Friday, when it ticked up through 99 into 100, today would have been awful.
Yeah.
So, and you and I were having a conversation yesterday about how I've stupid proved some things in my own personal life.
Listen, sometimes you got to do it. Sometimes you got to do it.
And after last Friday, I stupid proved some things where I closed out the majority of my silver. So today would have been a lot worse had I not done that. So I'm grateful for that. But the things I'm floating right now are definitely eating against me. Oh, the fact that Josh brought up the 1 month and the 50-day. My silver positioning is still 50 odd days to expiration. I don't think we're getting back to 117. So any semblance of a bounce, I'll use it to get out. Got it here on the follow account.
Yeah.
Gold, though, still in the money on one of the call spreads. The other, the 55,000, 5,100.
Mm-hmm.
That's still 87 DTE. I'm holding on to that. So I don't see myself in any bit of a panic position. Same thing for copper here. Today sucks watching paper gains go away. But again, copper's chart, that's a nice little bounce off of the trend line from the November lows. It's not, we got back inside the consolidation to go to the other side of the triangle. We did, and we bounced from there. So today's a gut punch. It's the worst day on record for silver futures, for the silver ETS, SLV. Go find me, there may be a worse day out there for gold. There aren't many.
You know what, though? That the daily candle on copper today, if you looked into technical analysis textbook, you looked up bearish engulfing.
Yeah.
That's what that looks like. Copper technical analysis, beware. This is not a clean This is not a clean instrument as far as technical analysis goes.
No, in particular, especially since last summer when it was really just screwed with by the tariffs briefly in July. A lot of that messed up a lot of things here. But I do want to get away from gold and silver, even though these are the biggest things that are moving. These are the most important things that are moving.
Yeah.
Hopefully for folks who are out there on the long side, we're able to get out quickly. Hopefully it didn't eat into too many gains. For me, I'm looking at this like the last position put on. It was risking 1 to make 2. That is going to eat into half the gains of the previous winner. So if it goes out at max loss, I'm okay with that. That's why these trades are structured but that's why these trades are structured in such a manner where it's like I'm making $2 and I'm putting $1 in to make another 2, and like at worst I'm losing 50 cents. So it's like you got to just be okay with some things. This is why we structure things the way we do, and we use the long duration when trading these instruments so that we're a little bit more insulated should
You're absolutely
day
right.
like this happen.
You're absolutely right. This is why, 6-9 months now we've been banging our fists on the table about risk reward. Mind your risk reward. You have to structure good risk reward. You can be right 1,000 times over, and if you get the risk reward wrong, you're going to get hosed.
Yes. So where does we go from here? I don't know, Ilya. It's a 92 IVR in gold, and we're bouncing at the 50-day. If at the start of the year you told me that we'd be at $4,900 an ounce by the end of the month, I'd say, well, we're starting the year near $4,400 an ounce. That's a hell of a month for gold.
Like I said, I had a great run on the long side. This was definitely a little backslap across the cheek here today that woke me up, and I said, whoa, okay. I'm not willing to give up more than 1% of these gains. I'll see you later. But I do want to get back in. I do like the long-term narrative. The siloing of the U.S. and China from each other is not going away. Deglobalization and therefore demand for non-sovereign value, that's not going away. the gold story is not a flash in the pans story. And that's why I stayed long gold, even as I was betting against silver. Silver looked like speculative froth. And that's not to say that silver isn't the same story as gold. It's just, it's less liquid, it's more jumpy. It looked like its rally was a catch-up rally. If you look at the gold-silver ratio, today it finally adjusts a tiny bit after having a crazy run in one direction. And so silver and gold are different animals for me here. Like, I'm fine keeping these put verticals in silver. I do not want to get on the short side of gold.
I'm with you there. That makes me feel better about things only marginally. We take a look at stocks here today. The NASDAQ is our leader, one of the leaders to the downside with the Russell here down 1.42%. That head and shoulders taking a little bit more shape as we start to teeter against that high we had in December, roughly speaking, 26.25. So a little bit more there. You can see how the concerns over, Warsh is hawkish when you look at his long-term comments.
Yeah.
So if you're worried about the Fed giving you too many cuts because the president wants cuts, the market's saying, oh, no, you're not going to, that's not who this guy is. I would specifically look at some of the things he said right before the past two elections and then what he said immediately after the elections to show how he's been a little bit flexible in taking whatever position is amenable for Trump. So that's one of the reasons why, Ilya, I'm looking at bonds here today. If this was the great inflation fighter, the guy who's not going to give into cuts, if this was an allocation away from the metals in such a manner where people were shifting into other assets because of the Fed independence being here now, I don't think we'd be seeing bonds down like this today. It's a 15, 16 IVR in the bonds. In the notes, it's a little bit higher at 21. Do you think this is, I'm looking at the market reaction here. If you're concerned about Fed independence, do equity traders even care about that?
About Fed independence? Of course they care about Fed independence.
Are we sure? It seems like they're really upset that we're getting a guy who has a long history of not delivering cuts or speaking highly of inflation risks.
Well, so I think the question really is, do they care about Fed independence, or do they think that the threat to Fed independence wasn't really a meaningful threat and that's not what you move on? Because I think if you look across markets today, the higher you go on the maturity spectrum as far as rates, and you can start at SR3Z6, and there you get a little uptick in rates, right, by the end of this year. But when you do the math here, right, what are we actually looking at? 100 minus the 96.82 is what? 2 cuts? Almost?
318.5. Yeah, 317.5.
Right?
Fed funds rate.
317.5. Has anything changed?
No.
Fed funds futures had 2 cuts before the Fed this week, after the Fed, after Warsh. What has changed? Now let's go up the maturity spectrum. Let's go to the polar opposite side, ZB, the long bond. Has it actually gone anywhere? No.
That's good today.
No. And so does anybody actually think that this thing has any implications, at least today, for the path of monetary policy? Apparently not. Now, there's an interesting dynamic here. So the president, in order to get Warsh on the board, needs one of 2 things to happen. I mean, Stephen Miran's spot expires. He's been re-upped, but his spot expires. And if Stephen Miran's basically a placeholder, then the president could recall him back to the White House at any point. His job is on hold over there, which is already just fascinatingly bad for Fed independence. But, okay, Stephen Meehan leaves. So you nominate Kevin Warsh into that spot. If Powell doesn't leave, and I think Powell probably is inspired not to leave by the events, maybe he leaves, maybe he doesn't. Maybe this appointment actually makes Powell feel better about leaving. But in any case, Powell's term doesn't expire until 2028. And so how many votes is Kevin Warsh going to get, even if he wants to go full dove? He needs 12 people to deliver him a rate cut majority on the board. So 6 + 1 votes. How crazy would it look if 5 people dissented, if 4 people dissented on a regular basis? It would look like the Feds lost the plot. So it doesn't.
We just had 2 dissenters at the most recent meeting, did we not?
Only 2, though. And one of them was basically a given because Stephen Meehan has never met a rate cut he didn't like. So call that one whatever. And maybe Chris Waller thought he still had a shot. But Chris Waller has been intellectually consistent. You can't fault him. In fact, he put out a comment today, which made a lot of sense. And he said, look, once we get the revisions to NFP numbers out, what we're going to find is that there was 0 payrolls growth in 2025.
Yeah.
And I'm not sure that he's wrong. So that's a real argument for rate cuts. I mean, markets are arguing for rate cuts. The collective wisdom of the market says that they want rate cuts. So it's not like he's out to sea on this. So I think it will be difficult to go any much further beyond 2 dissents under normal circumstances. If all of a sudden the whole board votes to hold and it's Chair Warsh that's the dissenting dove, he can't really do anything.
Ilya, one of the knock-on effects of this perception of a Fed independence or more of an inflation fighter at the helm, the dollar is bouncing a bit here today. I'm back over 97 in DXY. It still hasn't closed the gap that we had after the whole, I guess we're bombing Iran this weekend. What was this week's news, Ilya? It's always something right now in this market.
Well, I'm sure you saw the headline. It's maybe the case that the leadership of Iran is already in Moscow. Although I can't really verify these headlines because they're not coming yet from sources that I would say are definitively beyond reproach.
Nor are they responding to messages to get their attention. So, Ilya, dollar here having a bounce. You know, I don't think the market was selling the dollar because of concerns over Fed independence. That was a weight around the dollar's neck. This has been the de-dollarification, the debasement trade, right? Those aren't changing. So I mean, I don't know how you're approaching the dollar, but I'm
not as a debasement, not as a debasement trade.
I'm looking for the yen here because we already had a nice little bounce off of resistance. We're pulling back in. I want to see how it responds around the 50 in the 1 month. It feels like this could be a really good spot for it to stop falling and to establish another leg of longs looking for something like 68. But Ilya, we're here with the close. The S&P down 0.3%, NASDAQ 1.15%, the Russell 1.4%. It's a terrible day for the metals as we go into the close. Gold off 9.2%. Silver here off 27.4%. It's the worst single day in history. Ilya, we will have much more to talk about on the Sunday open. Keep an eye on oil over the weekend, particularly the CFDs. You can look weekend Wall Street, weekend gold, CFDs from IG, and that will give you a clue as to how the market's responding to any events happening in the Middle East, perhaps.
That's right.
But I will see you, my friend, on First Call, 5:55 Eastern, 4:55 Central, here on Sunday on Tasty Live. Ilya, I hope you had a good week and good seeing you in person this week. To everyone else,
sir.
Thanks for watching. Thanks to the production team. We'll see you in about 48 hours' time.
Have a good weekend, everybody.